All right, good morning. Good morning. Thank you so much for joining us today for day 2 of our mega super large Metastock Traders Conference. All week long, 40 plus speakers, 40 plus presentations, all free, all for you, and you don't want to miss it. So glad that you're here today. Hey, if you haven't yet registered for this event, you can do so very easily. Just I forgot to set up on my computer. Anyway, you can just go to metastock.com, go to the homepage, and right there on the top you'll see Traders Conference, and click on there, and then you can register. And the reason why you might want to register, even though you can watch here on YouTube without registering, is that way you can be eligible to win daily door prizes, which Jeff Gibby will be giving several times away today. Okay. By the way, one of the prizes you can get, well, I told him I'd give him one. My wife made me this lovely cup. See, it says buy. Okay, so kudos to anybody knows what that commodity symbol is. It's a Metastock Reuters icon symbol. Here's a hint. This isn't a whiskey cup. Anyway, my wife made me this, and then at the bottom it says, "This is not a recommendation to buy or sell, just an enjoy." See, it's an inside traders thing. Anyway, that's one of the prizes you could be eligible for. We are Metastock. Perhaps you heard of us, perhaps you haven't heard of us. Either way, I'm going to go ahead and play a short video for you right now that you can enjoy while you're waiting for our main event, which will come up in 7 minutes and 45 seconds.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, thanks so much for watching that brief video. Hey, what was I going to say? Oh, if you do want to register for today's event, you can just go here. I think I've got it. And you are going to be good to go. And also, if you register, a reason you might want to register is you'll be eligible for door prizes that Jeff will be giving away today. One of them, as I mentioned before, is this groovy coffee cup my wife made for me. You can't have this one, it's mine, but you can have one just like it. I think we're just going to give away one, maybe two. I don't know. It depends on how many of these I can talk my wife into making, but they're really cool. So this says buy, and if you're wondering what that symbol emphasizes, it is buy coffee. See, buy coffee. So it's a fun mug my wife made for me. She's into crafting. It's really cool too. It's not like stickers or anything. It's sublimated. It's in there. You can wash this in your dishwasher. It's great. So other things. Hey, make sure that you are really responsive and talk and chat with us today, because we love that. By the way, speaking of chatting and talking, hello Vincenzo, hello Kelly, hello Anton, and that's all I see that's saying hello so far. I see a lot of you are here. Take a moment to just chat in and say hello and let us know where you're listening from, and we'd really appreciate it. We encourage questions, we encourage comments. Just be nice and respectful to our presenters and to your co-watchers. No one likes a meanie. Okay, we have about 1 minute and 48 while we're on the topic of liking things. It'd be great, I'm sure in the right place. It'd be great if you'd like and subscribe for today's event, or YouTube generally. That way you'll see when we have live events coming up. We usually have multi-day events like this about once a quarter. We have hourly 1-hour webinars at least once or twice a week, and then about every month we have a 1-day seminar that has 6 people. But today is super special because it is the day 2 of our 6-day event, 40 plus presenters, 40 plus hours of totally free but totally priceless learning. And I think we're about to start in 1 minute, so I'm going to go ahead and let you listen to some jazzy music while I make sure Jeff's good to go there. Thanks again for joining us, and successful trading. Oh, by the way, don't forget to take our poll as you come on today on YouTube about it's about technical analysis, and right now it looks like the MACD is far ahead in the polls. All right, thanks again.
Good morning, everybody. Good morning, Jose, Raymond, Joseph, Ron, Anton, Vincenzo, everybody joining us from both webinar and YouTube. It is good to see you for day 2. If you are watching us on YouTube, go ahead and hit that like and subscribe if you liked today's copy or content, which I think you're going to. Yesterday, I felt great. So I hope you enjoyed yesterday. I hope you came yesterday. If today's your first day, welcome to your first day. But in any case, let's go ahead and get started. I'm going to read a legal disclaimer. I am going to then thank our sponsors for the event, and then I'm going to throw it over to this handsome gentleman right here, Fausto. So let's go ahead and get started here. Today's demonstration, well, where is my mouse? Today's demonstration is designed to instruct you on using Metastock, the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security. We're not paid to endorse a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy said security. So there you go. Good morning, Mike and Tam. It's good to see you too. As you're coming in, say hi. Tell us where you're from. We'd love to see all that kind of stuff, and it helps. It does help a lot, especially on the YouTube side. So talk to us. If you have questions, ask them. We'll be happy to do our best to answer them. So there you go. I want to say thank you to Stocks and Commodities Magazine. They've been sponsoring our online trader summits and conferences for well over a decade now. We love being partnered with them. You know, they've been publishing since 1982. Have 1.3 million subscribers, and a great sponsor. If you want to learn every month different investment trading related stuff, you can go to traders.com, www.traders.com, sign up, and you'll instantly have access to over 17,000 articles, and you get a physical magazine in the mail. It's awesome. So I want to thank them. They've been very, very supportive of all of our events since we started them, and couldn't thank them enough. Also want to thank CMT Association. You can find out about it, CMT Association, at cmtassociation.org. Hugely reputable, great organization, cmtassociation.org. And finally, AAII. AAII.com is a good place to find out about them. You've heard about the AAII research analysis, the investor sentiment surveys that they do, all of that kind of stuff. They also have a pretty huge division that's focused on active investing. Are you trying to say something, Greg? Oh, okay. I figured it might be that. Of course, we're Metastock. We've been rated #1 in our software price category for 31 years in a row. We're going to talk all kinds of stuff about Metastock again today, like how to scan and find markets, how to trust ideas, all that kind of good stuff. If you want to buy a month, we'll give you a second, third month for free. Cost on that as low as $23 a month for 3 months, or $69 for 3 months, or about $23 a month. You can go to metastock.com/comp-promo. You can give us a call at 800-882-3040. So there you go. Our presenter today, our first presenter, his name is Fausto Pugliese. Fausto's awesome. We've been partnered with Fausto for what seems like a generation now. He's had babies, he's done lots of presentations. We've got lots of stories we could tell, but Fausto's great. He is probably the foremost expert in level 3 data. So Fausto, I'm going to go ahead and kick it over to you. It's your turn. I'm going to get out of your way. Go.
No problem, Jeff. Thanks everybody for coming, and I'm glad to be here. Always, like Jeff said, you know how long it's probably been we've known each other. I would probably say it could be almost 20 years now. And you know what? Great traders always surround themselves with great traders. And what I'm going to talk about is how my hidden strategy to grow your trading portfolio, specifically by following the future, and the future is the orders that are out there. And that's what I want to show you. And I want to just get right into it really quick and just show you a couple of things that are going on. So I don't know, I hope everybody can see my screen right here. So this is what we're going to talk about. Here's a stock that's moving big this morning. On the right-hand side, I have my direct access broker. And on the left-hand side, I have what's called the NASDAQ Book Viewer. I'm going to tell everybody where to get it. I'm actually going to be on their show tomorrow live at the NASDAQ Center where they ring the bell. So at 3 o'clock, I'm kind of, you could say, more of a speaker or more of a, advocate for NASDAQ talking about it. But let me show you what I really want to kind of point out here. Do you know what makes stocks goes up and down, everybody? And I'm going to ask everyone this question because your questions and your answers are going to help you realize that if you know what's going on, not going on. But what drives a stock to go up? Can everyone answer that question? What makes stocks go up? If you can't answer this question, you should probably quit trading. Exactly, buyers and sellers. So what I want to do right here is I want to show you the stock. Right now, SOUN is up about 30%. It had a great little pre-market, actually had good earnings. And you could see how the stock from here on the big trade, how the stock went from $2 all the way to $8 in less than a week. Actually, the past 2 days, it ran up about 100%. Now, you probably wonder, like, how did I miss that stock? How could I have gotten that stock? Well, let me show you what made this stock go up and down. Very important. So I want to kind of fix something here really quick. And I want to see orders, anything above 10,000 shares. Okay. Now, if you notice right here, I'm going to get my little crayons out here. I'm going to draw a couple of lines here. Look what I'm going to show you right here. Oops, wrong color. That is an issue. Color red. There we go. So right here, I want to show you there's about 100,000 shares looking at bought at 7. There's another 140,000 at 6.50. There's 200,000 down here at $6. There's another 200,000 share seller at 8. There's another 200,000, 60 at $10. Now look at the resistance levels here at $8. That is this seller right here. Okay, 6.50. Look where it bounced right here. Why did it bounce there? Because of where's that? He's missing again. I made too many crayons out here. 6.50. Where'd he go? Oh, there he is, right there. So it's this buyer right here at 6.50. That's what makes these stocks go up and go down. How to follow the money. Okay. So I'm going to show you exactly how we do this, how we get that data, so you know exactly what's going on. And what the best part about it is when we get more towards the end, we're going to actually, I'm going to ask you, all of you, you give me a stock that you're trading, and we're going to check it out and see where the orders are and see if you got a game plan where to get in, get out of it. Because that's how you become a good trader. It's not about making money. It's about controlling profits. And most importantly, making sure you know how to get out of positions and controlling those losses. Because winners mean nothing if you don't know where to get in and where to get out. So let me just minimize all this stuff right here. Oops. And let me bring this up. So let's get started really quick. And what we're going to cover is we're going to talk about how to follow the big money, how why it's so important to have these tools to trade today's markets, like using the MetaStock platform and using, the right broker with the right data out there, developing a very good, well-round trading rule, best times to trade, how to also could we apply this to swing trading? Can we apply it to options trading? Yes, we can. We're going to talk about that. We're going to also look at some future trades out there and then so much more. Now, what I'm going to do at the end of the presentation is I'm going to invite every single one of you to come into the trading room. Now, my trading room is right here. I'm going to bring this up so you guys could see it. All right, here's the trading room. And you could see here, we got close to about 200 traders in there right now. These are all the instructors, these are all the traders on the left-hand side. Right now, they're looking at stock got you. So everything that we're going to talk about, I'm going to invite every one of you to come in 1 week in this trading room with a couple of workshops so you can see if we practice what we preach. So I'm going to put that over here and move that back. So, so definitely stick around and make sure you get ready to register. All right. So like I said, we went to the live markets. I showed you what we just had. Now let me talk a little bit about why I'm here, why I've always had such a great relationship with Jeff and all the staff at MetaStock, and why you need to learn how to do this. So This book was, Forbes wrote this out back in 1998, a bunch of kids tormenting Wall Street. Obviously, you can see I'm not a kid anymore. I'm 52 years old, but that is an article that was written up on us. Actually, what was amazing about this photo, and I think Jeff will get a kick out of it, the staff. Look at that monitor. We used to make money on a 15-inch monitor right there. You know, trading is an 80% failure rate. After all these 27-inch monitors, everything, people still fail. We made money then, and not only that, back then we used to pay $20 a trade. Today you get them for free, and people still can't get money. Well, you know, the same technology that we used back then is the same one we still use today, and that's why we're here. We're going to tell, and that's what this article is about, and that's what I'm going to teach all of you. Now, over the years, I've competed. I've done competitions all over the world. I went up against some of the biggest schools, but the thing is this, that doesn't make you money, okay? You know what makes you money is that, can I teach you how to do it yourself? Can my staff teach you? Can Cybertrade University teach me how to do it? Because great traders always surround themselves with great traders. Now, I want to hopefully make you a great trader, but to do that, you got to know how to play the game. And part of the game is knowing, you know, how to follow big orders. Now, also at the end of my presentation, I'm going to give you a copy of my book. It was written by Wiley, the publishing company, one of the biggest ones in the world. And you could pay me $40 at Amazon, but you know what? You stick around, you register. I'm going to give it to you all for free. So you definitely don't want to miss that one too. Great book, fast read, color, awesome. Now, like I just mentioned earlier, I've been featured on some of the biggest shows, news stations all over. I'm actually going to be live tomorrow at the NASDAQ Center again, because, you know, the reason why NASDAQ has me there is because they know what a big failure rate that people here lose money in the market. You have to learn how to play the game. And one of those tools I just showed you before, that's one I showcase, and they're all going to have access to that. Now, I've been doing this for over 30 years. I love teaching people how to make money, but more importantly, I love teaching people stop losing it. And that's why I'm here, because being a good trader, you always feel you want to give back to the community, you know, and you want to be able to kind of show how to trade the right way. And I mean, that's why we have, you know, Jeff has all these great presenters for you and hosting these events. And then hopefully, if everybody's very impressed with what I teach, maybe you could be one of these people, and you could sit side by side, shoulder to shoulder, and hopefully, you know, learn how to trade like everybody else. Now, the last time I was on Metastock, you know, we talked about some of the stocks, and we saw what happened with the market. We had a huge explosion in the market on the S&P, on the NASDAQ, and on the Dow. Now, what caused a lot of this is that it's a lot of the big money. Now, you know what's funny? Like, I'm on these TV shows all the time, and I sit up against some of the smartest people in the world, okay? And I never approach myself, I'm smarter than them. I don't want to be smarter than them. But the funny part is that when you watch these TV shows, they all say the same thing. There's a crash coming, you know, worrying about these CPI numbers, we got an election, everything else. You know what really drives the market? Buyers and sellers. Just like what you said, Raymond, and you, Matthew, and everybody else. That's what it comes down to it. You know what? If the market crashes, great. Let it crash. At least but you know what you're going to learn? You're going to see it crash. If the market's going to go up, great. We're going to see where the market goes up. But to worry about all these other things that these people talk about, a lot of it is like, do you trust them? You don't trust them? I mean, I've seen, and I'm not going to, you know, I'm not in the bashing business, but I sat up against one of the biggest analysts, and he was showing me all these indicators, all these things that were going to happen, and expecting this big crash is going to happen last year. Yeah, how did that work out for him? Okay, because you know why it didn't work out? Because every day something changes. Okay, AI came out. Okay, Fabulous 7 came out. You know, COVID came out. There's always something that will change the market, and we are always at the tip of our seat to make sure that we know what's happening, because we never want to catch that gravy train. Now, the question is this: what do you need to do to be successful in trading? What do you need to do? You need these four tools. Now, I want to ask everybody a question. Can anyone tell me, out of these four windows, how many do you have? 1, 2, 3, 4. Do you have a scanner? Well, if you got Metastock, you definitely have it, because they got one of the best ones in the industry. Do you have a chart? Definitely, because Metastock is built on a great chart system. But do you have level 3 and level 4 quotes, which is what you have to get from the exchange. Now, I didn't know this until, I was using the Metastock platform and other platforms out there, brokerage firms platforms, that, the only way to get that platform is you had to, in my time, you had to get a seat on the exchange. I had to pay $1,000 a month to get that data. Now, for some of you, you'd be like, that sounds like a lot of money, $1,000. Why would I pay $1,000? Well, you know what? Let's not worry about that right now. Because if anyone here is looking for free stuff, you're in the wrong business. You can't make money trading for free. Okay, it just doesn't happen. Nobody works for free. You don't work for free. You didn't get in this room unless you somehow made money and were smart enough to realize, running a business or owning a house. So there are things that you need and there's things that you don't need when it comes to trading. And believe me, I'm the last person to kind of tell anyone to spend money on anything. Listen, I don't want anything for free, but I think we all could agree we just want a good deal. So how do we find these stocks? Let's start off with that. Now, there are 3 T's that we teach in trading. It's called tradable, trend, and track. Those are the 3 important T's that you have to understand. 50% of the people lose money in trading due to the first T. The first T, what that means is that tradable, meaning does the stock have a good spread? Does it have good volatility? Is there any action in the stock? Is the stock moving too fast? Does it have good support and resistance levels? You have to understand something, that there are 20,000 stocks that move every day. Okay, I told you about a stock that was moving before you logged in. SOUN. Stock is up 100% in 2 days. Question is, how many of you been in a stock that was up 100%? Okay, you probably were. Be like, man, I wish I could be able to see that. I wish I could have been in, now. But you're not. And you don't know where they are. But don't worry about it. They're there every day. There's only about 5 to 10 stocks that are very, very active that us traders trade, and every day is a new trading day. So let me tell you how we find them. First place we look at, once again, we use a scanner, okay? Now, the thing is this. Some of you probably neglect this, and I could tell, I know why you probably do, because number one, you say, I never heard of that stock, SOUN. Oh, when I heard about it, but why would I trade it? I mean, why is it up? Like, is it being manipulated? Like, who cares? Who cares? Manipulated, short squeeze, whatever it is. You know what you're here for? Is not to make money, but to stop losing it, okay? Which you probably never heard from anyone in the industry. When I took a job as a trader, they hired me because they already assumed I was going to be good at what I did. I said all the right things. I show up to work on time, everything else. And they paid me for it because they expect me to succeed. Do you know what their biggest concern is? That I was one trade away of blowing up my account. More or less their account. And that's what you have to understand. There are a lot of stocks that you're in today you should not be in. But these are the ones you want to look at that are in the big percentage gainers and losers. Now, in my workshop that I'm going to give all of you, we're going to show you how to scan the market, how to find them. Now, I don't know if anyone here is subscribed to my channel, but I know that we have some YouTube people that are logged in right now. But please go to my YouTube channel, ring the bell, subscribe to the channel, and give us a thumbs up because we're live every morning at 9 a.m. and at 2:30. Okay, so we do a 15-minute broadcast, and we're going to show you what's moving in pre-market and what to trade in the close. So, but on top of that, if you don't want to just be there for free, I'm going to give you access to come there for the whole week. And we'll show you how we scan the market and how we find these stocks, which one is going to give you the least amount of risk with the high amount of reward. Now, let's talk about some stocks that we traded last week, okay? So earnings session came out. We're starting to come down to the lower parts of the action. We already had a lot of the big ones that already came out last week, the Fabulous Sevens, but there's still a couple of good ones, that are coming out. And some of them actually did pretty well. I mean, Norwegian Cruise Line came out this morning, did really well. Kava has been doing pretty well, but that's going to come up after the close. So we're going to see how that one works out. But there are still a couple of good ones that are moving. Now, let's start off with NVIDIA, okay? Now, NVIDIA, listen, is part of the fabulous 7 stocks. And NVIDIA had a huge pop last week. Tremendous, good earnings. It actually has been doing great for the past year, okay? But I would say probably in the last 3 months has probably been the best performance ever. So what made that stock run? Buyers, okay? Even though it had good earnings, you're probably asking yourself, well, you know, why did it go up that much? Why did it go up more? What driven it? Well, listen, we're going to cover that. But there are other stocks out there that also did move. LI, ZM, all popped yesterday on earnings. Look at these stocks, okay? Would you rather trade an $800 stock or would you rather trade a $40 stock? Percentage-wise, bigger movement, also less money. What's the game plan? Well, the game plan is you got to follow the money, okay? Following the money is what's going to teach you exactly who's driving it up and who's driving it down. So I want to go over a couple of examples and show you and get into the thick of what we're here to do. And what we're here to do is learn and to what makes these things go up and go down. Now, once again, tomorrow I'm going to be live at NASDAQ if everybody wants to watch the show. But let me go over a couple of things, exactly what we're looking at on NASDAQ Book Viewer. Now, as we all mentioned earlier, buyers make support, sellers make resistance. Now, a lot of us do the opposite. We always like to look for supports and we like to look for resistance levels. But you have to understand something. You can't have support levels unless those buyers are out there to support it. And you can't have resistance levels unless you got sellers to resist it from going higher, because stocks break supports and resistance levels all the time. But I want to start just really basic here, and we'll get a little more advanced as we move forward. Let's look at a big buy situation here. So looking at a stock, ENPH, regardless what the company is, it's irrelevant. But what I want to focus on is this. A lot of us look at this and we're like, you know, Fausto, there's a lot of numbers, you know, what am I looking at? You know, I see 100 shares. Let me get my little pointer so you guys can follow along here. So you got 100 share buyers. You got this one number. What does that mean? Well, one order, it means there's only one person out there that makes up that 100 shares. And he's looking to buy buy the stock at $116.27. So what you're seeing, a lot of these orders are being aggregated. Now, listen to me carefully, because I don't know if you know this. There are different exchanges in the entire world. New York Stock Exchange, NASDAQ. There are ECNs out there like EDGX, SPATs, all of them. There's a CBOE. Stocks trade at every exchange. So you're looking at a big global market, okay? What I'm showing you right now is the NASDAQ exchange, not the New York. The NASDAQ, the reason why I'm showing you NASDAQ specifically, because they make up about 50% of the total volume of the market of that stock, of any stock. Maybe 20% on the New York, maybe 10% on the CBOE. I mean, they all trade on different exchanges, depending on, you know, where a hedge fund is based out of or whatever. But what you're looking at right now is all the algorithms, all the dark pools, all the Black Rocks, the Goldman Sachs, is everything. So that's why I like to focus on the NASDAQ exchange, because the NASDAQ market makes up 50% of it. Now, out of that 50%, you're looking at the stock right here. And let me just get my crayons again here and draw a little bit. So you're looking at, there's a big buyer right here. There are 46 orders out there that make up 59,000 shares, which is right here, where it's blown up. And what made that is this right here. Those support levels is what makes that stock a support level, those buyers. So that's why when you're looking at a stock right here and it's going down and you want to know when is it going to stop, and why didn't it stop over here at 118 and why didn't it stop at 115, is because there wasn't buyers at 118. The big buyers were at 115. That's what made support levels. Okay. Now let's look at another example. Let me erase these and change it up. Let's look at our resistance levels. So when you look at our resistance levels right here, you'll see that what makes the resistance levels are sellers. When you look at the sell column over here on the right, you'll notice that there's the biggest seller out there is at $45, and there's 38,000 shares out there, and there are 13 orders out there that make the 38,000 shares. So here you have a stock Roblox, and you're like, okay, I'm making money, the stock's going up. Well, listen, you didn't make any money until you sell it. Let's just be clear on that. Don't wake up in the morning and look at your phone and be like, oh, I'm up 5% today. Yeah, you know what? You're not up anything until you sell it, okay? How do you know where to sell? Well, where the other sellers are. And when you notice that, when you're looking at a stock like Roblox, the next biggest seller is hovering here right around at $45. How do we know that? Because you could see them on the right-hand side. And by knowing that he was there, each candlestick that you see there is a 1 minute candle. 1, 2, 3, 4, 5, 6, 8 minutes have been sitting there. Never want to break 45. And it didn't break 45, and that's why it came down to 45.70. Now, I know that's not a big gap, but don't worry about it. I'm going to show you some bigger ones. This is just I'm just looking at more of a simple way of looking at it, on a very small move. Now, let me look at I'll show you another example. Let's go over a few trades that we traded yesterday, for example, okay? Let's look at AMD. Oh, now we're looking at a big brand name stock. Okay. Well, everybody ready to have a little fun here? Because I had some questions to ask everyone. Okay. Yes. If anyone has it. So my question to everybody here is this. AMD is going down. Where's support levels in AMD? Where do you think a support level would be? Yes, sir. Does that mean the percentage change means nothing unless one of the share stocks are sold? Yes, Francis, that's a great question. So, right. So unless those buyers are getting executed, it's not going to go lower. But we're gonna talk about that in a minute. But the question is to everybody is when is this? How much lower is this stock going to go? Wait, what's going to make this stock stop going lower? And like I'm going to say, like I said when we started this webinar, if you don't know how to answer that question, you should not be trading because you are one trade away of blowing up your account. All right. So if you said, no, it's not support, it's buyers. So do you see buyers on this chart? I don't see anything other than a bunch of reds. I'm thinking the stock is going lower. Well, AMD's not going to 180 to 0. I mean, that could happen. I've seen stocks like that before. But before it might happen, it might have to hit support levels down the way. So let's go check out and see where the buyers are. Now, I could see that there's a buyer, right down here at $44 at 175. All right, does everybody see that right there? 175 right there. And there are 408 orders out there that make up that 44,000. That is a lot of orders, and you might think that might not be a lot of shares, like 44,000. Well, listen, like I told you, this is 50% of the volume. You're just looking at one price. There are a lot of orders out there at every single penny, but the biggest order out there is right there. So in theory, what do you think is going to happen when we get down to 175? Think it's going to go up, or is it going to go down? Because remember, your game plan is you need to know where everyone else is at. You have to. So let me show you where I'm going with this. Look what happened when the stock got around 175. It hit it and it went right back up to 177.50, like that, in a matter of what? Within the next couple of minutes, and then the next 20 minutes, look how much of a winner you would have made on that stock, okay? Just by knowing where that big buyer was. All by knowing where the support level was, all right? And that support level was those buyers. Let's look at our resistance levels. So here we're looking at coin, okay? Coin's been doing great, right? Coin's been up, what's it called? Coin's been, let me bring up the chart right here. Here's coin. So coin here on the big chart, you can see right here, coin's been up at 120. Stock is already up at 210. All right. Stock's been doing phenomenal. All right. So let me just fix this. Okay. So the question is, when will it stop? I mean, what drove the stock going higher, everybody? Right? A couple of questions here. Bob says, does level 3 include the other 50%-ish exchanges? No, we're just looking at the NASDAQ exchange. All right. We're not looking at the other one. There are platforms that will aggregate the other exchanges, but we didn't get there yet. All right. Now, why is the stock going up? Was it Bitcoin? Was it indicators? Was it news on the company? You know what? Maybe it was buyers keep bidding it up. So the big thing we're looking at here is, where are the big sellers in Bitcoin? All right. That's what we want to look at. So now we're looking at right down the list. There are a lot of sellers at every single price level, but the biggest one out there is hovering at 186.50. Well, look what happened when it went from, and this is yesterday, it ran from 168, and then right around 10:30, it hit it hit 186, came back down. Hit 186, came back down. Okay. Why did it have a problem with a double top? Some people, oh, that's a double top. That's the reason. No, the reason why it never wanted to go past 186.50 and came back down to 182 is because that 130,000 share seller out there. Now, don't worry about that. We're going to come back to coin in a bit, okay? Because I'm going to teach you something that's called a breakout. All right. Let's go to Tesla. Who here owns Tesla? I mean, Tesla is actually the #1 stock searched on the internet or on any trading platform on people want to see what the stock is doing. I don't know if it's the good earnings or whatever it is, but who here owns Tesla? Anyone here trade or even traded Tesla? Okay. Well, Tesla obviously, took a very big hit. And you can see Tesla had a big run up and went from 192 to 197. All right. In a matter of 20 minutes. That's a huge run up. Now, will it continue to go higher? I don't know. Where are the buyers? Where are the sellers? Well, is this a coincidence that there is 106,000 shares looking to be sold at 200? Oh, by the way, that's not one person. That's 362 people out there that make up to $200. Now, some of you are probably going to be like, oh, yeah, 200. That's a mental number, whatever. Yeah, okay, great. Let it be mental all at once. You know what my mental is? There's 106,000 shares, and there's 367 people I need to deal with that also have that mental thought at 200. Okay? So, what does the stock look like it's doing? Looks like the thing's going to break out. It's going to go past 200. This thing looks like, I mean, some people have this whole theory about the candles, the green candles, the 5 candlesticks with the green bar. I don't care what anyone else tells you other than you could think all you want. Can the stock go higher? Absolutely. But it's got to get past those 367 people first. What do you think happens next? I don't know. Hit it, came back down to 197. Hit it, came back down to 198. I don't know. So my question to everyone here is this. Did I lose anybody yet? Did anyone get lost? Okay, because I was only talking for about maybe 15 minutes. All right, 20 minutes tops. So please let me know. Yes, no, you following along? Because I'd rather you be honest here than figuring out the hard way. And that's getting into a trade and not know who you're going up against. A couple of questions came up across here. Sir, why many passive investors initially pump the price of many stocks and index funds and cause a buying spree? Is that intentionally caused by stock market to drop at many points? May God not let that happen, completely crash. Well, Francis, I mean, you're asking me like a mental question, on that. Does that really even matter? Like who's pumping and dumping? You know what I mean? Like, I'm not in the investment business. I'm in a trading business. Listen, if you think for a second, and this goes for everyone here. If you think you're dealing with a bunch of scammers, liars, thieves, why are you in this industry? You know, I just went to, I'm looking to buy a new car, right? Actually, my lease is over on one of my cars. Do you think that the dealership is the nicest, most honest, you know, most caring person, or they just want to make money on the car? Okay. You think they care if I can afford the car or not afford it? You think they're going to do everything like they can to get that car in my hands? Okay. So that's what it is. You just got to know how to play the game. That's it. Another question from Travis. Do you only see immediate orders on level 3 and level 4? Do you see it on large orders that have been sitting for days and weeks? Travis, that's an excellent question. And yes, you will see those orders weeks in advance. Absolutely. You know, I'm actually going to be on NASDAQ, and I'm going to show, I have a good example of Revlon. And, you know, I'm going to show exactly how there was a big block order there for several days after the big crash on Revlon, you know, the electric car company, of a 600,000 share order out there that never wanted to leave. And he only showed up when the market opened up. And sure enough, you go to Revlon, you'll see it ran about $1. Okay. Probably the best trade yesterday. Let's look at a couple other stocks out there because we have a few more examples. But I'm glad to hear that everyone's following along. Okay. Which, by the way, I didn't hear from you, Thomas. I didn't hear from you, Stefan. Robert. Guys, don't be shy. Don't be scared. Okay. You'd rather get it wrong here than being in a trade and lose the money doing it. That's the big thing. Okay. So let's look at this example right here. Do you guys see the supports and resistance levels on ALT? And how do we find the supports and resistance levels? Like I mentioned earlier, where the big block orders. I have so if I want to have a game plan, my buyer is here at $11, which is this order right here. And my resistance levels is right here for 58,000, which is 1150. So I already have a game plan. If I'm looking into this stock, okay, and someone said, oh, ALT's going up, you got to buy, you got to buy, you got to buy. Yeah, okay, you know what? Maybe not at 1129, but I definitely would be interested somewhere around 11. But it's going up. Yeah, but if I break 11, but I got to come up to a big seller around 1150. So I'm only, if I do buy it here, I better have a game plan that the stock within the next 20 cents is going to hit a big resistance levels. Now, is 20 cents a lot? I don't know. 20 cents on 1,000 shares is $200. That's a $50,000 a year salary. Or it could be a $50,000 loss that you keep dumping every time. So something to consider. All right. Now, let me clear this out. And let me change the slide here and show you what we got going on. Look what happened when we look at the chart. Stock at 9:30 had a great move around 10:15. And then finally hit a little resistance levels here around 9:05. And then it went all the way to 1150. Came back down to 11. Went back to 1150, came back down to 11, and you see where it is right now. This is called channeling, okay? Look what happened from 9:45 up until 10:30, within an hour. Never want to go past 1150, never want to break 11. Ever involved, ever get stuck in a position like this and like, why does it keep doing that? Like, and sometimes you're thinking like, are they watching me? Is that, I mean, like, what, like, why every time I buy at 1150, the thing goes down, you know, and why when I sell at 11, it goes up? Nobody's watching you, fellow traders. You're just not watching them. That's where it comes down to it. Now, let's talk about a breakout, okay? But before I do that, a couple of questions came across here. Jerome has a question. What about shadowing orders that are canceled immediately? We didn't get to that yet. It's a great question. Raymond has a question. Raymond's a student of mine. Thanks, Raymond. I appreciate it. Thanks for being here. All right, so let's go back to coin. Now, remember we talked about coin? We had that big seller at 186, right? For 31,000. It hit it, came back down. It hit it, came back down. Well, not only did it hit it once, twice. It hit it 3 times. Okay, from 10:30, 11, 11:30, 12, kept hitting it and hitting it and hitting it and hitting it. Well, what ended up happening, now the stock is at 190. Actually, when I showed you here, coin actually ran up to about 210. So now you're asking yourself, like, Fausto, what happened? You told me there was resistance levels there, and now the stock is at 110. Actually, at 12 o'clock, it passed that 180, 186, and it went into that 190. I mean, that's a pretty big profit right there. Why did I even sell it? Well, listen, maybe somebody bought it. Do you think that can't happen? You think that someone can't go out there and buy it? You know, listen, I'll use an example. You have anyone here own a home? Do you ever get outbidded at a home? You're buying a house or a condo, even rent. You try to rent a property and I really want to buy that house, and I'm going to pay the most. I'm going to make this guy an offer he can't refuse. Okay. And then sure enough, he comes back to you and said, sorry, we sold it. They're like, how'd that happen? Oh, someone paid a hell of a lot more money than you did. And you're like, really? Seriously? I thought I was paying the most. How'd that even happen? Somebody went out there and said, you know what? Your bid wasn't good enough. Okay. Well, it's the same thing about the market. There are always buyers and there are always sellers. And there's always people looking to take profits, and there's always people looking to take losses. So you just got to know where they are. And what happens that when you see something like that, and you want it, and you kind of look at every indicator, every Bollinger Band, every MACD, everything, you're like, how the hell that stock get past that? That's the reason why. Now, who here wants to know where to get Book Viewer? Okay. Well, all you need to do right now is take down my email address, because I can't send you to the website. Not because I don't want to, it's because because this is what I end up finding out. Everyone goes out there and they're going to get it. And then what's going to end up happening, you're going to play with it. You're not going to get the defaults right. You're not going to understand how to use it. And it's just going to sit there like some tchotchke on your windowsill. Okay. I have a custom video that is made for all of you that will show you how to set it up and how to look for it. Right now, I just basically told you the great things about it. Okay. But I don't want anybody to get it until I give you those videos that you could watch. All right. Now, the next great thing I want to tell you about is this. You know what's amazing about this platform? I paid $1,000 when I first got started. Okay. Today, it costs $15 right from the exchange. This is not me. This is not, Metastock. This is not TradeStation or Thinkorswim. This is right through the exchange. You are seeing 50% of the volume of a stock and you're paying $15. Why would you not want that? Okay. What's the worst thing that can happen? Reality. You're actually going to see something out there that you could tell yourself a gazillion times. It's going up. 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 And then meanwhile, you're dealing with a 200,000 share seller, 500,000 share seller. I'm like, no, that's not real. That can't happen. You know what? Got to follow the money. So anyway, there's my email address. If you guys want to know where to get it, I'll send you the video so you guys can watch it so you don't make any dumb mistakes. All right. A couple of questions coming up here. Looking at your AI bot and 1 minute chart, I highly doubt that big investment firms are pulling and selling orders $1 above and buying it. You know what? That's great, Alex. Do you think that they're fake orders? Okay. Because what I'd like you to do is when you come to the trading room, we'll see it live. First of all, let me explain something to you. You can't put fake orders in the market. You could cancel orders. You could cancel orders on your TD Ameritrade or anything else. But if you think those are fake, this is what we'll do. I'll go find a nice 500,000 share order or even whatever you can afford in your account. We'll use your money and I'll make you a deal. I will bet you $1,000, and everyone got me on record. I bet you $1,000. Okay. to your $10 that when you put an order out there, we'll use your money and we'll see if that stock is real or not. You want to take that shot? You could win $1,000 right now, Alex, and to be right to your $10 to see if that's real or not. And you know what's going to be the fun part for all of us? We're going to see how Alex gets out of the position. That's going to be the fun part. Anyway, let's talk about level 4, okay? Because yes, now there's level 4. Some of you were just asking me, what about the other exchanges? You know, could you aggregate those others? Absolutely, you can. Okay. Only issue, it costs more money. Okay. And right now, I don't think anyone here, I don't want you to spend your money. Okay. I don't think you need to do it right now. But you know what? When you graduate from a bicycle to the local bus or train, you'd be like, wow, this is awesome. You know? But then when you graduate from a bus to a train to drive your own car, that's like going from level 3 to level 4. Then you're going to see why you need it. You might not need it. Taking public transportation might be fine. But there are things that are better out there. So let's go to the live markets really quick, and I'll show you a couple examples, all right? So what I'm going to do is I want to bring this up here. And hold on a second. And we'll look at a couple of stocks here, all right? So let me examine this. All right, so anybody have any stocks you want to look at? Any stocks? Let me know. I got a good one for you while all of you guys are thinking about this for a second. I want to look at the one we called out earlier because some of you guys logged in late. Sun. Okay, this stock SOUN. So this stock right here, you could see it. Last 2 days, got $4, ran to 8, it's about up 100%. Right? Why is SOUN up so much? Okay, and the next question you have to ask yourself is when you draw your trend lines. Why do we have, like resistance somewhere around here, around 780? And why do we have somewhat of support levels somewhere around here, around this 680? Okay. Well, one way to answer that is right here. You have, where are we? 680. Where's 680? 680 right here. We got about 60,000, 19,000 share orders out there. We got some big block orders there. We got a really big order around here around the 650. And right around that 788, we got a 200,000 share seller, but my God, there's a 300,000 share seller out there. So kind of makes sense around the 280 and the $8. Now look at this. I want to show you level 4. Here at level 4, look at this. This trader, there's actually 500,000, and there's about 1 million looking to be bought at 680. Now, why is there more on this than the other one? Is because this one is adding New York Stock Exchange, EDGX, all the other exchanges out there. So you're showing, not only you're seeing it more, but you're seeing it more here. Now, like I said, is it necessary? Right now, maybe not. This might be more feasible for you as a beginner. But look how big those orders are. Makes a total big difference in the market. All right, I want to show one more example because we're running out of time here. And a couple of you here are bringing up, let me see what I got here. Let's see, I got one more I want to bring up. I want to pick someone else's stock. Hold on, let me clear this out, erase all. And I'm gonna make it a little different. Hold on, let me see what else is good. Amazon. Let's look at Amazon, right? Because some of you are like, oh, this only works on cheap stocks. You want to look at a Fabulous 7? Let's look at Amazon. Amazon, right? And let me change this to not 10,000, but show everything under 1,000. Amazon. Let's look at Amazon, all right? So Amazon, if you look over here, stupid alerts. Amazon's been doing pretty well. You could see it's testing some resistance levels here around 175. Everybody see that? So it does. So on a swing trade, you can see 175. If you look over here at 175, you got a 70,000 share sellers. Everybody see that right there? Everybody see that big seller right there? 70,000. Okay. Look, you got 3,000, you got 2,000, 70,000. Okay. Well, guess what? When you go over here, you got about 90,000 right here. So when you start adding another 20,000, all the other exchanges, this guy's been out there. These traders been out there since 9:30 this morning. That's called program trading. That's how long they've been out there. Now, you could sit there and you could hope all you want and be like, oh, it's 175. You know, the analyst told me that. No, there's nothing to do with that. You know what it has to do with it? That big seller out there. That's where it comes down to it. Okay. So not only does it work on a, and let me zoom over here a little bit better so you can see a little bit closer. It doesn't just work on a day trade. It also works on a swing trade. It works on an options trade. It works on every trade. Okay. Now, did I confuse anybody? I don't think so. Now, who here wants to come and see more of this live in the market? So this is what I want to do because I'm running out of time. I got the next presenter coming up and I want to take up his time. I want to give you time, you guys, to register. So basically, there's no better time to learn than now. We're getting in the most busiest time of the market. You've got a new year. You got an election year. Listen, Cybertrade University, we do education, some of the biggest brokerage firms in the industry. Not only that, but we have one of the best reputations in the industry. We've got a 5-star rating on Google. We've got an A+ rating at the Better Business Bureau. Feel free to kind of review those reviews and kind of get to hear, and most importantly, see some of the traders in the room and why we've been doing this for so long. Now, this is what I'm asking for. If you want to be able to come and join me for one whole week of my trading room, all I'm asking for is a $9 trial. I'm not going to charge you any more. I'm not going to do a subscription. All I need to know if you're a real person or not. So if you have your phone, you could scan that QR code on the bottom, or you can click on that little link that Jeff just posted at ctu.co.trial. These are everything that you're going to get. We're going to do live commentary during the hours of the market. You're going to have access to the full trading room, which I showed you earlier. We have gurus that come in all the time over the course of the week. Some of the biggest, most brightest gurus between swing trading, options, Forex. We also have a great library of them if you want to look at past ones, just like how Jeff does it. And I'm also going to give you my book. Remember, that's going to come along with it. So that's a $40 value. You're going to get that for free. All you need to do is scan that QR code and, like I said, and get registered. These are everything that you're going to get. You're going to get pre-market trading, after-market trading, live commentary, workshops, and also whoever registers right now as a bonus, okay, for the first 20 people that register, I will actually give you a free coaching class. That's right. I'm going to talk to you on the phone. Now, why would I do that? Well, let me explain to you why I'm here. I'm here to look for traders that can be part of my team. A lot of you really don't qualify to trade, and that's okay. I'd rather be honest with you. And not only that, but if you're not going to take the room seriously, and if it's not your style, you probably don't want to continue anyway. So the $9 trial is more or less just more an application fee to get into the trading room, to tell us a little bit about you. With that, what you're going to have to do is this. We're going to ask you 5 important questions. We need to know, who you're trading with, who taught you how to trade, little simple questions. And then there's going to be a calendar where you'll be able to book your appointment. If you don't know yet, just book any time. You're going to get a walkthrough with our education advisors. They're going to tell you exactly a little bit of, about what you expect in the trading room, how to watch those videos, help you with the book viewer, how to get there, how to use the Metastock platform too, because we're obviously we're have a great relationship and sponsored by them too. So we'll cover all that stuff for you. Once again, it's $9. And last but not least, at the end of the week, if you feel like we're wasting your time, we'll give you $9 back. Listen, I don't need your $9. That picture in the back right-hand corner of me is worth tens of thousands. Okay. The $9 just kind of tells me what kind of trader you are. If you're a serious trader or not. All right. And by the way, any questions? Well, thank you very much, Jason. I appreciate it. Listen, it's all about following the money. It's all about following orders, following book orders, and, just having the right tools. So the thing is this, whatever you're doing right now, if you're not successful within 3 months, maximum 6, not because you got a bad instructor or whatever, maybe it's just not working for you. Maybe you're doing options, it's not working for you. Maybe you're trying too hard. You know, it all comes down to follow orders. All right. So with that said, I want to pass it over to the next presenter. I'm going to pass it over to Jeff. Once again, all you got to do is take your phone, scan that QR code, or just click on that link, and you can register. And then, and if you, whenever you want to start, you can start tomorrow. You can start on Monday, whatever it is. But definitely go out there and do it. All right. Just a couple of questions came across here. Book view shows orders, but what about the immediate purchase of the sale? Yeah, so the purchase of the sale is in your time and sales. So the big thing that you'll see in the trading room is that when we see those orders, you will see them at real time getting executed. So you'll see if that number is dissolving, you know, and you'll see by the orders that are happening. That's a great question, but you got to see that in the live of the market. Right now, it's very easy to see it on a screenshot, but when you see it live, it's going to make a total big difference. All right. Any other questions? There we have. All right. Do I need a brokerage account? It's always a popular one. No, you don't need a brokerage account. How much money do I need to do this? You need $9. That's all you need. Don't go out there and think, we don't want you to trade. We just want you to watch. Okay. The big thing is watching the other traders and see if they make money doing it. That's what you got to focus on. All right. But that's the big thing about being a trader. Listen, you got some great presenters. Metastock does a fabulous job doing these expos. There's some great presenters. Try a little bit of everybody's stuff, something that works for you. Listen, you need to try a little bit of everybody's product to kind of see it. But I just want to do all of you a favor. You're not going to learn this on your own. You can't be self-taught. You need mentors. You need a team to be successful at it. This is the greatest job in the world. I've been doing this for 30 years. Love it. Never will go back to anything else. You are your own boss. You can do it anywhere in the world. You know, you can work at your own time. It pays a lot of money, but you got to know how to play the game. And the only way you'll learn how to play the game is surround yourself with good traders and have good mentors. So go out there and learn. Thanks, everyone. Appreciate your time. And I'm going to pass it over back to you, Jeff.
Thanks, Fausto. One last comment. You missed it.
Oh, what's that?
Matthew. He's like, love it. Thanks for your time. So I would like to appreciate that. Say hi to everybody over there, Fausto.
I will. I look forward to seeing you soon.
Thanks for coming in. Yeah. All right. Go ahead and do this. We're just going to change things up a little bit. I'm going to make me the presenter. Thanks for all the questions. Thanks for being here. It's good to see you. MB asks, are the webinars recorded? How do I get the recording? So that's easy. If you're watching us on YouTube, which you're not, but if you're watching us on YouTube, you just come back to youtube.com/metastock. If you come back, you can come back anytime you want to, MB. And you can just go to youtube.com/metastock. All of the sessions are being live cast there. They're all available. They're all organized by day. They're on a playlist too, if you want to look at them that way. And they're all available. Brenda, you are registered. So Matthew says, I've got a huge smile on my face. I'll try and put one on mine. Brenda, okay. Brenda wants to know how to register. Here's the link for that. If you want to register for the trial that Fausto was talking about, if you want to register for a prize I'm about to give away, you already are, because you're going to go to webinar. But if you want to register and you're watching us on YouTube and you just kind of stumbled across the stream, hello, I'm Jeff. If you go to metastock.com/traders-conference, which Greg is going to put in the link right now, you'll be able to see that. So, and you'll be able to register. You'll be on the list of prizes. So, Matthew, I'm glad you enjoyed that. Thank you for all the questions during that event as well. So, again, we are Metastock. Been rated #1 31 years in a row. Helps you scan. We're going to talk about scanning right now. Test helps you do testing. Helps you forecast probable price movements. A lot of really good tools in Metastock. That's why it's been rated 31 years in a row. If you have questions, feel free to chat with us. Metastock.com/sales-chat, or just sales chat. I'll type that in the link. And while we transfer to the next guest, I did promise a prize. What I want for you, and this is just to kind of be as clear as I can. Sometimes people get confused when I give away the prize. What I want you to do is come up with a number. If you've registered, you've got a number already. You don't need to worry about it. But if you come up with a number, I'm going to go ahead and look at my spreadsheet, and I'm going to match that number up. So I want you to type in a number. That number can be anywhere between 1 and 8,155. So any number in there, 8,155, type in a number now, and I will tell you the prize you are going to win. So, or that somebody's going to win. The number you pick is going to win. So give me a number, any number, one between 8,155. The first winner today is going to get this mouse pad. It has the major candlestick signals on it, and a book by one of my favorite technicians, Steve Bigelow. This is called High Profit Candle Powered System. I love this book. Steve was such a great technician, and it's very clear. It's easy to read. It talks about his favorite candle patterns in trading. So that's what you're going to win. And let's just go ahead and pick out a number. Lots of numbers coming in. Carol, Travis, Brad, Dave, Tim, Adrian, Kathleen, Eric, Tom, thank you all for the numbers. The first one that came in was 8155. So let me see who that matches up to real quick. And that way I can kind of make a note of it and to announce the winner. Okay. The winner actually is Hunter S. I don't have he did not register with an email address, but if your name's Hunter S and you have a Gmail address, you just want a book. So I'm going to go ahead and make a note of that as we kind of transition into our next speaker. But congratulations. This is a great book. I'd recommend you read it. I'm going to send you an email asking you for an address, a phone number, and an email address, or just to confirm your details so I can send it to you. I'm not going to get to the post office this week, though, so it'll probably be next week. So anyway, let me go one more slide further here. Where is my mouse? It's right there. All right, our next presenter is Joe Duffy. Joe Duffy has been a prop trader. He's a systems designer. He's and a financial writer. He's a 3-time top 10 finisher in the U.S. trading championships that uses actual money, real money returns. And there he is. Joe, how are you?
Good. Jeff, I am hearing, I think, the previous speaker speaking to people. So I've got you and I've got 2 people in my headphones here.
Did you have are you at youtube.com/metastock? And then one of your tabs?
Jeff, what I'm hearing now is your intro, so it's almost like you're on delay.
Do you have YouTube? Do you have a Chrome browser with YouTube open? That happens to me sometimes, where I have the YouTube stream up and the GoToWebinar stream, and I hear.
Should I shut this down, Jeff, and start again?
I think what you do is, I think what you should do is, do you have a YouTube tab open? Do you have YouTube open?
YouTube?
Yeah.
Okay.
Did you join the stream also on YouTube?
Yeah, I think that did. I shut the YouTube. Yeah.
Okay. And that went away, right?
I can hear you now, and there's no 2 voices. It was a nightmare before. Okay.
The most distractive thing, and I don't know, like any of you in the audience that actually has done broadcasting, if you can hear an echo of yourself, it's horrible. You're just like,
oh God, it's horrible. But I was hearing a delay, like what you said 10 seconds ago was coming at the same time as what you were saying now.
Yeah. YouTube is about 10 seconds delayed.
Yeah.
That's how if you start cursing, we can mute you.
Okay. All right. Let me get over here.
Thank you for all of those numbers, Lewis, Richie, Tim, Adrian, Bob, Kathleen. Lots of good numbers, lots of good people here. I can see your screen. And I think you just need to kind of go into full screen mode, and I will let you get started. Joe, thanks for joining us today.
Okay, buddy, thanks. Okay, oops, sorry. Okay, thanks for coming, everybody. This is not going to be a real big, long presentation here. What we're going to talk about today, neuroscience and trading. It is a very, very important topic. Can you guys see me, by the way, still? Because I don't know if I'm on screen or not.
We can see you.
Okay, perfect.
And we can see your screen.
Yeah, it's a really very, very important topic in trading. I'm not going to go through any charts, whatever, today. We're just going to talk about this. Because if you don't have this, the rest of it doesn't really mean anything. And anyone who is successful in this business has conquered some internal mental issues, because we've all have them, just like regular life. Okay, so we've learned so much about neuroscience in the past few years, and I don't pretend to be a scientist by any stretch. I don't know what John Hopkins actually does when they figure this stuff out, but the great part of this is, for all the heavy science that goes into it, what comes out of it is very, very easy to understand. So that's very fortunate for us. So we've been very fortunate in the last few years to take advantage of this exponential growth curve in the study of the brain and how it works. Okay, so this is the leading edge of trading, in my opinion, and in regular life. So hopefully this presentation today will give you some new approaches to dealing with the issues that you have, and we all have them. I've got them. Everybody has them. Okay, so our brain's belief system. Belief systems, as they know now, are actually groups of cells in our brain that knit together. Okay, and once they knit together, they physically don't want to be broken apart or to change. Okay, so we all know that the brain is resistant to change, and this is the physical reason why. Okay, so knowing that our brains is resistant to change it's good to know. But what's also good to know is there's such a thing as neuroplasticity, which means that our brains can change. We can use the pathways that transmitted information in the past to transmit new information and replace the old. Okay, so if you've ever traded, you probably have asked yourself, why do I keep making the same mistake again and again? Well, it's because, and we'll go into this a little bit further, the same information is just being fed down the same pathway over and over again. But that's possible to change. Okay, so knowing how the brain works is the first step in, I think, understanding how to change it. In fact, I think it's not only the first step, it's a huge first step. So if the, excuse me, if the journey is 100 steps or 100 miles, that first step, that understanding, okay, here's what's actually going on, I believe is 50 miles of it. So it's really, very important. Now, do we always act in our own self-interest? And of course, the answer is we would like to think that we do it. At first, our reaction is, well, of course we do. But the fact is we don't. And example, we've all experienced watching someone else, not ourselves, but watching someone else go down a path where they've elected to take a path or do something that, you know, well, this is only going to end one way, and it's not good, right? Much easier to see someone else do it and arrive at the conclusion that, what are you doing? Very, very difficult to do it for ourselves. So in that sense, it's kind of like the Wile E. Coyote syndrome. You know, why does Wile E. Coyote keep doing the same things over and over again when it ends up the same way? Well, that's really how our brain is wired, and we'll talk a little bit about that too. Now, part of this is that our brain is not one homogeneous organ. It has many parts. For instance, your frontal cerebral cortex does your conscious thinking and reasoning. It's very slow compared to other parts of your brain that operate at a level that you're not even aware of. Okay, so all those parts of the brain actually don't work together. Okay, so that makes difficult in trading, because in trading, any sort of little issues you have, the market seems to weed them out. So understanding all this makes it much easier to start to change. Okay. So all these things that we say to ourselves, why do I keep making the same mistakes again and over again? Why did I do that? Why don't I use a stop on that trade? Why didn't I take my profit? That was my plan. Those things that you say to yourself and you beat yourself up about, everyone's been through them. Okay, there isn't anyone, I don't think, who's perfect. Their brain is perfect for trading. In fact, trading is the antithesis of almost everything else you do in your life. So it's very difficult, and our brains have to be adjusted to the trading environment. Now, it's easier for some people to do that than others. Just like some people may be more prone to heart disease, or diabetes or whatever. Your brain is an organ, and and it, excuse me, again, I had COVID in December, and this cough is just still not going to go away. And it wasn't even bad COVID; it was just mild. Anyway, yeah. So some people are more susceptible to certain, diseases in their physical body, and your brain is an organ in your physical body. So so some things in trading are going to be more difficult for you than they are for other people. That's for sure. But everyone has their own things to overcome. Okay, let me see here. Yeah, so your brain is actually like an operating system. Okay, so it's like Windows, right? So until you put programs into Windows, nothing happens. Okay, so I'm sure you've heard the first 7 years of your life, your brain is programmed, and the next, the rest of your life, you just play out the programs. Okay, that may be hypothesized many, many years ago. Now, though, we actually can go and what might have been pop psychology, when Wayne Dyer talked about it, who was, 30 years ahead of his time, they can now take some of the things that, for instance, Wayne Dyer would say and say, okay, here's why that is true, and here's what happens in the brain, just like I described with the cells knotting together for belief systems. So we can transfer that, what might have been woo-woo pop psychology to some people, we can now transfer it to hard science, okay? So your brain is like a PVR. It only plays back what you put in it, okay? And most of the things that we put in it, 90%, are put in it before the age of 7. Now, as I said, good thing is neuroplasticity, you can always adjust, okay? Now, the whole PVR thing, I'm sure, is an example. Excuse me. As an example, you've gotten in your car and driven somewhere, and it's a Saturday, but you start driving to work because your subconscious has taken over, and you find yourself, oops, I'm not going where I'm supposed to be going. Or conversely, you've driven somewhere and you can't remember one thing you did on the way. I don't remember going down this road. I don't remember turning. That's because everything's operating at a subconscious level. The subconscious level is responsible for, according to scientists, about 95% of, or 95 to 98% of our actions. Okay, and they will also tell us that 95% of the thoughts that we have in a day are either useless or self-sabotaging, which is a frightening, actually, thought to comprehend. Okay, so how do we overcome this? Well, one of the buzz phrases now is conscious awareness, and conscious awareness is just being using your cerebral cortex, your conscious brain, to be more aware of what you're doing with the signals that are being sent from your subconscious. Okay. Now, your subconscious brain, as I said, is hugely, hugely powerful. There are 30 billion, that's 30 with 2 billions, chemical reactions per second in your subconscious brain, okay? So you can imagine with all that activity going on that it's a very powerful force in all of our lives, okay? And the things that we do subconsciously in trading oftentimes aren't serving us, so they have to be rerouted, okay? And that goes to the change in neuroplasticity. One of my favorite analogies to look at this whole thing is, as I said, your brain has many parts. They aren't homogeneous. They aren't all working towards the same goal. Now, your number one function of your brain, the number one function of your brain is survival and to keep you safe, okay? Now, oftentimes the brain looks at that survival or keeping you safe as it would rather deal with the result that it knows rather than the unknown, okay? So if you're making the same mistake over and over in trading, but you're still trading, then the brain is saying, okay, well, we're surviving, we'll keep doing the same thing, okay? So the nursery school analogy is my favorite. You're in a nursery school, you've got, lots of different kids, all with different personalities and agendas, and you've got kind kids, you've got kids who won't share, you've got kids who are shy, kids who are outgoing, just like your brain, all sorts of stuff going on. Now, you're always going to have kids who are not acting in the interest of the whole group. You've got a kid standing on his chair, screaming, "I want ice cream before lunch." You simply cannot let that kid run the classroom, okay? And that's what's happening in your trading brain when you're making the same mistakes over and over again. You're letting the kid who's standing on the chair screaming, "I want ice cream before lunch," you're letting him run your trading, okay? By making the same mistakes over and over again. So as we step outside ourselves and be consciously aware, that's a great analogy to have. Don't be the kid, or don't let the kid who's standing on the chair screaming, "I want ice cream," don't let him run the nursery school. Don't let him run the trading, okay? And that's what a lot of us do. Okay, just give me 1 second here. Okay, so this conscious awareness. Okay, let me go back one little bit here. So some of the things that your subconscious brain may do, for instance, I'm going to use an example. It may freeze, okay? So the market starts moving quickly, or it's doing something you weren't expected to do, and and you freeze. That freeze comes from fear, okay? It's a chain chemical reaction in your brain, and then once you have the fear, excuse me, I'm going to have this cough probably a little bit all day. I apologize, but as I said, it's hung on, and it's just the way it is. So these chemical reactions in your brain are going to react the same way they always have, because that's how your brain is wired. Okay, and they may come, the freezing may come, and it's just an example. Freezing is an example. It could be fear of missing out in chasing trades. Okay, it could be anything, but we're using freezing for example. It could be because when you were younger, you always thought you had to be perfect. If you had a 98 average in school, your parents told you, "Why aren't you 100?" Okay, so you develop that need. You think that anything less than perfect isn't good enough, and of course, in trading, that's not possible. All right, so that's just one example. So you need to be consciously aware of that. Okay, in order to, so your cerebral cortex needs to be aware of what your subconscious is thinking or reacting. Maybe more the point. It's reacting. It's not thinking. But your cerebral cortex does think, so it needs to step outside and be consciously aware of that. And we're going to I'll tell you some more things about that and how to help you with that process. Okay, but the first step is awareness. Remember that again, and I'm going to repeat myself because that's good, because we're going to have important things to say, and I want to make sure that I've emphasized them over and over again, because there's not really that many of them, but they are important. Okay, so they don't all work together, and you need to be aware that often your first reaction is destroying you. Okay, and we're going to talk about some things about how to fix that. Okay, now I want to give you one more example here, and about how sometimes your brain isn't always your friend. Multitasking. Yeah, some of you may be doing it right now, but if I said to you, stop, I can tell you scientifically that multitasking doesn't work for any of us. Your belief system would tell you, well, it works for me. I do it all the time, right? So that's wrong. That reaction comes at a subconscious level. No, I'm just going to say to you that the science is that multitasking doesn't work for any of us. That if you multitask, you don't do the job as well, you don't do it as quickly, and you don't do as good a result. Okay? That's the science of it. Don't shoot the messenger. But if you're, it's an example of how if I tell you not to multitask because it doesn't work, your first reaction would be, Joe, you don't know what you're talking about. I'm great at it. Okay. I'm just going to tell you, the scientists will tell you, no, you aren't. Right. Okay. So conscious awareness. Here's one of the great quotes. I love the nursery school analogy, and I love this quote as well. We are not our thoughts. Okay. Well, who are we then? We are the observer of our thoughts. Okay. Let me say again. We are not our thoughts. So who are we then? We are the observer of our thoughts. Okay. Once we understand that's who we truly are, then we can start to get into that conscious awareness and understand that because I've exhibited these certain behaviors in the past over and over, and I've beat myself up and I've called myself names, it wasn't really my fault or your fault. It was the programs in our brain. Okay, so if you can stand outside and not be Wile E. Coyote, but watch Wile E. Coyote on TV, you can see what's going on. Okay, stop blaming yourself is one of the points I want to make here for the things that have been programmed in your head, because your brain is working, those reactions are working on autopilot. It's not your fault. Okay, once you can separate yourself from that idea that your brain is not you, you are not your thoughts, rather you are the observer of your thoughts, then you can start to make changes. And it will also divorce you from that feeling that somehow you've messed things up here. Okay. Again, back to the analogy, you can't let the kid in the nursery school screaming for ice cream run your trading. Okay. Okay. The big picture versus the pinhole reality. Your subconscious only knows what it has experienced. Okay. Your cerebral cortex, your conscious awareness, can look at the whole big picture of the world and say, yeah, see that over there, see that over there, see this over here. But your subconscious can't. It has a pinhole reality of what you've experienced, and that's it. Okay. So, and the pinhole reality, as we all know, is never the real reality. Okay. So we have to learn that conscious awareness so we can get out of that pinhole reality and see the big picture. Okay. So people often say, oh yeah, money management is key, discipline is key. And in a sense they are, but it's sort of like saying, well, to get from, Palm Springs to LA, you need a car. Okay. What road do I take? Where do I get the car? How do I put gas in it? If you're not familiar with any of that, that's kind of like saying money management is important or discipline is important. Until you understand why your discipline isn't in your trading life, like it may be in your other sections of your life, it's going to be very hard for you to make that stick, okay? Because you may be able to override some of those neural pathways that want to do the things the same way all the time. But as we've all probably experienced, once in a while, they're going to re-pop up, okay? So the only way to stop them from re-popping up is to rewire them and start sending new information down that pipeline, okay? And it's so much easier to do that if we understand what's actually happening, okay? We understand that there's many parts of the brain. We understand that the subconscious is reacting at a level that we can't possibly comprehend. And we understand that we have to be the observer of ourselves and understand that we are not our thoughts, we're not our subconscious reactions, okay? And once we understand that, then we can start to introduce the change. Okay, so part of the knowing is knowing that the conflict is coming and that we're going to prepare for it. Okay, so the conflict is going to be, you're going to freeze, you're going to move your stop, you're not going to use a stop, you're going to chase the market, you're going to not take profits when you were supposed to, you're not going to follow your plan in some way. Okay, so that conflict is coming. We all know it is. It's going to happen for all of us, and knowing how are we going to prepare. So we're going to give you a couple of things to help you with that. And believe me, they are not hard. Like I've said to you, the actual physical science of figuring all this stuff out must have been, at the genius level. But when it comes to actually understanding it and implementing it, it's at the very, very, very layman's level, which is awesome for us. As traders, we only know, is it going up? Is it going down? Okay. As I said, your brain's first function is to protect you and survive. So it always wants to do what it's always done because you've survived this far. Okay. It's not an optimizing organ. Okay. It's not trying to optimize your life. It's trying to just get you through to the next day. All right. So keep that in mind. Okay. So again, the first step here is to understand we're not our thoughts, we're the observer of our thoughts, and that we're going to have to step outside and observe ourselves as a first step in order to overcoming and changing the things that have been going on that aren't serving our trading goals. Okay, so you simply cannot live in that first reaction if you're going to be successful. You simply cannot. So those things that are pre-programmed and that are causing problems and conflict, the obvious, to state the obvious, you can't live in those reactions. Okay, so that's part of the understanding, right? Now, as I said earlier, belief systems are actually groups of cells that are physically knotted together, and they resist being broken apart, and that's why we resist change. So new connections are going to be resisted, all right? So what I'm going to tell you today is going to take some time to do, and I don't mean years, but weeks maybe, maybe 3-4 months maybe, but you can do it, okay? These programmed reactions happen at lightning speed. So those subconscious program reactions, I remember 30 billion chemical reactions per second in your brain. So we have to have a way to interrupt and flip the switch for that. Okay, so this is the best thing that I'm going to tell you, I believe, today, besides the understanding and you're not your thoughts, you're the observer of your thoughts. The best way to flip the switch is using the bridge for the brain, okay? The brain, for all its sophistication, is actually easily fooled. you've all probably heard of the basketball practice where there were 3 groups shooting baskets. One group did nothing. One group went out and physically shot baskets for half an hour twice a day, and the third group only practiced in their head for 30 minutes twice a day. Now, the first group, no change in their ability to shoot baskets. The second group who physically went out and shot baskets had a very large improvement. And the third group who didn't go out and shoot baskets at all, but only practiced in their head, their results were almost as good as the people who were physically doing it, and certainly far higher than their initial, testing would have indicated. Okay, so they didn't do anything physical. All they did is practice in their brain. So again, that shows you your brain, it's easily fooled or easily influenced or easily rewired, however you want to think about it. So if you have a pen, I'll write this down. I'll repeat it a couple of times. Okay, so this is the bridge for your brain. Okay, and it's just a sentence, and you can work for anything that you're having trouble with. I used, and I used is important. I used to have, that's important. I used to have trouble, and I'm going to use stop losses as my example here. I used to have trouble with stop losses, and I wouldn't get out when I should. But now I know that I need to honor my stops immediately, no matter what. So the bridge is this. Starts with I used to, then the habit that you need to break. You write it down. I used to chase trades outside of my system. Okay, but now I know that that doesn't serve my trading goals and I lose money. So now I only follow my entry procedure or whatever. So the important parts are I used to, write out your problem, followed by but now I know, and you write out your solution. Okay, now if you keep doing that every day and it's only one sentence, your brain will build the bridge exactly like the basketball shooter builds the bridge in their head for shooting baskets without actually physically shooting baskets. Okay, that's the most powerful technique that there is, and it's so simple. It's one sentence. Okay? It will use the brain's automatic electrical impulses to rewire itself or send different thoughts down the same pathway. Okay, so you can say that to yourself during the day. It probably helps to write it. But in terms of writing, there's another thing you can do. You can write that sentence down, or you can write, oh, by the way, this is far better than any mantra that you can conjure up. Oh, I need to use stops. I need to use stops. I need to use stops. Or I can't chase a market. I can't chase a market. You can repeat that all you want. It will never work as good as the bridge. Okay. Again, we're talking hard science here. That's the way the brain is rewired through that bridge, and it's one sentence. Okay. Again, I used to, blah, 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 but now I know, and here's my fix. Keep writing it out, and your brain will start, that will become your new subconscious reaction. Okay. The other thing that you can do, since everything in the world is energy and the brain's impulses are electrical, you can take your finger along the page of that sentence, and what you need to do is at every word, you try to feel the electricity from the word run from the page up your arm and into your brain. Okay. That will help in the physical sense of getting that information into your subconscious so that it becomes your reaction. Okay. Right. Now, some things to know about the brain that will help you. Brains like decisions. Okay. So every time you do make a decision to get out of a losing trade, or take profits where you're supposed to, or follow your strategy the way you designed it. The brain actually likes that. And if you get used to doing the decisions properly as you've laid them out in your cerebral cortex, when you had time and you could think, rationally and slowly and consciously about it, if you keep making those decisions in real time in actual trading, the brain likes that. It likes decisions. Okay. And it also likes, believe it or not, the philosophy that pretty good is good enough. Okay. You don't need to be perfect. Your brain actually likes that. Listen, I'm not the scientist. Okay. I'm quoting the scientists here. I'm telling you what I've learned from hard science. Okay. I'm not woohoo. I'm telling you what I've learned. So they're telling me that the brain thinks pretty good is good enough, and that the brain likes decisions. Right. So you don't need to be perfect. Okay. In your trading or in anything. Right. You just need to do the best you can do. The struggle to be perfect leads to conflict. And what happens when we have conflict in our brain? Well, we go back to old habits that aren't serving us. Okay. So let's adopt the philosophy that good enough is good enough. We don't have to be perfect. We don't want to have the conflict. We don't want to go back to the old things that we used to do every time we had conflict. Okay. Also, that will stop us from the train of, and this is a big one because I've suffered with it for sure, of just one more indicator. If I had just one more indicator, my good system could be even better. If I just piled on some more layers, pretty soon I'll get this thing perfect. Don't trust me on this. Has it ever worked for you? If you've enjoyed some level of success in your trading, I would venture to say that you got to that level not by making it more complicated, but by making it more simple. Okay. And that came after some pain and some trying of what I just said. One more indicator. Boy, I could be perfect then. Okay. Remember, brain likes decisions. Brain thinks pretty good is good enough. Brain doesn't want conflict because then it's going to go back to old habits. Okay. And again, so that one more indicator is not going to help you. Okay. All right. So that's that. Those are the important things, guys. Again, you are not your thoughts. Okay. You are not your thoughts. You're the observer of your thoughts. Okay. How do you change things? Use the bridge. I used to blah, 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 but now I know that blah, blah, blah. Okay. You write that out every day. And in 3 months, you're going to be a better trader. Okay. Now I'm going to talk about something just a little bit here at the end. Okay. That has nothing to do with neuroscience, but it has a little bit to do with thinking about the market. Okay. And I don't see anybody really talking about it. And I can tell you it's how I operate in the market myself. So I wanted to share. And it comes down to, what does the market know? Okay. I can tell you the one thing the market doesn't know. It doesn't know where the hell you got in. It doesn't know your entry price. It doesn't care. So why do we base so much of our decisions of something the market doesn't know about or care about? Okay. Stop. Let me give you an example. If I'm in a position and I'm trading the ES for a couple, 2.5 hours every day, okay, the E-mini futures in the S&P, okay, sometimes half an hour if I get a good trade-off to start. I know that the market knows where the recent lows are and the recent highs are. It knows that. Doesn't know where my entry is, but it knows market highs and market lows. So if I look at a chart, I can see that it's almost always Not all, no, let me take that back. It is in a lot of cases, a significant number of cases, a good time to take profits when the market approaches an old high or an old low. Okay, a lot of times it's going to pause there, make a slightly higher low, or a double bottom, or a very marginally higher low, and then it's going to reverse. So that's one hell of a good place to be taking off profits for at least some of your position. Okay, sometimes it's obviously going to blow through, or you wouldn't have any trends, but that's a good time to be taking off some of your position, and that has nothing to do with where you got in, has nothing to do with your risk reward ratio, which I'll get to in a second. All right. It has to do with what information the market's telling you, or what the market's showing you, actually. Okay. Now, if another thing to do with entries, if I get in at 100, say, and I'm just going to use round numbers here in a hypothetical example, if I get in at 100 and my stop's at 95, and the market goes to 96 and keeps, and then tries to creep back up, am I going to keep my same profit target now that I've been 80% of the way to my stop? Does that make sense? If I was trying to make, let's say my risk reward, which again I'm going to get to, let's say that it was my target was 108. Okay, it's been down to 96. Okay, so now I've only got 1 point of leeway on my stop, but I'm still trying to make 12 points on my target. That doesn't make sense to me. That isn't how I trade. I see a lot of YouTubers say they trade that way. I worked in a trading room for a big bank. The best traders I ever saw, they were boom, 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 boom. They weren't having 3-to-1 or 2-to-1 risk reward ratios. I can tell you that. So consider where the market's been. The market's a constant flow of information. Consider where it's been. So if I'm offside on my hypothetical trade, I'm offside 4 points, 1 point from my stop, and it rallies to 98, I may look and say, hey, I was going to lose 5, now I'm only losing 2. Let me at least get some of this off. And then I might take the other half and say, oh, if I get 2 points on the other side, I'm out and I'm breaking even. Okay, that's how I trade the market, and that's using the information that the market's provided. If it just went 4 points against me, maybe my position was wrong. So do I think I should try to be making 12 points from there? Probably not. Okay, so the market's a constant flow of information. Use it. Conversely, if you get in and the market goes, a quarter of a point against you and starts going your way, well, hell, you might want to stagger your exits and maybe keep one that's a little higher than you first thought, because obviously you were on this one. So use the information that the market's giving you. The market doesn't know where you got in, and it doesn't care. Your entry price is irrelevant to the market. Okay, but I see people build strategies using that entry price long after whatever entry technique you use to get in is probably having almost zero influence on the market, but they're still in on this idea that if, I have to risk 1 to make 2. Listen, guys, there's probably good traders who can risk 1 to make 2 and make good money down. I haven't seen them. Almost all of the good traders I know make money because they're right a lot more often than they're wrong. And this is my own example. I'm probably right upwards on the high 70% of the time on most days. Okay, my risk reward at the end of the day is probably between 0.8 and 1.2. So basically, I'm making 1 and losing 1, but I'm right, 75% of the time. Okay, most of the good traders I've seen, that's how they operate. I haven't seen many good traders who are right 50% of the time. I haven't seen any, but I'm sure they exist. So don't be PO'd with me. I'm sure they do exist, but I haven't seen them or know them where they're right 50% of the time, but their risk reward is 2-to-1, and that's how they make money. Listen, anything's possible in the market. You can't discount anything. I'm just saying I haven't seen it, but I have seen a lot of people who put probability far ahead of risk reward. But everything I see in the market talks about risk reward like it's some sort of magic formula. and they say, oh, you only have to be 50% accurate if you're 2 to 1. Wow. First of all, 2 to 1 is really hard. Really hard. 2 to 1 is hard. I don't get many 2 to 1. I might get a couple 2 to 1 trade in a week. Okay. So it's hard. I think risk reward and probability, well, not I think, I know they are. It's like a teeter-totter. Okay. If one goes down, the other goes up. Now, in my experience, probability is easier to master than risk reward. Okay. I think you're probably better. In my experience, in my observed experience, having worked in a large trading room, the best traders are right more often a lot than they're wrong. And they're willing, if they don't like the trade, to take 1 tick or 2 ticks or whatever and just get out and it's, go to the next one. Okay. It counts on the 75%, but again, because they're using the information that the market's giving, all right, as they get in. Okay. So don't, my thought here is use the market information. Okay. Don't be tied to some preconceived notion that the market doesn't care about and is history now anyway. It doesn't care about your entry price, that's for sure. And remember, the further the market gets from your reason you got in, the less influence it's having. So the further you get from that entry price, either time or price further, the further it gets away in time or the further it gets away in price, the less influence whatever edge you had is acting on the market. So now your edge is minimal. You're basically just saying, fill me market or stock me out. Okay, that doesn't make sense to me. Okay, so I always use the information that the market's providing as a constant flow. Okay. All right, guys, I'm going to hop. That's it for me today. I'm going to hop over and see if I've got any questions here, if I can figure out here how to.
That's what I'm here for. I'll help you with that.
Okay. All right. Jeff's got it. Jeff's got it.
Okay. A lot of questions, some comments. And first of all, Joseph wants to know, do you have any recommended reading on the subject?
Yeah. Well, I guess the Bible, and it's probably a little bit ahead of its time. Mark Douglas, Trading in the Zone. There's another guy that I like. His name is Steve. He's an English guy. Steve. Oh man. Can't remember, but if you look up trading psychology and the name Steve, it might came up. I can't remember his name, but he's more recent. Okay, but it's Trading in the Zone. Mark Douglas is the Bible, and but it's older. Okay, and some of the stuff I've told you about today, actually, I've taken it from things not to do with trading and applied it to trading. Okay, so some of this comes from what you might call the woohoo books, right? What used to be woohoo books are now actually hard science. And I've just applied it to trading. So I don't think Mark Douglas for sure, because this information that I've told you today wasn't there at the time. Or is it Steve Jones? I can't remember. Maybe Steve Jones. But they'll cover this, but they won't cover it in exactly the way I do. The quote, are you your thoughts? You're not your thoughts, you're the observer of your thoughts. That's an Eckhart Tolle quote. He has nothing to do with the market. He's got a lot of great sound bites. He's boring as hell to listen to in an extended period, but he's got a tremendously insightful sound bites, and that's one of them. So that's where that comes from. The bridge doesn't have anything to do with the market. I've never seen anyone talk about the market who uses the bridge. So I borrowed and put it into the market context.
Rob says it's Steve Ward. Michael Bryden said another one you can read is Alexander Elder. I love Alex. He's good. Let's see. Steve Ward is a British trading psychologist.
Steve Ward. Yes.
Yeah.
Yep.
All right. Thank you for that, Rob. Appreciate it when people help in the audience. Sometimes it helps a lot. Let's see. Whitney said earlier, this sounds like the law of attraction with some scientific basis, changing your subconscious to bring about reality.
Sure. Yeah, I mean, the law of attraction is more that now you are a little bit woohoo, I think. You're like, in fact, you're getting into it. Yeah, I'm not sure you can just will yourself to bring things to you, but you can certainly rewire your brain to be more. Um, Let me see. How am I going to say this? To be more, to have more ability to reach out and grab them when that opportunity presents itself. So I don't believe that. I do believe to a certain extent you attract things, but I also definitely believe that nothing falls in your lap. You have to reach out and grab it.
Let's see. Tom wants to know: do you have a trading site? Is there a place that somebody can connect with you?
Well, you can email me. I do run there's a advisory service, an option advisory service that I do have. It's Joe Duffy 6813@gmail.com. Joe Duffy 6813@gmail.com, and I can send you information.
Okay, let's see. Nate wants to know, where did you get the bridge from?
Oh, I can't remember. But it wasn't a book. It wasn't a trading book. I can tell you that. It would be something to do with neuroscience and regular, in psychology, in life, and change like that. I just took it and applied it to trading. But it's really, that's the best technique that I've seen for realizing change.
Oh, Paul also said it's Ward. So we're getting a lot of help from everywhere. Steve Tuttle says a couple good ideas are Complete Guide to Trading Psychology by Steve Burns and Holly Burns. He even dated it. So that might be another way to check out.
Yeah, sounds great. Thanks, guys, for your help.
That's all. That's all I think we have for questions. I did want to show the add-on that we designed with you, kind of give people an idea for that. Joe, I want to say thank you for coming in. I appreciate it. And a very, very interesting topic.
Thanks, buddy.
All right. We'll see you again soon.
Okay. Thanks, Michael. Thanks, Jeff. Sorry. Michael's sorry, buddy.
No problem. Get feeling better. I hear that COVID can last for a while.
Yeah. Okay. Thanks again.
But I haven't had it for a while. Right. So anyway. Thanks,
Okay.
Joe.
Thanks, Jeff. Thanks, guys.
All right, very good. Let me go ahead and do this. We do have, I need to make myself the presenter. Then I need to show my screen. And need to press all the, Michael says, Ari, the bridge is on Amazon. Okay. Thank you, Larry. Ari Keeve also has a few books. So there you go. All right, very cool. I think that catches us up. Thank you for all the comments, attendance, all that kind of good stuff. It's good to see. I hope you're enjoying the session today. If you are, you should have liked the stream on YouTube if you're watching this there. I do want to talk a little bit about the Joe Duffy scoop system. I do have a screen. This is just the S&P 500. I'm going to actually kind of go back into the size and just show you how this works. And we won't spend very long on this just because we want to move on and keep everything moving really well today. But let's go ahead and kind of talk about kind of what the scoop is and kind of what it does. So here's a picture of the box. And here is kind of the systems that are included. So he's got what he calls the absolute performance indicators, two versions of those. And then he also has a system called the scoop system that's in there, two versions, one that's for using an intraday and one that's used for use end of day. Okay. And here's what it looks like. Actually, it does come with like an expert advisor, commentary, different signal types that you can use, whether or not you're conservative, aggressive, very aggressive, et cetera, et cetera, et cetera. So if I come back in here, this is just a chart of the S&P 500. I wanted to see how the markets look for the day. But if we kind of look in here, I'm going to kind of zoom in just a bit for you. And you can see just some colorations right here. Right here where it says 1, that means if you want to be really aggressive about an S&P entry, you could consider entering here, okay? The current trend is bullish. Only long positions should be considered at this time. A new bullish entry signal has occurred. This 2 histogram is greater than 0, and the oscillator that he uses is less than 0, okay? This is the most aggressive signal. So if you want to be really, really aggressive, you can look at these ones. We just got another one on the S&P just recently. Here, once you get to the 2, is basically going to be a type 2, a more conservative signal, what he calls a sweet spot. And then if it also pulls back just a little bit more, there's going to be conservative entry. That didn't happen. Okay. Once you start to see these blue diamonds on the chart, you might wonder what those mean. Let me go ahead and kind of just highlight a chart. And basically, it's just an indication that this instrument is showing bullish momentum. So even if I hover over this, it shows bullish momentum. So it's just a confirmation. If you're already long, you're probably in the right direction for this and things. This is not an entry signal. You should watch the scoop oscillator and the histogram for an entry signal. It's just a confirmation. Okay. There have been 9 bullish momentums in the last 2 months. The momentum is strong enough to trigger a buy setup. So it gives you some advice, some things. Of course, it does offer scanning as well. This right here is a daily chart. Thanks for asking, Scott. I'm going to send that to the chat. Hold on a second. Okay. I can, of course, one of the things I've been talking about with Metastock yesterday and today is how good scanning is. So if I want to take this, I want to find some of those setups in the market, I can use our scanner. That scanner is going to find market opportunities right now. It's not going to be yesterday's results. It's not going to be Friday's results. It's real time. So to do that, I'll show you real quick. We click right here on the power console. We're going to come over to the scanner. And hopefully if I just type in scoop here, it'll come right up. And it does. All of the ones that are available. If I just want to find a long entry, I'm going to go ahead and kind of select that one. I'll move it up as the one that we're scanning for. Go ahead and hit start scan. That's all I have to do. Within a few minutes or so, it's going to come up with a list of the stocks that have an entry or an exit. And so there you go. Very, very easy. This product does come with training, shows you how to reuse everything. And as I had said at the top of the hour, Joe Duffy's won some trading competitions. That's when you try and combine competition with contest in your mind. It comes out weird. But he's run several trading contests here in the US. And it's a system that's custom designed for using with US stocks. So out of those markets, we have 2 type 1s, Brown-Forman, BFB, Las Vegas Sands. We could open up those charts, look at them, see if we liked them, trade them. But that fast, we were able to go through and find out the bullish setups. I love the scanning in Metastock. It makes it so easy, so fast. I can scan whatever instrument that I want. And I can use the Joe Duffy Scoop system to do that. So I'm going to go back into the PowerPoint and we'll kind of just wrap up this particular system. Things that I like about the visual, the Scoop Suite. And I think what I'm going to do is next time I bring Joe in, I'm going to have him talk more about the Scoop Suite. We haven't talked about it for a while, and it's a great indicator. So, but it's a visually intuitive indicator. It's got some easy to understand systems. You've got expert advisors. You can apply it to any market, to any time frame. You can also do with it all of the systems that he uses. He did rigorous system testing with, and it does complete. I said with training, it's actually 5 training modules that are available to you as soon as you order it. So we also do back it with our money back guarantee, so you can try it. If you're interested in trying it and you don't have Metastock, I'll remind you, Metastock's been rated the best software in its price category 31 years in a row this year. There's a reason for that. It's all the scanning, the testing, the expert advisor. But if you don't have Metastock, we'll give you a free trial. So you'll get a $4.99 price here at the webinar. You get a 30-day money-back guarantee and a free trial to Metastock. So there's a couple of different ways you can do that. You can give us a call, 800-882-3040. You can visit us at metastock.com/sales-chat. You can also go to metastock.com/conf-promo. I'm putting all these in the link, metastock.com/conf-promo. Great collection of systems. Person that's won several trading competitions. Great trader. There you go. Metastock.com/sales-chat. If you have any questions, if you want to see some more charts, et cetera, et cetera, et cetera. Just looking to see if we have any questions. We don't, that I haven't answered anyway. We have hundreds and hundreds of questions now. So let's go ahead and kind of just, let me go over to the next slide. I want to say thank you to CMT Association. So very, very quickly, CMT Association, highly respected, well reputed. Great reputation. I don't know if even reputed is a word. I should stop using it until I find out. Tyler will come in. Tyler Wood is a good friend of mine from the CMT, and he's actually in Dubai somewhere right now. He'll usually come in and talk about how having a CMT designation after your name can be helpful for you. If you want to work for a bank, it'll be helpful for you in that designation process. If you have assets under management and you want to get more CMT association, they have actually proven or documented results that'll help you get more assets under management. They do a great job. Very, very good, respected organization. If you go to cmtassociation.org, you can find out more information about them. You can also call them at 646-652-3300. Also want to take a second to thank you. Another of our sponsors, another great, well-respected nonprofit organization, the American Association of Individual Investors. You can find out more about the AAII at AAII.com. For some reason, I have a hard time saying that many vowels in a row, but AAII.com, they do a great job too. They do research reports, they do sentiment surveys, they have a whole active investors division that works on kind of shorter term trading as well as longer term investing. So AAII.com. If you want to find out more about those. So, of course, Metastock, and the slide is up. That means it's time to do prizes. So I'm going to ask for some help for you. I'm going to explain kind of how it works again. I'm going to kind of figure out what the prize is going to be, all that kind of good stuff. What I need from you is whether you're on YouTube or GoToWebinar, I want you to give me a number. That number can be anywhere between 1 and I think it's like 8,800 right now. Actually, here. I'm sorry, 9,041. 9,041. I was actually on the wrong column. So anywhere between 1 and 9,041, give me a number there. I'm going to tell you what the prize is going to be. And then I'm going to basically, the number you select, I'm going to look at my registration. So if you're watching this on YouTube, there's a few things that I want you to do right now. And this is all up to you. I can't force you. But I'd like you to like the channel and subscribe to the channel because that helps us a great deal. We really appreciate it. And then I'd like you to register. There's a pinned link at the top of the chat there that'll take you to our website and you can register and then you'll be on the prize list. What's the prize? Well, let's find out. Hold on just a second. Where's my prize list? We get you. Okay. All right, I got to it. All right. Okay. This one, if you were here yesterday, you probably saw Vince Vora speak. He talked a lot about his victory method. He likes to talk about money management and how to find the right trade at the right time. Vince Vora is a good friend of mine, a long-running partner, the author of some of our best-selling systems in Metastock. Absolutely fantastic technician. One of the things that he recently started giving me access to is his newsletter. His newsletter costs $97 a month, so it's pretty affordable. With it, you get weekly or daily updates from Sunday to Thursday. There's a market recap webinar that he does and a video that he does every week. So we're going to give away access to that for 1 month for $97, and we're going to give it to, thank you for the numbers too, by the way, Joseph, Michael, Tom, Bernadette, Kathleen, Paul on the GoToWebinar side, Mike and Stephanie on the other side. We're going to go ahead and go with $34.56. So let me go over to my prize list here, and I'll just go to A3546, or actually, yeah, that's fine. And that is Mr. Praden, R. Praden, in the U.S. this time with an AOL account. So R. Praden, if that sounds like you just won. What will happen is I'm kind of going through the prizes. I'll send the information for trading wins. I'll send you a welcome package, and that'll all happen between now and the end of next week. Probably not. It just depends. Probably won't be this week, just because I'm busy running the conference. But all the prizes will be distributed to you early next week. So congratulations. If you're in the comment, if you're watching now, let's see it in the chat. Say something. So, but congratulations. Good to see you. I'm glad you won. Okay. Our next presenter, our next guest is another good friend of mine, another great technician. His name is Serge Berger. And I always say that, and I'm like, I wonder if I'm saying it correctly. I believe that is correct, Serge. If I've been pronouncing your name wrong for all of these years, you better correct me at some point. But Serge Berger basically is an active trader since 1998. He's been a financial analyst. He's dealt in fixed incomes at JP Morgan. He was a prop trader in equities. He does a really, really good job. The strategy that he's going to show you about options is really, really good. It's something that you can implement in 1 hour per week. So let's go ahead and get you started. Serge, how you doing?
Hey, Jeffrey. Sorry, I was late on miking up here. Actually, I was here. I just didn't realize I have to go unmute. So.
Yeah. It's only if there's a delay of like 30 seconds, I start to get nervous that we're going to have to play the videos. But you're doing great. No problem.
Perfect. Well,
I just sent the screen over to you.
I see it. Yeah. So I'm going to quickly bring that over. 1 second here. Can you guys hear me okay? Everything's good on that?
You're coming in great.
Awesome. All
right. Now we're seeing a screen. Now we're seeing a full screen. Okay. Everything's coming through pretty good.
Very good. Very good. Okay, cool. Well, listen, I guess I will get started here. I am going to turn my camera off, mostly just because I don't want to distract myself. But let's get started here. Basically, what we're going to look at together here today is how we can take advantage of, extremely overbought or oversold equities or ETFs, and how we can take advantage of that either with equities or ETFs or futures, using those instruments as well as options if we want to. So there's a way to do that with each one of those. So if you're interested in using equities, there's a way to do that. If you're using futures, there's a way of doing that, and of course if you're using options and ETFs, there's a way for that too. So I'm just going to quickly make sure everything is good here. Perfect. All right, cool. All right, so that's what we talk about. Quickly, risk disclaimer. This is very important. I always like to just point out, trading and investing does carry a lot of risk. So just do make sure that you educate yourself properly on trading and investing, and it's a serious endeavor. So I would encourage everyone to treat it as such, and really educate yourself, which of course is what this is all about, is to make sure we have proper education. So just quickly, before I turn off the camera so I can focus on this, but I just want to quickly mention to everyone that we are exiting here the month of February, heading into March. And March tends to be a bit of a choppy month, and then if things go right, maybe April is a bit better, but we've had such a strong January, February that I'm not quite sure that typical seasonality is going to be of much help over the next couple of months. So maybe be aware of that. And then last point, just on the broader market, the concentration in the market is still very heavy. That's not to say that the market's going to crash here. It's really more just to make sure we respect that, because if you think about it from a market concentration perspective, if everyone is piled into a few stocks and those stocks make up the majority of the indices, just mathematically, it doesn't take much for that to kind of snowball in the other direction for a little while, right? I'm not talking end of the world here, but it can be enough to really kind of, ding some portfolios. And so I just want to quickly make sure that everyone respects, or at least is aware of that, I guess is the best way of putting it. So I'm going to put my camera off, and that's just so I can focus on this and not get distracted here. But what we're going to look at together here is these extreme overbought and oversold situations. And typically when something gets extremely overbought or oversold, we reach these points where it's a little bit like gravity just kind of comes kicking in. So you can see in this particular stock, this was Meta, I think it was. You can see how we got very oversold, and then we got these oversold signals, and the stock started to rally, and then we got these very overbought signals, and then the stock started to come off. Or here in this example, you can see this particular stock became very overbought, then we got a down arrow, and it just meant that the momentum's exhausted and the stock is likely going to go lower. Or in this issue here, you can see that the stock routinely got, I think this was an ETF, it routinely got oversold, and then we got the up arrows and it would start to bounce. Or here, this is an individual stock, you can see it got very overbought, and then we got a down arrow. And so this is what we like to focus on, because when we reach these extremities of emotions, we get to a point where the market is just extremely stretched. And when the market gets extremely stretched, it's typically when there is great opportunity. And so I'll quickly introduce you to John. John actually came to me about this point a year and a half ago, or a bit more, I think. And he had an issue, and the issue was that he lost a lot of money. And so his account went from, he almost made $1 million over the course of 6 months. This is his actual broker account P&L. And then you can see he lost it all again in the matter of just a few weeks. And the reason that happened, for the most part, was because he was essentially chart chasing, and he got extremely concentrated, and then things didn't go so well. And so when we look at the current market here, what I see is a market that might not be as easy going forward as it was for the past few months. We've had a very strong rally, a very good rally. And I just think we're going to see lower stock market returns going forward. And to take advantage of that different market regime, I think there are some crucial adjustments that could be considered to existing strategies. So this is not about reinventing the wheel, it's just making some adjustments. Now, before we go anywhere, I'd like to just quickly ask everyone, how many people in here have ever found an interest or need, or have it as one of your goals to generate an income on whatever, on monthly, on a quarterly basis from your portfolios, from your investing, your trading activities? Type in yes, why, with a Y into the chat box if that is one of the things that you are considering doing. So, and the reason I'm asking that is because a lot of people have that goal, but also it is important to understand that that is a very difficult thing to achieve unless we have the right strategies. So again, type in a quick yes in the chat box if it is one of your goals to have, to generate some sort of an income from the market. Again, be that monthly or quarterly. And a lot of people have that goal, like I said, but what I found over the many years is that there's lots of misconception as to what it takes to make that happen. So typically speaking, lots of people, when they try to achieve that goal, don't understand that the randomness of the returns throughout the year make that a very difficult thing to achieve. So if you look at the monthly performance of the S&P 500, you can see there can be really good months like we've had in January, February. There can be really bad months, and kind of anything in between. And so directional strategies become much, much more difficult. Dare I say, mostly almost impossible to make money on a consistent basis like that, unless one has a bit of a less directional bias. And so for lots of people, the profit and loss curve, the P&L, looks a little bit like this mountain range where you can see, they make some money for a while and then they give it all back, and then they make money again and they give it all back, and so on and so forth. And again, that's a very typical behavior, and that makes it very, very challenging to make money on a steadier basis. And so, ultimately that leads to frustration, as you would imagine. So loss of confidence, and it leads to breaking rules. And before you know it, we essentially start gambling, and we don't want to do that. And so this is where I was working, or am working, with John, and we had this big loss for him to get over psychologically and kind of redo his mindset. So what we're looking at here, and what I'll show you here right now, is a strategy that allows us to look for extremities of moves. Again, steep move, and then it goes vertical. Steep move, it goes vertical, and at some point we reach this sweet spot, dare I say, where we have a really high probability of a repeatable process that has, for us, been able to generate much steadier returns. And so it can happen on the downside as well. You can see a steep drop and then followed by a vertical drop. And at some point, this stock or ETF or whatever it is gets so oversold that it's essentially ripe for a bounce or some sort of consolidation. But again, of course, we have to find the right moment. How many people in here have ever used options before or are using options? Type in me and me if you've ever used options. Because again, we're going to look at this chart here, and I'll show you there's a way of doing this in different ways. But one thing we want to do is we want to be able to use different asset classes for this. So we can use equities, ETFs, we can use options, and again, like I said, we can use futures as well. In terms of options, there's a bit of a misconception I found that options trading has to be done using short-dated options. And I'm not going to go through all the details here of this, but I just wanted to point out that short-dated options trading, which is in a big boost over the past number of years, typically over time ends up very badly. And I want to preface this by just making sure that people understand that typically short-dated options is just a matter of time until the reckoning comes. But again, it can take a long time. It can take sometimes years until that comes, and then it typically leads to some really bad things. So I'm going to show you how we take advantage of that in a different way. But what we're going to do together is we're going to look for these steep slopes and then look for essentially an opportunity to do something when the move gets so extreme. And I'm not talking about a little bit overbought or a little bit oversold. I'm talking about real extremes where something gets extremely overbought or extremely oversold. Here in this case too, I think this was Netflix here. You can see it got steep and then it got so overbought that it simply just would consolidate for a period of time. And so it's at those extremities of emotions is typically where we find the best opportunity to put on trades. And so what I'd like to do is I'd like to just take a few minutes and kind of go through one way of doing this, and that is using options. Again, we're going to show you how this can be done with equities and ETFs, and of course futures as well, because I'd like to show you this intraday. Just to kind of preface this, I will show you how we can, for example, take advantage of intraday moves on things like even like NVIDIA. So we get to a point in time where even something, I'm just showing you meta stock here, where something like NVIDIA, this was on a 5-minute chart just a couple days ago, and you can see those down arrows. That's when NVIDIA got extremely overbought, and then it just went straight down. This was an intraday chart. So we can use the algorithm that we've developed here, both on daily charts and then also for day trading. So on swing trading and daily charts. And that's what we're going to show you here right now. But let's have a look at an example here, and we're going to show you Meta here first. And what you can see here is Meta had this really steep move to the upside. Can you all see that? And when that happened, the stock ended up essentially getting to the point where it would, within the steep channel, would rally and go into these vertical overshooting moves. And every time it had this vertical overshooting move, it would mean revert, but it would stall, is really kind of all we're looking for. And so when that stalling happens, is typically where the opportunity arrives. And it's not so much that we're looking for the stock to fall. We just have a really high chance of that stock then ultimately just kind of consolidating. So in the case of Meta, this is the exact same chart that I showed you a second ago here. I'm just showing it to you now here. You can see the stock once again within the channel that I showed you went back up to the upper end of that trend. And then what happened is, in this case, the stock went down. But if I saw the stock move to the upper end of that range, there are a few things I could consider doing. One thing I consider doing is I could potentially take some profits. I would imagine some of you would agree that that's a good thing to do. I could also be shorting the stock or maybe buying a put. Of course, that's a much more aggressive way of doing things. But the thing with buying a put or shorting the stock is that the stock, in this case, must go down in my direction in order for me to make money. If the stock goes sideways or even against me, I will not make money. And that's a problem because if I make a directional bet, I essentially, all things being equal, only have a 1/3 chance of making money. Does that make sense? Right? If I buy a put or if I buy a call, if it's a bet to the upside, or I buy a stock or short the stock, it only is going to make me money if it goes in that direction. And that's kind of a lot to ask for if we're looking to generate a more consistent sort of income. At least that's our goal. And so we want to be able to put on positions where we don't have to be so correct in directionality and timing, and we could even be a little bit wrong. So this is, in this specific instance, what we did. And again, this is a historical example. I'm going to go into the current market here in just a few minutes. But in this case, you can see in February, we actually used April options. And so all we did is we used calls above the market. So we sold a 125 strike call that's up here, and we bought another call a bit higher. And we ended up receiving $1,000 with 10 options contracts, or $100 with one options contract deposited in our broker account up front. And then about a week later, or 6 days later, in this case, the stock did go down, right? And I'll show you examples in a minute where the stock didn't go anywhere. We made just as much money. But in this case, the stock did go down, which meant that the initial money we received, those $100 or $1,000 with 10 contracts, that we were able to buy it back for only $24, which meant we made a profit of $760 with 10 contracts, or $76 with one contract. And the high probability here is that we would have made this money even if the stock went just sideways, or even against me, I think up to 8%. So if you think about that, the probability of me making money in this kind of a setup where the stock can go, in this case, down, sideways, or even against me is really, really high. Can I get a quick feedback? Is this making sense to everyone? But the real trick in terms of this strategy, if we use options with it, is being able to use options that don't expire anytime soon, but we only hold the trade for about 2 weeks. And that's a real differentiator in the way a lot of retail investors are taught to use options, because it kind of flips everything upside down. But it probably works so well because it's the opposite of what most people do. And so if you think about this, when we use a short-dated option, unless this, like if in this case back there in February, I would have used February options. Unless the stock went down immediately, I ultimately would lose money. But by using options expiring, in this case in April, right, and only holding it for 2 weeks, if the stock were to go against me, not only could I potentially, I lose a lot less money, I might even actually be able to make money. And so that is an incredibly powerful way of looking at it. This is, Bob, this is a bear call spread. Again, what we try to do, and I'll show you our algorithm in a second. I just want to show you quickly how we like to use this with options. The real differentiator in the strategy here is that we don't use short-dated options. We use options expiring 55 to 85 days out, but we only hold the trades for 2 weeks. And so by doing that, we're not using short-dated options, which is, again, over time, over my 25 years of trading and investing experience, ends up being a very dangerous thing to do. And we have a really high probability of generating income. So that's really the goal here. Now, here's another example in the S&P 500, the SPY ETF. This happened during COVID. I remember walking into the office that day on March 16th, and I was talking to my team in the morning. We had our morning meeting, and we felt uncomfortable buying the S&P 500 with it being down 30% in 3 weeks. This is during COVID. But we did feel comfortable that making the bet that after a 30% drop in 3 weeks, that the S&P would not drop an additional 18% on top of that over the next 1 to 2 weeks. And so what we did is we sold a what's called a bull put spread. It just means we sold a put way below the market, bought another one against us for protection, and then basically we received $105 for taking that bet. Now, if you fast forward to March 24th, what you'll see is that on March 16th and March 24th, the S&P actually didn't go anywhere. It's at the same exact spot. But we were able to make a profit of 11.4%. And the reason that works is because of the way we use options in this particular case, right? So for those people that like to use options, I just want to give you an idea of how we like to use options, particularly when it comes to this specific strategy. But what I want to show you now is I want to go into the market, and I want to show you actual trades and how the market is working right now. So since we're speaking in the MetaStock conference here today, I'd like to show you as much as possible how we can use this strategy on MetaStock. This works in other places as well, but obviously, MetaStock conference, so we want to talk about MetaStock. So what I did is on the Power Console, I loaded our indicator, the Vertical X Pro, which I'll start talking about now here. And I just started scanning the market in this case, I just used US equities, optionable ones. And I'm going to show you the results that came back just this morning. So if you stick around for the next 15 minutes or so, I will reveal those results. Before we go into the absolute current market, let me show you on some of the more popular tickers how this works. So this is Airbnb. And you can see the stock rallies. It goes from a steep rally into a vertical rally, right? It's always the same slope. We're looking from a steep slope to a vertical slope. And it gets so overbought that we get this down arrow. It's called the Vertical X Pro. And what the Vertical X Pro tells us is that the upside momentum is likely getting extremely exhausted. And in that case, the stock then will either consolidate somewhat sideways, maybe a little bit higher, but most of the times it'll go sideways or lower. Now, there's multiple ways I can take advantage of this. I can either, just buy a put here. I could short the stock or ETF. If it's a futures contract, I could short the futures contract, and I'll show you intraday futures as well in a minute. Or I could do what I showed you before, which is in this case to sell an options bear call spread way up here, right? But the indicator is important because it tells us algorithmically when the stock got extremely overbought or oversold. So all we're making here is a bet that the stock doesn't go up here, which means I could make money whether it goes down, sideways, or even against us to a degree, which gives us a much higher probability of making money. Are you guys with me? Does it kind of resonate? I'll just go through some popular tricks and then we go into the current market. This is another stock here. You can see it goes from steep to vertical. So our indicator, the Vertical X Pro here on MetaStock, then gets so overbought that it gets exhausted, right? So the stock will, in this case, went down. All we would do at that point is either buy a put, short the stock, or sell the options bear call spread up there, like I said. We could also have to see this taking place on the upside, meaning something gets extremely oversold. Like in this case, this particular stock got so oversold that our Vertical X Pro indicator would give us an up arrow here. And you can see that the stock ended up going from 62 to 70. So that's like a 15% move. So we could have bought a stock. I could have, bought a call or anything bullish, or I could have sold a bull put spread. So selling a put way below the market, buying another put a bit lower, receiving the credit. And as long as the stock doesn't go down here, I would be able to make money. In this case, the stock went up 15%. Here's another example. This is Dick's Sporting Goods, DKS. Again, you can see from a steep slope to vertical, the stock gets extremely overbought. And then the arrows print, and once they're done printing on that day right there, it tells us the stock is likely exhausted and is either going to go down or consolidate. And so in this case, again, we could buy a put, we could short the stock. The stock went from 150 down to 136. That's, another 15 or 10% move. Or I could just sell a call spread up here, which would allow me to make money with whether a stock went down, sideways, or even against me to a pretty good degree. So these are all the things that I can do. This is gold, the GLD ETF. You can see it got overbought, and then it went from 185 to 150, or it got oversold. It went from 165 up to 185. It's the same repeatable process that we can use. Foot Locker, you can see the stock gets so oversold that it can't possibly go anywhere but consolidate. So it went from 16 to 19 or something. I could have bought a call, I could have bought the stock, I could have sold a bull put spread, right? Any of those kind of things would work. Here's another stock that got overbought, went from 60 down to 53, all within this consolidation phase. Is this making sense to you guys? So within this now, let's go into meta stock and let's just show you a little bit, what this looks like. Because I do want to look at intraday as well for you guys in a minute. And so the indicator is designed to give us extreme overbought and oversold. We designed this JP Morgan at this indicator while I was working at JP Morgan. So we were working on it for about a year, and then our parameters came back with showing us what it takes for a stock to get extremely overbought or oversold, or an ETF. So this is right now. We're currently right now live in the market. This is the daily chart here in Metastock, and you can see Lyft, ticker symbol LYFT, for example. It got very overbought just a few days ago. We got a down arrow, and so far the stock has moved from about 19.50 cents down. It's bouncing a little bit today. It went all the way down to about $15.50. So when we get that down arrow there that you guys can see on the chart, all I have to do is either buy a put, or I could short the stock if I want to, or redo that options trade that I explained to you guys before, right? So I could sell a call spread up here and take in that income, and then as long as it consolidated or went down, or even went a little bit against me, I could make money. So those are all the different ways of taking advantage of this. If you guys have ticker symbols, I'm happy to type them in. I'm just going to go through a couple of them here that people know. Here's Disney, for example, and I'm just going to zoom in a bit closer so you guys can see this. So Disney got us an overbought signal a few days ago. I think this was a few days ago, like a week and a half ago or something like that. And so you can see how it got overbought, and it's just basically gone sideways so far, right? Now, typically, again, it depends on how you want to do it. One could do a call spread up here. So if I would have sold a call spread up here, I would have made money now because all the stock has done is go sideways. It probably, if I would have bought a put, it probably would have made some money as well. So again, it all depends on how you particularly want to use this. But that's, some people like to use options credit spreads. Some people like to use directional spreads. I typically like to use options credit spreads on daily charts, but I do directional trades intraday. So that is kind of what I like to do. DD, let's look at that. That's DuPont. Let's see if there's a signal. Okay, yeah, DuPont had a signal a few weeks ago. What was that, in January? An oversold signal. Actually, then it had one before there as well. So once we get the oversold signal, I can either buy a call, I can buy the stock, or again, what I like to do is I like to sell, in this case, bull put spreads. So I would sell a put way below the market, buy another put below the market. Same thing here. A few weeks ago, I would have sold a way below the market, and then again, our holding period is about 1 to 2 weeks. We'll go back into the day trading charts in a minute, guys. I just want to show you how this works. And so in this case now, since the latest signal, the stock went from 63 up to 70. And again, we hold these trades for roughly 1 to 2, sometimes 3 weeks or so. The signal before then, you see the stock went from 66 up to 77. So that's how that works. You guys, does it make sense? how this works. And again, we'll look at the day trading charts here in just a few minutes. Morgan Stanley is another one. I'm just trying to think of things I saw for the past few days. Morgan Stanley, you can see the stock gets overbought, and since it gave us an overbought signal, it went from 93 to as low as 83. But again, you can see it stopped going higher, and that's really the point. So I could either, if I want to, I could short the stock, or just sell a call spread up here, right? Sell a call, buy a call a bit higher, and then as long as it goes sideways, lower, or even against me to a degree, I can make money, right? So that's the key here, is to be able to get the indicator right. Because if I don't know what the stock is going to do, it's very difficult, over time to make money. I showed you lift before. I'm going to quickly go back to that one because it's a kind of a new signal. Let me just quickly go back to it. I want to show you recent stuff here so you guys can see that I'm not just making things up. But this is lift, LYFT, and again you can see the stock had overbought. So on that day there, I could have bought a put spread, or just short the stock, or again do that bear call spread where I just simply make the bet that it doesn't go up here, and that so far would have made money. So that's how I like to do it. Let's see here, and I'll go into the day trading setups as well here, if you guys want to. ETFs. Yeah, sure. Let's look at ETFs. So I think the dollar, for example, is one we could look like. UUP is an ETF. You can see the dollar got oversold. This is the UUP ETF right there. So, and then we basically rallied from 27 up to 28. That's a pretty big move from a dollar ETF perspective. So you know, so I could buy a call, I could sell a bull put spread. Any of that is fair game. It just depends on what one prefers to do. Is kind of the thing. PAYC. Let's see. All right. So this is, yeah. So this is an individual stock now that we're looking at, PAYC, and then we'll look at the intraday stuff as well, so you guys can see how that works. Paycom, you can see the stock had oversold, and then went from 155 to 205 or 210 or something like that. So again, I could have bought the stock, I could have sold a bull put spread. What I do here specifically is less important than the signal itself. But let's look at the day trading stuff as well. So I'm showing you this here on the daily chart. It's the same exact concept intraday. So let's look at NVIDIA. So this is NVIDIA. Let me quickly bring this over here. And if I activate the window here, you can see NVIDIA. Again, this is a couple days ago. I think we haven't had a signal an intraday signal in NVIDIA since then, but I think this was Friday or something like that, last week. And again, you can see how those down arrows appeared, right? And these down arrows appear from our vertical X Pro indicator. It's available. It works on multiple platforms. I'm showing it to you here on Metastock because this is the Metastock conference. And so you can see how NVIDIA then dropped from $120 down to $780. That's like a $40 drop. So intraday, I personally like to use directional trades. So in this case, the protocol would have been to buy a put, short NVIDIA maybe, if that's what one wants to do. I personally don't do options credit spreads intraday. I just like to do directional trades. So in this case, again, the stock dropped like $40 within, what is that, an hour and a half or something like that. So that's typically how I like to do it. Does that make sense to everyone? And it's a great question. Do you use credit spreads intraday? You certainly can, or one could. I've just found that if I keep it simple and just do directional trades intraday, it's also from an execution perspective just quicker than doing a credit spread, which is on a swing trading chart. Just to me, it's a bit simpler. If that makes sense. Apple, sure. Let's have a look at Apple. Apple. Just trying to find the ticker here. All right, so this is Apple yesterday, bounced a little bit, nothing amazing. Let's see if we can find the signals previous. Yeah, there was a great overbought signal there a few days before. Apple got overbought. So it still rallied there, what was that, whenever that was yesterday, I think, right? But it didn't last very long. It's a day trade, right? So typically the day trades I only keep on for 30 to 60 minutes. You can see it there a few days ago before, where it got overbought and then it dropped from 182 down to 180 or something like that, right? So again, it's the same concept. Is anyone in here, by the way, using futures? I can show you how that looks using futures as well, if anyone wants to look at futures intraday. So like for example, if I can show you, like for example, this is Russell 2000 futures, right? So we look at Russell 2000 futures. Again, you can see they get oversold. This could be, the IWM ETF. It's the same deal. It gives us the signals just as well. But you can see it got oversold. Once the error disappeared right there, that's the signal. And it rallied 1.3% intraday, right? It's just a day trade, Sure, commodities. So we can look at, I don't know, oil, MCL. So this is oil futures here, for example. I think this was like Friday or yes, that was yesterday actually. So this is oil, for example. It gets extremely oversold, and then it tears up like 2.85%. So again, it's what's important here to me is the algorithm. I want to know when something is extremely oversold or extremely overbought. To me, that's the signal. Intraday, in this case, for futures, I would have just bought the futures ticker. If it's a stock or an ETF intraday, I would just buy a call if it gets oversold, or buy a put if it gets overbought. Or in the daily charts, again, like I showed you, I typically like to use options credit spreads. That's what I like to do. That doesn't mean that you have to do that, of course, right? This is just for educational purposes. But I found the highest repeatability and I guess probability if I use it on if I use credit spreads on the daily charts, and intraday I do directional trades. Here's NVIDIA again, just for those people that were asking for before. Let me zoom in a bit closer. Sorry, go back, right? So this is that signal just on a couple days ago. Make sense to everyone? You guys following the logic here? Does it make sense? So what I promised you before is that we would go back into Metastock, and I would kind of go to where I left off, and I would show you what the signals were that we received when I ran the scan this morning. So when I went into the scanner on Metastock, I found I just selected Vertical X Pro. I ran this on optionable US equities. Of course, you can do this on other things. But you can see these are the signals it came back with. So let's have a look at one of these. One of them is SFM. This is Sprouts. And we can look at this now in real time. So Sprouts Farmers Market, SFM. I think it's up just a touch today. So let's go have a look at it here over in Metastock. And again, you can use it on other platforms, but we're here to show this on Metastock. So SFM, I'm going to quickly bring this one up. So this is Sprouts Farmers Market. This is a live example right now on the daily chart. So what I'm waiting for now is, now that the scanner brought this up, what I'm waiting for is for this particular stock to give me a day when this arrow is no longer printing, which is, I think, is probably going to happen tomorrow. In that case, the stock is either a short, I can buy a put. I could do the options credit spread that I said before, right? Just sell an options credit spread up here, in which case I could make money whether the stock went down, sideways, or higher. Or I could, do a directional trade of other sorts. But for those of you folks before that said that you are looking to generate a steadier stream of return, like monthly or quarterly, can you guys see how making the less directional bet is a higher probability of returns. Does that kind of make sense? Because again, like in Sprouts right now, if I sell the call spread up here and the stock doesn't have to go down for me to make money, it could just as well go sideways or against me a little bit. Like that's a very different dynamic. Let's just go back into DuPont. I think someone mentioned before, right? So this is DD. This is the oversold signals we got a couple over the past couple months, right? You can see again, we like to use a 1 to 2 week time horizon on this, and you can see what happens, right? The stock gets oversold and then gets exhausted and starts to basically rally. Same thing here a few weeks ago. Again, we have a time frame of sort of 1 to 3 weeks or so. Okay. So we use options that expire no longer than within 55 to 85 days. We don't like to use options inside of 50 days, even though we only hold the trades for 2 weeks. That's typically what we like to do. And the reason we do that is because, again, using short-dated options ultimately tends to blow up. Now, of course, intraday, so on the NVIDIA example there a couple days ago, when we got that intraday overbought signal, there I could have just bought a put that with an option that expires whenever, next week or something, because it's just an intraday trade. So that's the big difference. Does that make sense to everyone? Yeah. Okay, perfect. So those are today's scan results. And again, I wanted to show you this in full disclosure so you can see I'm not making this stuff up. This is happening right now here in real time. Is this helpful, folks? Can I get a quick yes in the chat box or something just to kind of make sure you guys are following along this and this kind of resonates?
If it's a good time, I have a couple questions that came in from YouTube.
Sure.
Okay. Let's see. Edgar wants to know, do you determine the short strike based on delta? So do you have recommended deltas when you're doing shorts or longs?
Yeah, so basically it's not a delta calculation. What I like to do is I like to use a combination of time and a certain credit I like to receive. And I will show you guys how you can learn that with us. I'll show you that in a minute. It's not a delta calculation. Delta is what's called a single factor model. So when we were working at JP Morgan at the trading desk on the investment banking, delta is a single factor model. Delta is an oversimplification of things. We need to use a multi-factor model. So the way we just decide our strikes has to do with time, a certain credit we like to receive, and a certain amount out of the money. But delta is too simple. In our, I don't think we've used this now for 16 years, this particular indicator.
Cool. And then one more question from YouTube. Francis wants to know if you consider the trend on a larger time frame in your algorithm.
The trend in the larger time frame doesn't matter as much. It's the vertical X power indicator looks for extremities of emotions, essentially in the near term, right? So if you look at DuPont here, like it basically is about a 2 to 3 week look back, is roughly, or maybe a bit more, but 3 to 4 weeks actually, more accurately, and that's how we determine the trend, the signal. Excuse me. The trend is not that important because it's really about the 3 to 4 week look back of momentum is where all this comes in. It took us about 12 months of working on this as a side project at JP Morgan to figure out what sort of the best formula, if you will, is. So are those the questions from YouTube, Jeffrey?
That's 100. We're 100% caught up on YouTube.
I love it. Very good. Cool. So as you guys can see, this is a process that is repeatable, that certainly for us at least works, and our clients would certainly stand behind that. So what I'd like to show you is not only how this indicator works and how you can get access and how you can use the indicator on Metastock and other places, but also specifically, I can teach you how to use this specific option strategy for those people that like to use it with options. If you don't want to use it with options, we'll show you how to use it with the stocks and ETFs or futures, of course, as well. So what the indicator in this whole package is all about is about increasing our profitability rate. That's our goal. And so everything that is included here, including the indicator for lifetime access, is everything is lifetime. We're trying to have the highest probability and repeatable strategy that we can come up with. And so the benefit here is that with this package and the indicator and the process is that it's trying to achieve repeatability and stability. And so with the package, you'll learn how to use options the way that we do it, the specific way I just showed you. You'll get access to the indicator for life. And because it's not only about knowledge, there's also a lot of pros have an edge, and I think the edge here is also certainly what the indicator is. So when I look at all this, I look at a strategy that I can use in all sorts of different markets. It is, by the way, available on multiple platforms. Of course, we're here to talk about Metastock, but just so you know, it also works in some of the brokers and also some of the other ones that I've got listed here. So just so you're fully aware of that. Again, Metastock is what we showed you here today. To me, the best part about the Vertical X Pro indicator and the entire process here is that what we do here is we give you a platform and we give you a foundation that whether you're new to trading, whether you've been doing this for a while, not that you have a strategy and a tool that you can focus on and I guess rely on, for lack of a better term, month over month, quarter over quarter, just to increase repeatability and stability in trading results. And that's exactly what this does, and it's designed for at its core. And that's really what it's specifically was our goal. So to us, everything that's included here is all about that one goal: increase of stability and profitability and repeatability. And really that's that's a big thing to us when it comes to all this. You can see what some of the people are saying. Dave wrote to us that he said, if you follow the rules, you can really make good, steady income. Those are Dave's words. Other people, Timothy, great indicator, great strategy. It's my bread and butter strategy, and so on and so forth. You guys can kind of see where that goes. I just want to quickly mention, I think for those people that are in the markets to kind of swing for the fences, this is probably not their thing. Like if someone doesn't care about their account, if they don't care whether they make money or not, I don't think that's for them, this. But for those people that are interested in taking it serious about their money, but maybe you're retired, maybe you're semi-retired, maybe you're working part-time, full-time, if you really care about learning more about the markets, about your portfolio, this is really what it's designed for. And so what we're going to do today is we're going to show you how you can look at this as an income machine. It's how we look at it, right? And these trades can be diversified among different strategies and different sectors and industries as well. So here's the deal. Everything included here is for life. It's 50% off here today for the Metastock presentation. And first of all, you're going to get access to the Options Income Secrets course. It's a course that you get access to for life. We'll teach you exactly how this works. Every month we meet twice in real time. We meet twice, and we give you actionable trades. That happens twice every month. The indicator is also included for life, and we also have an Iron Condors course. We also have a cloud-based version, our own version that's housed on our website. And all this right now is 50% off, so it's $397. Again, that's lifetime access. You'll never pay this again. There's no monthly fee. There's no hidden charges. There's no nothing. It's just $397, and you get lifetime access for this. You can use PayPal as well. The link for it, it's already in the chat box, is thesteadytrader.com/meta. And there's also a phone number you can call. It's 401-203-7389 if you have any questions. So it's all there. The way to get this installed, as soon as you come on board, you'll receive an onboarding phone call. There are tutorials on the website how to install this. In fact, Jeffrey made a wonderful video, but also we're here to help you install if you have any questions. It's 50% off right now for the Metastock offer. It's limited to 50 people. I just want to throw that out because we do like to onboard everyone and make sure everyone gets special time. So for those people that use Metastock, I'm sure Jeffrey can say a couple of words on that in a second. Let me just quickly mention that we have a chat room as well. So for those people that are in our community, and there's a lot of them, there's a great chat room where we come up with signals, we post them, we share them intraday or else as well. The next members webinar is actually tomorrow. February 28th at 10 a.m. Eastern, 7 a.m. Pacific. The reason you want to join these member webinars, and we do them 2 times every single month live. I teach you exactly how the strategy works. I give you an actionable trade every single time, both an options credit spread or a swing trade, as well as a day trade as well, every single time live in real time. So that's all in addition to you having full lifetime access to all of this here right now. Let me see what else. Also, yeah, the link is thestudytrader.com/meta. And if you have questions, you can call. Again, the phone number's in the chat box. You can use a typical credit card or PayPal. It's 50% off today, $397. And that is, again, that's lifetime access. That is not just a monthly thing or a quarterly. It's literally lifetime. You'll get lifetime access to the indicator, to our member webinars, where we give you live actionable trades every single time, twice a month. And we teach you exactly how it works, and just join our wonderful community. So that is how that works. In terms of installing in Metastock, I don't know if you have anything you want to mention on that, Jeffrey. It's obviously very simple. I know you made a wonderful video on our website, but we also have people that can help you do that if you need to.
As long as you have Metastock, you just run the installer. It's super easy to do. So
exactly.
We can get it added to your downloads page. It's easy.
Yep, it really is.
Carlos wants to know, do you have options training that comes with it? And he asked that a while ago. You can see all the options training that's included. So
a lot. So not only is there a video course, but in the member webinars every month, twice, we talk a lot of options. Like that strategy that I showed you guys today with options, like we go into great detail on that. And you'll get a trade every single month, twice in the member webinars based on the indicator that you have lifetime access to. So yeah, there's a lot to that. We also talk about how to use options intraday. So yeah, a lot. But again, it's if you don't use options, I don't want to scare people away that don't use options. Like, you know, this indicator is designed to work with ETFs, equities, futures. And so whether you want to use options or not is not that important. I will teach you exactly how we use it with options, intraday and on a day trading with the credit spread. There's a lot of focus on that. But the indicator is designed to work, you know, besides that as well. Like you don't have to use options if that's not your thing.
Okay. Let's see. Bob asked an interesting question. He wants to know, do you ever find it too expensive to buy a put?
Yeah, yes, absolutely. So that's also where the options credit spread makes a lot of sense. Yeah. So in fact, that's, you know, again, join the member webinars. It's a wonderful thing to be able to sell options credit spreads if it's done right, in my view. Using short-dated options really can lead to disasters, and I know over time a lot of people get into big problems by using short-dated options, particularly when they buy them. So with the options credit spread strategy, particularly if puts and calls are expensive, it makes a lot of sense to be a seller of credit spread. But again, it's got to be done the right way, you know. And a lot of people are using extremely risky options where that can backfire very quickly. So we'll teach you how that works. That's what the member webinars are for. That's what the chat room is for, and that's what the whole package is for, really.
All right. And then Tom asked a question, and we get a lot of questions, but Forex, does it work with Forex? And well, we're kind of lumping that in. How about international markets, London?
For sure.
Yeah, Australia.
Yeah, I mean, anything you have a feed for, you know, the indicator can work on that. It's not so much an issue of does it work on, you know, on a specific. I mean, maybe to answer your question, we designed this initially to work in something called a credit default swap. I don't know if you guys know what a credit default swap is, but a credit default swap is essentially a institutional derivative instrument that's got about a $10 million notional. And so if it works in something quote unquote esoteric like that, trust me, it's going to work. It's going to work in other stuff. So like here's Eurodollar, for example. This is a couple of days ago, something like that, or I think Thursday last week when I saw this signal. This is the Eurodollar. Got extremely as intraday chart. Got extremely overbought, and then you can see it just went straight down. Right. So it's the asset class is not the issue. The question is, what's the time frame you want to use it on? If you want to day trade, you know, we use directional trades. At least I do. On the swing trading chart, I tend to use credit spreads, but you don't have to. I mean, one can do directional trades. No problem at all. So I hope that answers the question on Forex. It's actually a really good question.
All right.
Cool.
Very cool.
All right.
All right. Thank you, Serge. One of the things, okay, before I kind of move on, I want to say thank you for coming in. Thank you for being part of the conference today. Very, very good to see you. I love this thing because it's a very different take, looking at something that's extremely overbought and oversold, and it does a really, really good job. The other thing that I like about it is the selectivity. It's not whipping you around all over the place. You're getting really, really good clean entries. So thank you very much, Serge. I appreciate your being in here. Thanks for coming in today. And,
thank you, Jeffrey. Thank you so much, guys. I appreciate it. Have a great day.
All right. Very cool. Let me go ahead and do this. I'm going to go ahead and make myself the presenter again. I'll go ahead and show my screen. Here's a picture of the box that we developed for it. The other thing that I was going to say, too, is the selectivity of it. That really, really matches well with Metastock. So, for example, I ran a scan of all of the optional stocks, and it filtered out all but 7% of all of the optional stocks. So if I want to be able to go in and run a scan and find just the stocks that have those really, really overbought or oversold opportunities, it does a really, really good job. So right here, you've got the setups and you've got the triggers. Both of those are going to be. The other thing that I really, really like about it is that it does include like all of the training. So you're welcome to go ahead and order. I know, let's see, you can do that up on either side. If you have questions, you can get in touch with us. We'll be happy to send you charts, answer questions, all that kind of good stuff. So $397, all of the trading, all the training, the installation, the support for everything, all the other platforms, all of that's available. So get in touch with either one of us, go to the site, get it going. There you go. Thank you again, Serge. And let me go ahead and kind of just move on here a little bit. So yes, okay. All right, very cool. Well, we're going to transition. I want to say thank you to AAII for sponsoring the event, AAII.com. You can find out about them. Huge nonprofit, does do a lot of work, investor sentiments, market research, market surveys, AAII.com if you want to get more involved with it. And of course, we're Metastock. If you want to take advantage of the offer Serge just did or any of the offers here at the summit, you can give us a call. You can go to at 800-882-3040. You go to metastock.com/saleschat, or you can give us a call at 800-882-3040. So with all of that, let's go ahead and we will do a prize drawing. So what I need from you, help me out, is we're gonna do a prize drawing right now. What I'm gonna ask you to do is I'm going to ask you to give me a number. That number can be anywhere between 1 and 9,041. So anything between 1 and 9,041, a number somewhere in that range, and that'll be the prize winner. So if you're watching this on YouTube and you want to be on the list here that I've got, just register. You go to metastock.com/traders-conference. Greg's got the link pinned at the top. You can just click on it and you can register and you'll be part of the prize list. If you're watching us on GoToWebinar, you're already on the list. Don't worry about it. So any number, 1 in 9,041. And I'm going to go ahead and grab my prize list and tell you what it's going to be. So let me do this. Okay. For this one, we're going to do Larry McMillan and his prize bundle. Larry McMillan came in yesterday. Very smart technician, has some really good newsletters. 3 of them, in fact. You're going to whoever wins is going to get a subscription to all 3 newsletters. McMillan's, I'm going to read this here. Time-tested advisory services. The option strategist, daily strategists, and daily volume alerts. This includes analysis, commentary, education, and specific trading recommendations on a daily or weekly basis. And the value of that prize, $897. You're going to get 1 year of that. So lots of numbers that are coming in. Thank you, Joseph, David, Jerry, Chet, Tom, Carlos, Eric, Paul, Veronica, Dave, Kelly, Robert, Metastock, Christina. Let's go ahead and go with 5657. So 5657, I'm going to go ahead and the price sheet right now. We're going to announce the winner. 5657, go. And that is a Singvhi, Singvhi, in the USA. I actually think I know you. Hey, you won the Macmillan Advisory Service. If you're in the chat, make sure you say hi. You don't have to be present to win. You just have to register to win. So you may not, maybe you'll just be waiting for the recordings or whatever. That's cool too. But congratulations. I'll send your information over to the Macmillan Company. They'll get all the information and get you set up for your prize. So if you want to win too, you could get an extended trial for Metastock. They'll help you find winning trades every day. It's been rated the #1 software program for only 31 years in a row. We talk a lot about how you can scan markets, test trading ideas, get forecasting, and find probable price movements, real-time commentary, alerts, signals, all that kind of stuff. Pricing on Metastock starts $69 per month. With your extended trial, if you buy a month, you'll get the second and third month for free. It's $23 a month. So if you want to get Serge's product, if you have questions, if you want to order any of the products that we featured here at the event, give us a call or go to metastock.com/promo, go to metastock.com/sales chat, or give us a call at 800-882-3040. So hope we're doing okay today. I think it's going well. Congratulations to the winner. And our next speaker is Adrian Manz. I have a copy of this book right here. I'll show it to you. Adrian Manz wrote Around the Horn, a guide to consistently scoring in the markets. This is a great book. I don't know that I think you can get a digital copy of it. Adrian might correct me if I'm wrong on that one, but it has a lot of visual patterns, very, very descriptive, very, very good book. I absolutely like it. And Adrian has been a friend of Metastock for a number of years. He does a really, really good job of patterns. He's going to talk about a few of his patterns today. I'm going to go ahead and get out of the way. Adrian, how are you doing? I noticed that your audio is working.
I think it's working now, right?
Yes. Yeah, I saw you not connected with audio, so I'm glad we got you sorted. We can hear you. Let me make you the presenter.
Okay.
Here we go. You should have just gotten a screen share that said, do you want to share your screen?
Yep.
All right. So far the session is going great. We've got a lot of really good questions. We've got a great audience. I can see your screen. I can hear you.
Okay.
I'll go ahead and take it from here. Adrian, it's you. Go.
All right. So usually when I do these things, I do a bunch of strategies. And this time I thought we would talk psychology, because I've spent quite a bit of time, recently working with new traders, or traders who are new to us anyways, brand new to us. So we just met a bunch of people, and what I find is they're very eager to get going, and in a lot of cases, not so eager to understand what it takes to get going. So, Julie and I are both, we both have PhDs in psychology, and we didn't come to trading the way that most people would, I guess. Our doctorates are so mine's in organizational psychology, Julie's in social psychology. We're both sort of focused on behavioral finance. So this goes all the way back to, we graduated back in 1997. And, a lot of the work that we did early on, and if I sound a little off today, I might be getting a cold here. We just got back from a conference. But, a lot of the work that we did early on was with the New York Stock Exchange. So when you're talking about behavioral finance and you're talking about personalities and what the effect is of the human being in the equation, there's kind of no better place to get started than the NYSE, especially back then. And that's because at that time, it was a specialist system. So it's still, you know, a designated market maker down on the floor, but it's not the way that it was, you know, back when we got going. So back then, it was all about, you know, there was one guy who made a mark. So I had a friend, Jason, for example, and Jason was in the Barclays booth, and in the Barclays booth, he made markets in Disney, in Michael Kors, in Harley Davidson, and you know, his personality sort of became part of the stocks that he traded. And when you would be in the booth and watch what he did, what you would see was that here's where he's a buyer, here's where he's a seller, right? We all know that part of it. But he was doing the same thing that we do when we look at charts and try to find support and resistance. And you know, so he became a buyer at what he saw to be support. He became a seller at what he saw to be resistance. And, you know, as you watch this person make the market in the stock, what you realized was he's doing it in a different way than probably anybody else would do it, because it's him, right? So there's no formula. There's no exact criteria that anybody is using. It's all about, you know, what's going on between your ears. So, you know, we started trading because, you know, we were looking at data. Obviously, we needed lots and lots of data, working on PhDs. And we also developed, you know, our Trader Insight website. It's very deep, all right, lots of information. We've been around since 1999. And, you know, it's also driven by psychology. So remember, as I go through the pattern that I'm going to talk about today, what I really want to show you in the pattern section of it is sort of a tricky trade. And I want to say, once you master it, it's an easy trade. But you have to say, could I wrap my head around it, and could I do that trade, you know, based on who I am? So I also want to point out that, presuming we don't get canceled again, that we have a show that's coming back in summer of 2024, and that's called Trader Nation, and that is all about trader psychology. So we get into deep dives on people's psychology. We talk to people about, you know, what makes them tick. One of the shows that we had, you know, we've got a couple traders who are, for lack of a better word, they're gamblers, and the guys who you know, are comfortable in sort of a gambling environment and a high risk environment. We did a show with them and talked about, well, you know, what's it take for you to take that mindset and then put it into the arena of trading and become successful with the trades? Because what happens when they fall back into sort of that gambling mentality is they start losing money. And when they can harness it, you know, when they could come and work their way out of that, then they're able to be profitable. So the show does that kind of thing. It also looks at interviews with guys who are really top traders in their fields. We look at alternative investments. You know, what makes people do things like buy you know, student loans, or buy you know, Bitcoin, or buy these things that Bitcoin's pretty mainstream now, but you know, things that make people or pull people away from you know, the typical stocks and options and futures kind of a thing. And, you know, how do they wrap their head around doing, you know, something similar? So I've done lots and lots of stuff over the years, right? I write lots of articles, and I've had, you know, things published in all the major magazines and things that are out there, the journals that are out there, and, you know, had lots of articles written about Julie and me and the things that we do in trading. And again, the thing that is unique about all of it is that every single thing is sort of a psychological dive into why it is that we do things the way that we do them. And, you know, it boils down to, as Jeff pointed out, Around the Horn, a trader's guide to consistently scoring in the markets. That was the first thing that I put out there. It's all the patterns that we trade. It's all the patterns that we trade to this day. It's out of print right now. It's going to be back in print later this year, updated, new and updated version. But in that book, I took what was originally called a multivariate analysis of covariance in the United States equities markets, and I took that very academic thing and turned it into a book that's written in an analogy, right? It's written in this metaphor, this baseball analogy that goes through and says, all right, an expansion of range and volume that has, statistical reliability, and I called it a fastball setup. And there's an infield fly, which is, I guess, like an evening star kind of a thing, but it's a big picture trend reversal. There's a double header, kings and queens, if you've read the international version of the book. All of it is pattern based, and all of it is very much statistically sound, right? So it's very, very based in multivariate statistical analysis, and Jeff and the guys at Metastock did a fantastic job of programming a scan that goes through and finds all the patterns in the book and finds them very, very reliably. So when you look at the output, it captures not just the sort of the spirit of the trade, but it goes and it looks for the nitty gritty inside of each one of the setups. So, we worked hard on it back then, and, we really put our heads together, and the software does a great job of figuring out exactly how those patterns are coming together, where they are in the market cycle, where you should be in terms of putting a trade together. But to do it successfully, right? Because the machine can spit out all these things and give you, the pattern that you're looking for. But in order to be successful in implementing these things, right, you have to have a mindset that gets you in front of the opportunities and then keeps you there and keeps you sorting the opportunities according to which ones are the best setups, which ones have the highest reward to risk ratio, which ones are, the least likely to have an adverse move, and, understanding sort of how the market works and the push and pull of each one of these patterns, even, right? So the patterns in the book, there's fastball, that's a volatility based pattern. Everybody gravitates to it because it has the biggest potential profits, and it has the ability to generate profits quickly. But if you don't understand the risks that are associated with a volatility-based pattern, then what winds up happening is it's exciting, it pulls you in, and then if you get stopped out a couple times because the volatility can go either way, then what tends to happen with especially newer traders or traders who aren't sort of tuned into the psychological challenges that go along with trading is then they'll start passing on opportunities, or they'll pick the opportunities that seem to have the smallest stop loss, or they'll wind up picking opportunities, if they're the gamblers, they'll pick the opportunities that look like they have the biggest potential profit. And what you really need in trading is you need to be able to correctly analyze what it is that you're getting yourself into, right? So you need to understand the risks. You have to have the skills, you have to have the tactics, you have the tools, you have to be able to get in and get out of the market. I've got a guy who, believe it or not, he's got a hard time navigating the markets because he doesn't really understand order structuring. So where a lot of our stuff is set up to be bracket orders with stop limits on the entries and stop markets on a stop out and limit orders on a profit objective, he's just doing market orders on everything, and he winds up getting hurt because things will get away from him, or if a stock is running and it's running against him, so he was caught in Nvidia on earnings, and when he wound up in a fast market, he didn't know how to navigate back out of that fast market. He just kept trying to pop orders and the market would fly around him. And, that winds up being then very psychologically damaging. It can, he's still talking about it. It's a week and a half later. I spoke to him earlier. I love him. He's a great client. But, when you don't know the nuance of things, this stuff can turn around and really make you feel like you don't know what you're doing, or you're never going to know what you're doing, and then put you in a position to not, to actually not be able to do it. So you have to have discipline, obviously. You have to be able to implement a trading plan. Those of you who know us know that every single thing that Julie and I do is planned ahead of time. So we've got a full trading plan. The Metastock scanner is a tool that you can use to construct a trading plan like the one that we put together. But if you'd like to take a look at what we do, I'll give you my email address at the end, and you can send me an email and get a trial, an open house to our site and take a look at the trading plan. So the trading plans go all the way back to, I think we've got them archived back to 2000 on the site, or maybe 2005. So I don't know where the drop off is, but you can see every single plan, and you can see all the spreadsheets that show the results that those plans had for the day. And what you should take away from it is that we know how to put ourselves in front of an opportunity. And what you have to see when you look at the spreadsheets, I should have probably put the spreadsheets in here, is the push and pull of profitable trades and unprofitable trades. And what is it that you're going to feel if there's 3 days in a row where nothing triggers, or if there's 3 days in a row where your plan is underwater? Okay, are you able to look then at the bigger picture and say, well, year over year, month over month, year over year, thing is profitable, and as long as I can keep myself in front of those opportunities for profits, I don't have to be disappointed. I don't have to regret the decisions. I can just say, I'm going to be very, very precise in how I implement my trading plans, and I'm going to be just very diligent in making sure that I'm there every day doing what I said I was going to do. So that brings, you have to know that just because you go to your job doesn't mean that you're going to make money. And this is a biggie for a lot of people. This is a huge psychological impasse for people who are used to being successful in the work world. So just because you were a great physician, or just because you were a great attorney, or you were a great entrepreneur, or whatever you've done in the past, what you did in the past probably had a lot of hard work involved, and you could anticipate exactly what the outcomes were going to be. And where the psychological challenge here can really come in is you're going to go to work, and you're going to sit at your machine, and you're staring at these screens all day long, or whatever type of trading you're doing, whether it's day trading or swing trading or whatever. You put a lot of time in to try to get a result, and sometimes you don't get the result that you were expecting. So you have to get in there and be very, very smart about what it is that you're doing. You put yourself in front of the best opportunities. You put yourself in front of the best reward to risk ratio, and you just know ahead of time that there's going to be times that you're not going to get the desired outcome, and you have to be okay with that. And a lot of people who, I'll show you a slide of, this is our boot camp, right? So I go around this table and I look at the folks sitting there, and the first thing that's evident to me is everybody was very successful. Now, they're not all the same cloth, right? They're not all cut from the same cloth. We've got, I'm looking at this image. I've got a farmer sitting there. I've got a guy who owned a chemical company. I've got a guy who lives a sort of avant-garde life. He's on a boat in Louisiana somewhere, right? I've got a guy there who's from Canada. He was a concessions dealer for a stadium. I've got a guy sitting there. He's an attorney. There's another fellow who's an attorney as well. There's a guy who was a former NASDAQ market maker. There's a guy who's a cop. I go around that table, and everybody is bringing their own psychology to it. So everybody has their own hangups. Everybody has their own expectation of what's going to make them successful. Everybody's got their own expectation of what trading really is. And the important thing in whether or not they're actually going to be successful is, can we get them, or do they already have a growth mindset versus this fixed mindset, right? A lot of people have a very fixed way of looking at the world and interacting with the world. They see that the successes that other people have are not something they want to emulate. It's something that they're threatened by. They want to look good for their family, for their friends. They want to look, when I talk to people who are trading or who are just starting out trading, it's always the same story, right? They sort of puff up and want to tell me how successful they are. And you never really know until you get to know them whether or not that's true, because there's a lot of ego involved in what goes on in a trader's head. So you'll talk to these folks, and the impression that you're given at first is that everything's coming up roses. And then you realize it's just because they're used to looking smart, and they're used to knowing, exactly how they're going to do something. And then what you have to get around to is they have to get to where they get inspired by other people's success, and they start to embrace challenges, and they don't feel like they have to look good to you, to their family, to their friends, to themselves, right? That they can take a realistic approach to what it is they're trying to accomplish, or a realistic approach to trading, and just say, look, this is a challenging thing to do. And if I'm talking to somebody and that somebody is telling me that I'm doing something in a way other than the way that I should be doing it, I should accept that criticism and try to learn from it. And this is important, I think, in every aspect of life, that you're able to adopt this kind of a mindset, that you're not closed off, right? If you want to be successful, I think in anything, you have to be able to approach it this way. But in trading, it's exceptionally hard, because this is unlike anything you've ever done before, unlike anything that most people have ever done before. It's a very solitary business. It's a business that can really get inside your head, and it's a business where continuing to grow is extremely, extremely important and extremely difficult. So I tell people all the time, there's a lot of time during the day where I know there's not going to be anything going on. And when those times come around, I'm very, very focused on, I'll start writing. I'll start coming up with new ideas. I'll start trying out new ways of approaching the markets, because I know that I need to stay on top of my game in order to stay with it, right? In order to continue to profit from it. There's also this emotion that goes along with trading that goes back to primitive man, right? It's the way we're wired. So if you were on the plains and you're looking off into the distance, and you saw a big brown rock sitting there and you couldn't quite make out what it was very adaptive to assume it was a lion, because if it wasn't a lion, hooray! But if it was a lion and you thought it was a rock, boo! Right? Because you got there and you wound up in a very bad situation. So that goes and gives you this fight, flight, or freeze thing, where we're evolutionary wise, we're wired to think about trouble. We've got a negativity bias, right? So we look at a situation and we tend to see what can go wrong more frequently than what can go right. We've got lots of guys who we work with who, they get into trades and immediately start second guessing. Immediately, oh my gosh, I didn't see that. I didn't know. So for instance, right now I'm in a long in NVIDIA. It went up. The entry was 789.68, and the target was 794.14. So I'm out at my target. But for a vast majority of the guys we trade with, when it hits that target, it's very hard to take that off the table. And then once it starts moving against them, right, this becomes like, now it's dropping back down from that pivot line, and now they're looking at that, and now it's a bad experience. Even though they still have an open profit, now they're looking at this thing, and that bad experience is going to be like Velcro. So I didn't do X, and I wound up with a reduction in what I was going to make, and the good part of it is just swept under the rug. the good part of it, I still wound up making a $2 per share profit on this, is not what's important. What's important is, darn it, right? I left money on the table, or I didn't follow, I didn't do my plan the way that I was supposed to do my plan, or I didn't see something else that was happening in the market. All this stuff can just really go and start interacting with how it is that you see the markets in general, and then prevent you, from interacting with the markets in a profitable way. So I think for successful psychology, flexible thinking, a growth mindset, you have to have a trading plan in front of you each and every day, something that you can fall back on and say, I know what I'm supposed to do, and I'm not going to do anything other than that. I've got a roadmap. If I make money, I make money. If I lose money, I lose money. That's okay. There's no good days, though, no bad days. They're all just days. And what I want to do is I want to judge my success based on, did I follow my plan? Did I do what I was supposed to do? So that, you can just be very, very self-aware and very focused, and not put yourself in a position to constantly be beating yourself up about money, right? Because the money is definitely going to be, I'll take the mystery out of it for you. If you're new to trading, yeah, you're going to make money, but you're definitely going to lose money, right? Money's going to come, money's going to go, and you have to get in a good place. I've got a guy who was at that table, at that boot camp table, who, if he has a losing day in trading, he's convinced all the days are going to be losers, right? They're Velcro. Those days are the bad ones. If he's up $1,000 a day for 5 days, he's on top of the world. If on the 6th day he loses $500 for the session, or he loses $1,000 on the session, he is decimated. He just feels like it's never going to be okay again. So, this puts him then in a position of, he gets very negative about it. He's very, he's not compassionate at all with himself. It's not okay, right? It's not okay that he had a bad day. Doesn't go back and evaluate it as a market anomaly, or is just the regular things that happen in the market. Market goes up, market goes down. If you happen to be on the wrong side of it today, well, I'm going to try to be on the right side of it tomorrow. And I think part of that comes from what it is that puts you in front of a machine to trade anyways. Are you passionate about trading? I can tell you, when the market closes, I spend 2 hours flipping through charts. Metastock will go and look at the charts for me, but before Metastock looks at the charts, I want to flip through the charts. I flip through about 1,000 charts and try to say, what is it that I see happening? Because I'm interested in what I'm doing. I'm interested in the market. I'm passionate about what's going on, and I try to keep myself just involved with it. And I try to have an experience every day that says, I'm still doing something that I enjoy doing. These are the things where, if you look at this is very interesting, because I spoke with a fellow, Steve, in Las Vegas last week, and he says, I saw that slide, and you should definitely put that slide in everything you do, because every one of those things I've done, and I have the hardest time in the world not doing them. So when we look at these trades that I want to show you in the strategy here, this is where you start thinking about these things. Am I always pulling the trigger when I'm supposed to? So if I've got a setup and I've got a trading plan in front of me that says, here's what you're going to do when it gets to the entry price, am I going to go and take that trade, or am I waiting for confirmation, right? I hear this all the time, people saying, well, I was waiting for confirmation. And then I say, well, what did you do when you had the confirmation? Well, then I waited some more, because it was getting away from me. So if my entry on a long was supposed to be at $50.01, then I waited for it to break through that 50.01. But you know what? The spread widened up, and all of a sudden it was 50.10 by 50.17. And well, I didn't want to get in 10 cents beyond the entry price. Well, and then I'll say to people, when Julie and I started trading, we were trading in eighths and quarters. So 12.5 cents was just the spread, and 25 cents was what you wound up with most of the time. And that was okay. You didn't mind, you didn't care, because you knew that your strategy said, when you get to this point, you buy. But people don't go and execute their trading plan. And then what they'll do is wait for it to come back to them. And guess what happens on those trades? When you don't pull the trigger on most of your trades because you're waiting for them to confirm. And then once it confirms, you're not pulling the trigger because now it's getting away from you. And then you say, well, I'm only going to take these when they come back and they hit that original entry price. What you wind up doing is getting into a lot of trades back at the original entry price as they start heading towards your stop loss. And the ones that you miss are the ones that popped right through, you didn't pull the trigger, and they go all the way to the profit objective. And there's also this issue with especially Americans are wired to win. We think winning is everything. We grow up with metaphors. You know, the baseball metaphor was very much about every trip to the plate has to be a new experience. You don't go to the plate and think about the last time that you struck out. You don't go there and think about the time you knocked the cover off the ball. That's a way that I chose to look at the sport versus the trading business. But the reality is most of us spend our lives thinking about getting the ball across the goal line and, you know, winning big, and you don't ever want to be in a position to lose. So what they do is they let their losers run and they cut their profits short because it feels good to make money. It feels bad to lose money. So instead of taking a profit objective of, say, $1, it starts going, it's 20, 30 cents in their favor. Now it started ticking back again. Boom, I got out. As soon as it started ticking against me, I got out. So I booked the profit. And then they miss the trip to the profit objective because they're already out of the trade. But when it starts going against them, spoke to a guy last week, you know, trade was going against him. He didn't want to get stopped out. He moved the stop down. He moved the stop down again. He moved the stop down again, right? And what happened? The market kept coming in behind him until finally he got stopped out for a much bigger loss than he would have otherwise had. But the reality is, it's not about bad strategy. It's about this mindset that says, you know what, I'm just not comfortable taking losses. I want to minimize the number of losses that I'm going to take ever. And you go down this list and you can see it all, right? You're adding to a losing position. That's, you know, on Wall Street, we call it a portfolio. You know, people who would just pile on shares as things were going against them because, well, you know what, there's another support level down here. So let me just add to the position and then, you know, let's see what happens. If it pops up to the original entry price, then I'll be at break even and I'll get out. And it gets back to the original entry price. And, well, you know, I don't want to lose money on this deal, so I'm going to stick with this for a little. And before you know it, they're completely upside down on the trade. Before you know it, right? Everything went against them. And, you know, the gamblers, morning profits, afternoon losses. I've got another fellow who he'll get into the market. He knows how to trade that open. He's really good trading the open. He knows how to do the Apple trade that we teach people how to do. It's an arbitrage trade. And, you know, he can get in there and make $1,000 on that thing, $1,500 first thing in the morning. And then he'll say things like, well, it's house money. And in the afternoon, he'll say, well, now I've got to dig out of a hole. And I'll say, well, how did you wind up in the position that you were in a hole after you were up $1,500 or $1,600, you know, in the first half hour of trading? I don't know. You know, things just went against me. And what I want him to say is just, you know what, I have this attitude of house money, and then admit to yourself that you're not going to feel like it's house money once you start losing it. That you're definitely going to feel like it was your money. That money you made in the morning was money that you booked to your account. It was your money. It was your hard work paying off. So, you know, those are the things that'll get you into trouble on sort of this discretion size. And then if you see the last couple of things there, you know, taking unplanned trades, I can't tell you how many times I see people who will get into something like they'll take a Tesla trade or they'll take an NVIDIA trade or an Apple trade, right? The Magnificent Seven. I just did a whole course on how to trade the Magnificent Seven. And what we see some of these guys doing is they'll take a position, it goes against them. Well, now, you know, these are momentum stocks. These are stocks that are really on the move. And as soon as it starts going against them, what they'll do is they get out and then they reverse the position. So now the reason for getting in the first time was correct. It just happened to result in a loss. But now that it's going against them, they're going to hop in there and I'm going to get my money back, right? I'm going to go take this in the other direction. I call it revenge trading. And it's a very bad habit. and it results in losses more quickly probably than anything else, and it will leave you feeling like a passive psychological failure because you didn't follow any kind of discipline. You probably don't know why you did any of what you were doing. Holding trades for a home run, right? This is always, failing to take things off at the profit objective, always a problem for people to go and reconcile after the fact. Even if you made money, you look at it and you can't figure out why you did it, and now you feel like the whole thing is a game of luck. And then reducing position size after a loss. I can't tell you how many people, we've got nothing but experience with people who will tell us, I started trading 1,000 shares and then I lost some money, so I took it down to 100 shares. Well, then I made some money, so then I took it back up to 500 shares, and then I lost some money, so I took it back down to 100 shares, and then I lost money, so now I'm paper trading until I can, figure out where I am. There's nothing wrong with paper trading to begin with, to test a strategy. But if you wound up there because of this kind of a thing, right, where you're constantly jockeying position size around because there was a losing trade, and now you feel like, well, I have to get a grip on this. So maybe if I just lose a little less next time, I can get my head together and get my head back in the game and follow my strategy. Then you're putting yourself in a position to not be able to succeed, not to be able to follow through, not to have the courage of your convictions. So now let's get into a strategy. And what I want you to do is just sort of think of this in terms of the psychology that's behind it, and ask yourself, am I able to do this based on what he's telling me in terms of the statistical validity of this particular trade? Does that make me feel more confident in what I'm doing, or does the price action and the potential for loss make me feel like I would never be able to do this? Because Julie and I are very much trappers. We wait for trades to come to us. We trade intraday. We've got lots and lots of strategies that are focused on market cyclicality. So it's in our psychological comfort zone. Like, we know why we're doing what we're going to do, and that's what makes us comfortable, and that's what puts us in a position to just always follow through on the trades that we're looking at. This one is a statistical probability theory trade, and it's called Baltimore Chop. So again, this is from around the horn, and this is going to be a baseball analogy. Baltimore Chop is a 2 standard deviation opening gap reversal strategy. And the reason I called it Baltimore Chop was the old Baltimore Orioles of yesteryear, right? They had a strategy where if they had a slow runner who could hit, what they would have him do is spike the ball down into the ground, pop it over the pitcher's head, and by the time he could field the ball, he could be on first base. I'm going to show you why that's the analogy in a second here. But when I started doing this, the metric was we would use the implied volatility of the front month contract for every single stock on the exchange, just have that computed every night and then figure out the statistical model to go with it. Later, we found out that true range was a really good proxy for the volatility that we were looking at, and that since true range includes gaps, it works very well in the statistic. So if you don't know what true range is, range is just today's high minus the low. Everybody knows the range. So if that's the high and that's the low, and if that was 50.10 at the high and 49.40 at the low, then you've got a 70-cent range for the day, right? True range is going to include any kind of a gap from yesterday. So on daily bars is where we're finding this pattern, and we trade it intraday as it's an opening gap. So the true range is going to be either it's going to be the greater value of that high minus the low. So it's either the range, or it's going to be the absolute value of the high minus the previous close, or the low minus the previous close. So what it's doing is taking gaps into account. And since this is a statistical model, the gap is what we're interested in measuring. So we always want to make sure that the thing that we're using is actually the thing we're interested in measuring. So if that was the high at the top there, and the previous session's close was where the bottom arrow is, and it was 50.10, and yesterday's close was $49, then instead of the 70-cent range, now we've got a $1.10 range that we're factoring into the model. And the model assumes a normal distribution, which I can tell you volatility data is normally distributed, price data is normally distributed. We're assuming true range is a proxy for volatility. I've written a ton of articles on it. You can go back and find them in all those magazines I showed you earlier. There's a bunch of stuff in there about that. And that volatility is mean reverting, and lots of people have done work showing that volatility is mean reverting. And what that tells you is that you're in this thing right here, this bell-shaped curve that you guys remember from your statistics classes. If you're engineers, which a lot of the people who follow me, you're engineers, and you know that in the middle of that bell-shaped curve, you've got an average. Go out 1 standard deviation, you've got 68% of the volatility accounted for. Go out 2 standard deviations, now you've accounted for 95% of the volatility you're expecting to see. And if that gap happens in the morning, and that's what you received was a 2 standard deviation move, then what you're looking for is a mean reversion, which just means if that black line in the middle there is the mean, is the average in this data. Those red balloons are the gaps. Those are the high volatility periods. And the blue balloons are the mean reversion. And we're not assuming that we're going all the way back to the line. We're not assuming that we're closing the gap. We're not assuming anything really. We're just assuming we're going to make a move toward the mean. So as we start moving back towards that average, what we're doing is we're getting closer and closer to 1 standard deviation, or less than 1 standard deviation, right? As we move back, it becomes less and less likely that we're going to continue moving. So I'm going to show you how to get out of this trade in a second here, and how you set a profit objective that's not necessarily on a previous close or something, but it gets you into the most likely place the price is going to reverse. The formula for standard deviation is just it's just right here, right? So you're taking each day's true range, you're subtracting the average true range for a 10-period session. So if your software doesn't do true range as a calculation, if it only does ATR, then you just set your ATR to 1 for the first input on that, right? And that'll be 1 day's worth of data, and then subtract 10 days worth of average data from it. You square it to get rid of a negative number, divide it either by n or n minus 1. N is just the number of days, so it's 10. If you want to work with degrees of freedom, if you're a statistician, you subtract, you make it 9. Divide it, take the square root, that's 1 standard deviation. So the same calculation as we would have done with all the front month volatility is now done with true range. So you're just taking those numbers and you're plugging them into this formula. And so for each day, 1 through 10, you're going to go and subtract the average. Your software is going to do all this stuff for you. You can do this in Excel. You can port this data in any number of ways. If you're using Metastock, you can figure all of this stuff out in Metastock using some simple calculations there. But when you go and you square it and you divide it by n, then what you wind up with is 1 standard deviation. So in this case, 1 SD, 49 cents. And if you take that and multiply it by 2, that's 98 cents. That's 2 standard deviations. Add that to your 125, your mean. That's how much you have to gap in order to have a valid, a good reason to anticipate a reversion move. So now these are 5-minute bars. That's just an idealized screen here, right? Or an idealized example. 5-minute bars. You got those 4 bars that are headed higher into the closing bell, the prior session. And now the next morning, you get a 2 SD gap lower. What you're going to do is you're going to follow it down just as if it's a pullback. So if you follow the logic here, that first bar, the high of that first bar would be the threshold for an entry in the second bar. The high of the second bar down would be the threshold for an entry in the third bar. The third bar down, right, would be the threshold for the fourth bar. And the fourth bar winds up being the lowest high in this little pullback looking thing here. And based on that, we would get long right above there, right above that high. And we would look for something in the first bar of trading to tell us that was a significant place, right? A significant price point, something significant happened there, started selling off from that point. We want to get out. We want to avoid the repeat move from that level. And the reason that I say this looks like the Baltimore chop to me is, think about the pitcher and the batter and that ball just bouncing down off the ground and popping over the pitcher's head. We take these. We take the 2 SD data. If you join us at Trader Insight, if you want to take a look at these things live with us in the mornings, I'll give you my email address. You can just tell me. I don't really have a sign up form for you or anything, but if you want to look over our shoulder and see what we're doing for a couple of weeks, you just let me know and I'll get you set up. We put together a list like this. So this is populated. So this is our scan in the morning, and it tells us exactly which stocks have made the gap. And what I do is I look at the symbols, right? I'm looking through these to see, is there stuff on there that I'm used to trading? Are there stocks that I've definitely traded before? I look at longs versus shorts. I prefer the short side of the market. They definitely slide faster than they do anything else, right? The shorts are the ones that make the quickest reversion moves. And then I'll look at, the last price and what the spread is. And I'm going to avoid taking things that have a giant spread right around the open. So, the one that I'm leaning towards when I look at this is going to be Applied Materials, 48-cent spread right on the opening bell, not that much. But if you look at some of the other stocks, right, a $40 stock with a 62-cent spread, that's a pretty big spread for a stock that's only $40. And I look at the volume. And, when I see that something's got good opening volume, it's going to be in my wheelhouse. It's something that I know is going to get liquid. I'm going to be able to get in and out of this thing. In this case, I picked Applied Materials on this day. I picked also Coin that day. And what you're going to do is just exactly what we just did on that idealized chart, right, on the ideal example. In the case of Applied Materials, you see the gap higher. So this orange line here, that's the first time. Now think in terms of a pullback again. So now you're looking to go short this stock. So you're not looking at a pullback to the downside, you're looking at a pullback to the upside. Just imagine this is just normal price activity and price is pulled up. And you've got a low, and that first low is your first threshold. And then you follow this up until you get the deepest low in this pattern. And what you see here is that second bar of trading. Now, if you're following the discipline, you're following your strategy, and you're doing what we talk about around the horn, then you're looking at this and you're saying, okay, look, this thing left this big tail to the upside. It opened and closed at the bottom. That's pretty much an infield fly setup to begin with, but now it's also part of this Baltimore chop. Now I'm 2 standard deviations out. I'm beyond 2 standard deviations at this point, and I've got this low in place. My entry threshold is going to be a short right below that low. Now think about that psychology, because this thing's going to move fast. And if it gets down to that entry threshold at 204.12, do you have the order set up? I set up a bracket order. My bracket order, when that second bar is in place there, I've got a point and click order set up, but the order is automatic. And what it's going to do is it's going to say, if last price is less than or equal to 204.12, then sell short, stop limit. The stop 204.12, the limit probably about 204, right? I'm going to give it about 12 cents of possible slippage. And then it's going to be a 1-by-1 bracket. It's going to give me a dollar stop out and a dollar profit target. I'm going to pull those around after the trade goes live. And I'm going to move the stop and the target to where the logical stop and target are. So in this case, what I see as a logical stop is a move above that 205.67. Why? Right? Why not a comfortable stop? Why not a 204.50 stop? Why is 205.67 the logical stop? Well, because when price got up above there in that second bar, that's where we formed that big tail that we left to the upside. But the next time that it gets there, those sellers might not be up there anymore. And if I get through 205.67, then I'm going to assume we're at least going as high as that first high tail there, and that we're probably going to have the ability to move even higher. And I don't want to be part of that if I'm short. That's the logical stop. The market doesn't care how much I would like to make or how much I'm willing to lose. Market cares about the logic of where the order flow is. Where are the orders sitting that are going to impact what happens to price when it gets there? The profit objective in this case is down here at 198.88. And what I'll tell you is that was based on the move lower that happened in that first bar. So we're not looking down inside the bar right now, but what happened when price traded down there was it reversed very quickly higher. That's when it got up into the top of the bar. So this stock, Applied Materials, opened, traded lower, then traded higher, and it traded higher from where I've got that profit objective set. So you have to be watching the price action in the morning, right? This is a trade that happens in the first half hour of the trading day. After that, we don't trade it anymore because for various reasons, the statistic starts to fall apart. But what we want to do is look at the inflections that are going on in the morning and figure out where is logical to try to get out. Because in your heart, what you want is a move, down into 189, down into yesterday's close. But in reality, what you're looking at is the inflection off the morning low pushed that stock way higher. And look what happened just a few bars later. It tested a little bit lower. It got down lower into that morning range, and then it shot way back up into where our entry trigger was. So the logic here makes total sense looking at it from the outside. Now think about the psychology. When you're looking at this and you see that you've got a move here that's got more than $5 worth of profit objective on it, you've got a stop loss that's a dollar and something away, and now you start making that move lower. How many times down inside that travel range on the way to the target are you tempted to take this off? How often is that little devil sitting on your shoulder saying, no, let's take this profit, let's take it early, let's get out of this thing, right? Because the important thing when you're trading these is to stay on the right side of probability. And the thing that's hardest to do when you're trading these is to fight your own psychology and that desire to peel that money off as soon as you have it. And let's look at another one. Let's look at Coinbase from that morning, because that's the other one that we took. But same kind of thing, but this time you're waiting. Now you've got a low, it tracks up into another low, and it tracks up into another low. So now you're 15 minutes into the trading session before you've got the next bar, the fourth bar, that gives you a trigger. I can't tell you how many of my guys, even at the boot camps, right, as we're trading these things, that I'm trading them live with them. So I'm the guy who developed the pattern. I'm the guy who's explaining to you why you're doing this. And I'm getting into the trade. I'm taking the position right in front of you. And people will say, you know what, I just didn't like the way that bar looked. I didn't like that it closed up in the range. And, I was afraid it was going to go against me. I was afraid it was going to go long. The reality is, right, the right thing to do is to set these parameters up. I've got a 190.64 entry, sell short, stop limit, 190.64 stop, 190.55 limit. I've got a profit objective that's pretty logical. I've got a stop loss, right, that's up here that says, look, if price gets up above that high after I'm in the trade, I'm going to start looking for the doors. Even though in this case, you might be tempted to say, well, wait a minute, that's pretty close to that 190, 64 entry. I'm going to give it a little bit more room. I'm going to give it wiggle room up into those highs. There's no reason to do that because we know what happened when it got up above 190, 157. It shot straight up. It went 193, 193.50. And we don't want to be part of that if it starts moving against us. And in terms of a profit objective, it's the same thing that we looked at with the last one. We want to find a logical place. When this thing opened and it traded lower and it got down to the level that the arrow is at there, that 184.32, what did it do? It shot higher. The logic for the trade is if we get to that point and we've got a profit and we take our profit off the table, we did what we planned. We did what we should have done based on our logic, based on our system, based on everything. Everything was working for us except probably our psychology. Because what happens with that next two bars? When those two bars go down and you got out at 184.32, are you disappointed that you missed the move that went another $4, $5? You could have made all that additional money, right? What's that make you feel like? Are you disappointed? Are you regretting the decision? Are you regretting the logic? Oh my God, I should have I should have hung on to that. I should have swung for the fences. I should have, let this thing run as it moves down. And then if you did let it run when it moved down, what about the next bar? When it started going up, were you looking at that saying, oh my God, again, I didn't do what I was supposed to do. And look what happened to me here. Look what happened. I could have got out at 184.32. I got greedy. I've got people, who say that to me all the time. I've got people who get out early and they say, well, I didn't want to get greedy. And I've got people who stay in and it flips around on them and they'll tell you, I got greedy. One way or another, getting greedy, not good, right? There's nothing about your psychology, I guarantee you, no matter who you are, that you're looking at trading saying, what I should do here is get greedy. It doesn't work. But if you can wrap your head around what I'm trying to say today, it's all about, this is a proven trade. This is a winning trade. This is a trade where every day we're in the room with our guys in our trading room and we're making money. And those guys have all been with us for years and years. I mean, I would say that the average period that somebody's been in the room with us is probably going on 7 or 8 years. And that's because these guys are mostly boot camp alumni, the guys we've worked with for a long time. And they see this stuff work every day. Yet a lot of times they get in front of the wrong trade because something else looks easier, or something looks safer, or something looks like a quicker move to a target. And or they'll take them as gap and goes, right? These are not gap and goes. Doesn't matter that it went up above that first bar. It doesn't matter how far it went above that first bar. The reason for being in this trade is that you're getting in front of a statistic that tells you you are in the 95% confidence interval of that mean. And the most likely thing that's going to happen is you're going to get the reversion. And once you get the reversion, you're going to get to your profit objective. Or if you don't get the reversion, you know exactly where you're going to stop. This is, so you can send me an email, Adrian@traderinsight.com, if you want to sort of open house the site and see what we do, look at the trading plans, look at the live room in the morning, and the big QR code there, or traderinsight.com/live stream. I do every day an on-camera thing. We've got the TV cameras in the office here anyway, so I'll get on and go through and talk about what we're doing in the NQ, in the futures contract for the NASDAQ, based on what's happening in the triple Q. I go through, I show you the logic, I show you exactly what it is that I see happening on the QQQ side, where the volume weighted average prices, where the institutions are making markets, what's most likely then to happen on the NQ, and then we do those trades. And I also talk through all that Magnificent Seven stuff, what it is that we're looking at. So for instance, right now we're long again 789.68 on NVIDIA. So NVIDIA just had another pop to the upside. It hit resistance, and worst case scenario here is going to be, we're going to have an exit at break even. Best case scenario is we're going to get up into 790. Looks like 793.50 was our target on this, but that kind of thing. So I'm just doing that during the day, a couple times a day. You'll get a text message if you want to sign up for that. If you subscribe, you're going to get a text message that says you have to reply start to the text. Right? You got to double opt into it. Make sure you do that double opt in. It's one of those 855 numbers that the text comes from, and just make sure that you say, yeah, I want to do this. I want to be part of this every day. All right. So I hope that gets you thinking about why you trade, how you trade, the things that help you, the things that hinder you, and maybe that you can put yourself in front of some opportunities and have some confidence and feel good about what you're doing, instead of always looking back saying coulda, woulda, shoulda. That's not the game you want to play. All right, so I guess I'm gonna I think I'm just right on time here, and I'm gonna turn it back over to Jeff.
All right, thanks, Adrian. Let's see. Bob Cody from California wanted to say hi. So, and in fact, he said, "I love Adrian's trading style." So there you go.
Bob is one of our alumni. Hello, Bob.
Okay. All right. Very cool. Now there are a bunch of questions. Unfortunately, we're kind of over time. So if you have any questions, make sure Paul's already got a number. That's awesome. If you have any questions that we just don't have time for, email Adrian at traderinsight.com, and he'll be glad to help you with it. If you missed the earlier part of the presentation, if you're coming late, we'll send you the recording on YouTube as well. Adrian, thank you so much.
Jeff, thanks so much. See you soon.
All right. Very cool. We go ahead and do this. And let me go ahead and make myself the presenter. Oh, hold on. Am I the presenter already? I must be. You guys can probably see around the horn. As a quick reminder, with Metastock, we have spent some time with Adrian. We've developed an add-on that I believe is actually underpriced, and it'll allow you to scan for a setup. So it'll be able to enable you to find his patterns, all that kind of good stuff. With it, it's got the fastball, the line drive, the backdoor slider, the double hitter, the infield fly, the 3-2 pitch, and the switch hitter. This add-on's cheap. It's only $299. Well worth it. Also, $249 will be the price here at the conference because, of course, I'm going to give you a discount here. And if you need Metastock, you can get a free trial with it. I'm going to give you a 1-month free access to Metastock with any purchase today, including around the horn. So there's a 30-day money-back guarantee on this, as well as all of the one-time products that we sell. Give us a call, 800-882-3040, metastock.com/sales chat, or metastock.com/conf promo. So thank you, Paul, for the number. I'm going to actually do a prize for that. I'm going to say real quickly, thank you to CMT Association for sponsoring the event. I'm going to take Paul's number of 88 for a prize winner. I'll figure out who that is and announce it in the chat later. But in the interest of time, we're going to move on to our next speaker. So Oscar Carboni is a big friend of Metastock. I just got back from a camp that he does in Vegas, where he brings in a handful of traders. He does an extended, I think it's like 3 or 4 or 5 day boot camp. And he does a really, really good job. And we always love having him on here. He is the market whisperer, as Greg likes to call him. So with all of that being said, Oscar, how are you?
I'm good, Jeff. How are you? And thank you for having me. Love
Good. I'm not sure that we should call you a whisperer, though. As I said that didn't sound right. I think whisper is not an adjective I'd associate with.
Okay, I should point out I've never called you. Hi, this is Greg. Oscar. I've never, excuse me, called you the market whisperer. I don't know where that came from. I've called you, and I've heard many call you, a force of trading nature, and I stand by that.
All right. Fair enough. Oscar.
You know, the chart whisperer has been thrown around a little bit.
I think that is actually from one of your titles that you had. But I'm going to go ahead and get out of the way. It's your turn. I'm excited. Go.
So, hey, thank you for having me. Metastock, these are fantastic presentations. Traders from around the world. Well, let's start with this. Good morning, good afternoon, good evening, traders from across the globe. Thank you for sticking around. You've seen some fantastic systems. You've heard from some great traders. And I hope you're getting education while you're here. Because if you ask me, that's our job. We should educate you traders when you come to these webinars. And that's exactly what I've got planned for you today. I am not going to sell you a system. I'm not going to introduce a system to you. I'm not going to tell you that you can purchase anything, because I'm only going to teach you something today. If you like what you see, you can just come down to my live trading room. It's absolutely free. No credit cards are required. This is me waving to you right now. I'm normally in this trading room with traders from around the world. Again, there's no credit cards required. So make sure, if you like what you see here, you come and hang out with me. And I think you will like what you're going to see. So I'm Oscar Carboni. If you don't know me, I've been a trader and an analyst since the early 80s, 1982. Started on the trading floors in Manhattan and have been there my entire life. Have basically helped the exchanges take point and figure graphing and get it on computers. Then I helped them get trading onto the internet, which basically defuncted my job. And one day, after 25, 30 years of trading on the floor, we were able to go home and trade from elsewhere. But I still do everything I used to do on the trading floor. One of the amazing things about working on the trading floor is this. Everything that gets concocted from all the trading desks out there all over the world, they come up with a plan. They had to come through the trading floor to get that plan executed, which means we got to learn everything about everything in our time down there. There is no better education than somebody who stands in a pit and has to execute all of these crazy strategies that people from Morgan and Goldman and everywhere else come up with. And that is where I grew up. And I promise you, I am very good at what I do. And I'm going to show you some great tips, tricks, and techniques in today's video that I hope will help you move forward. In fact, let's talk about something. I've got the Omni, which is Oscar's Market Navigational Indicator. That is a system that will get you in and out of the markets each day. In fact, that system, just to show you, that system got us short. And let's see, where were we? NASDAQ. That system got us short today in NASDAQ because when we see a double top, we sell a double top. We know that's an adage. I've been yelling that out at you guys for 30 years. The double top's working. We had a great trade in NASDAQ. Just one of the many things that we do here. So what I normally do is I will never, ever show the Omni in a live presentation. The Omni does not get boxed up. It does not get put on a shelf. It does not get put on Zoom. The only way you'll ever learn the Omni system is to literally come to Vegas for a 5-night stay here in my home office where I will teach you my Omni techniques. That is the only place to learn it. That's called Omni Camp. And that's about the only thing I ever offer to anybody. Barring that, you come to my free trading room at livewithoscar.com, and we can hang out with each other, and I can help educate you, show you what's going on with the charts. But if you like this presentation and what you are about to see, then I would like for you to certainly come to livewithoscar.com and join my free trading room. And if you really like what you're going to see and you want to learn this craft, you can come to my Omni Camp, which will happen in March. But we'll talk about that at a future date. This is about teaching you what you should be looking at for the next few weeks or months to help you make money in the markets. So my last webinar, I called it, it was a class. It wasn't actually something to sell you guys because I don't do that. I hold classes and I teach. So my last Metastock presentation was called The Geometry of Markets. And I showed you guys what Wall Street uses. And you can see the recording, Metastock recorded it for us. I showed you guys what Wall Street uses to figure out where the markets are going to go next. Then I did another webinar, the one right before this one, and I called it Wall Street Algorithms. And I taught you what Wall Street is looking at. And I told you, write these things down and trade them. And we went through that webinar, and a lot of you contacted me, and you loved the information I gave you in that webinar. Well, today's webinar is going to be called The Retailer's Alternatives to High-Flying NVIDIA. Why? Well, it's no joke that NVIDIA is absolutely 100% positively the major AI stock today, right? But how do you onboard to NVIDIA in this situation when it's a $700-800 stock? So I'm going to show you some really smart tricks and tips that will help you get into the AI era, or the age of AI, without having to spend the type of money you'd have to spend on a high-flying NVIDIA. So well, let's start with this. The big name today, as we just mentioned, is NVIDIA. However, NVIDIA has become too pricey for most retail traders like us to use as an AI onboard ramp, right? So I've been following, here's where it's going to get cool. I've been following a series of stocks and ETFs since way back last October last year. And I think that these ETFs and stocks will absolutely benefit from AI. And in fact, since October, they have been benefiting, and I can't wait. I am going to share this group with you. It is a group that is completely focused on AI and will help you get into the AI market, again, without spending a fortune. Now, many of these focused ETFs I'm going to go over with you, they own shares of each other. They own shares of each other's ETFs, and they seem to zero in on any of the new AI companies that are doing well that they want to bring out, go public, and put into their ETFs. They're all zeroing in on the same ones. They are a very smart group. This is a smart group that sees AI as the 2024's version of the computer age back in the 80s. Does everyone remember that? Computers came out, it was going to end everything in the world, all the jobs were going out the window, and there was just an aid to us humans, right? Then the internet age came out in the 2000s. Then to some extent, we had the crypto age. Now, this is the age of AI, kids. Today's title is The Retailer's Alternatives to High-Flying NVIDIA. Please join my trading room if you like what you're about to see. Let's go take a look at some charts. First thing I want to get out of the way, however, let's get rid of this. First thing I wanted to get out of the way for you is this. We've got a situation taking place in Bitcoin. Now, we'll do this first, then I'm going to get to the AI. So this chart I have been showing my traders in video after video. Each night, by the way, I do a YouTube video. And in that video, it's geared to tell you what should happen the very next day. So I'll do a YouTube video just about every night. And in that video, it sort of starts like this.
Good afternoon, God. Good evening, friends. What do you think about that call on last night's video, huh?
So then I will take you through a serious chart segment to show you exactly what I expect the next day. And then I expect my traders to come to my live trading room after that to see us act out the very same charts I put in the night before's video. So I've been using this Bitcoin chart in many videos, and literally when we were down here, I said, traders, get ready. We're about to get a signal. We're coming out of a textbook bull flag. We've got a fantastic average. Get ready for the signal, and it exploded. Well, the same thing was happening in my last few videos. I said, look, there's a new kid in town. There's a new bull flag. Get ready for the explosion. And this is what happened. It totally exploded. Exactly what we expected. Bounced off the average, got above. So Bitcoin and Ethereum, just to start off with those two right away, and then we'll change out. Ethereum is running in sympathy with Bitcoin. Bitcoin is absolutely going. We've got a target of 85,000. It will get there. So I wanted you to at least see that before I get involved in the AI webinar. So in my last webinar to Metastock, I spent most of the webinar explaining geometry in the markets and how to use something called the 21 bar or a algorithm that Wall Street is using. So in that algorithm, or in that last video, I would say to you, listen, you're going to use this 20 bar average. Wall Street's using it. Look at how it worked, and that worked really well. But this video is going to be different. This one is going to be a grouping that I've put together that I think you're going to love. So let's go here. Let's take a look at the big guy first, because everybody knows how expensive NVIDIA has gotten and how difficult it is to get into this market. Now, in my last webinar, I basically said, guys, you've got the 21 bar moving average. It is your ticket. When it hits that average, buy it. And it's exactly what happened over here. After the video, we went right to that spot. The average worked. Okay, that was the stuff I was showing in the last video. In this video, I'm going to do something different. Forget about that tip. We're not even going to worry about averages and algorithms in this video. This video is about this. The new tip for you is this. If you can't afford NVIDIA, there are other alternatives to enter into the AI revolution, and I want to show them to you now. So if you can't afford a $790 stock, maybe you can afford this one. Check this out. Now, I've been following this since last October, since down here. This is called AIQ. It's AIQ.O for Metastock. Look at how Wall Street has attached. They just attached the 27 bar algorithm to this AI play. It's the Global X AI Technology ETF. So Omni's been following this since back here, really got interested in it back here. This play has been fantastic, and you can see that Wall Street is just keying off of this average. I like this little gem. I think if you cannot get into NVIDIA, you should take AIQ, but I've got a whole grouping for you, so write these down. This whole lesson is going to be about this grouping because I love this grouping, and I think we can all make money with this. Now, it is working off the 27 bar algorithm. Every time it gets near that 27 bar average, they come in and buy. Now, you want to see what's interesting? It goes back forever. It just works forever. It just worked and worked and worked. So Wall Street is killing it using these AI plays, or ETFs, if you will, these technology ETFs, that I've done the research to see that AI and these companies work together. So these companies will benefit from AI. And since I've been following, it has been working. So I want you to take a look at the AIQ for yourselves. Maybe you'll put together a little index, if you will, of these AI companies and see, or these ETFs and stocks that have been presented to you today, and see if you want to create a little portfolio for yourselves. It's why I put this together. I think it makes a smart portfolio. So AIQ looks fantastic. You can see Wall Street is absolutely keying off the 27 bar algo. They're all over it. And it's been skyrocketing, but the price is only $33. You can afford this one, right? let's go look at another. There's another ETF called BOTZ, B-O-T-Z, BOTZ.O for Metastock. Once again, the same type of algorithm is being used. Wall Street is jumping all over this stock whenever it gets to that algorithm or average. Look at it. Look at how well they just attack the market. If it gets under, they're sellers. Gets above, they're buyers. Forget all of that. We're not going to worry about the algorithm. This is making money from AI. Look at the stock. It's going crazy. Another $30.73 alternative to getting yourself into NVIDIA. So the most important thing happening in the world right now is AI, and that's why I brought you this lesson in AI today. And I'm going to show you some other great stocks that I hope you will be able to use moving forward. Take a look at this one called Buzz, another fantastic stock, another fantastic algorithm wrapped around the stock. This is an ETF, not a stock. It's an AI play called Buzz.K on Metastock. It's a Van Eck ETF. I don't care who owns the ETFs. I don't care what they have in them as long as they've got AI. If they're moving in the same direction that I had mapped out for them, this is the grouping that I want to play with. So once again, we're not really even caring about the algorithm they're using because we only care about one thing in this environment. You care about the fact that it's moving up. So I was going to draw an arrow. It won't let me draw an arrow. So all we care about is the fact that this guy is moving up. It's an AI play, and it's only $19. Another play you guys can get into. As I mentioned, this video is going to be nothing more than me showing you some great stuff that you should be able to make money with going forward. If you can't afford a high-flying NVIDIA, I'm going to give you 5, maybe 10 alternatives. All of these I've checked out myself, have been doing really, really well. And out of 30 of them, I've kept these. I started with 30 of them last October. I'm down to about 10. I'll share those 10 with you. Next, you've got the IQM. Look at this bad boy. It's the Intelligent Machines ETF. Once again, it is AI-based. It's another alternative to getting into the AI revolution. Now, are we day trading stocks like this? Absolutely not. Look at how ugly the stock is. It's such a mess. It jumps all over the place. So this is not for day trading. But since Omni back here has gotten involved and started tracking, the stock has done really, really well, or this ETF has done well. Why? Because AI has done really well. Now, NVIDIA just really exploded recently, but these stocks have been going up steadily all along. So they're good ETFs and or stocks, depending upon what pops up on the screen, for you to put together as an AI portfolio so that you can catch this big AI move that's taking place. Remember, way, way back, you don't remember any of this, but there was a typewriter race. The electric typewriter came out. That was changing the world, and there was a whole market move based on that electric typewriter. Then in the 80s, the computers came out. Remember, the market moved based on that. To an extent, you had crypto, right? And crypto had a move. The internet, remember how long that one ran for? Well, this is the same thing. It's called the AI revolution. In fact, this chart was put in front of you at least 3 webinars ago. And I wrote that very note, welcome to the AI revolution, on it. Because I saw it coming, like I see the internet revolution coming, like the computer revolution. How do I see it? The charts show it to you. You just have to pay attention. So I want to make sure that you are part of the AI revolution. I've been harping on this for the last 3 webinars for at least almost a year now. So let's go back to where we were. And I believe that's the IQM. And that's a Franklin Fund ETF, by the way, totally trustworthy. Let's go pull another. So Jeff, I'm going to be offering you back a lot of time at the end of this because I purposely kept this webinar laser focused on these stocks only. I have nothing else I want to show, but where people can make money in AI in the future. Another one is the LOUP ETF. Loop. This one is the Innovative Deep Water ETF. It is using AI, and it is proving it to us. Once again, even though I'm not even telling you about them, every single one of these has an algorithm that Wall Street is just killing it. Just killing it. Look at how perfect this algorithm is working. We'll talk about that in my chat room. You can come see me. This is for the future, and this algorithm is really, really working well. Let's just crank it up a little bit so you can see how bright it is. Let's see, we'll go to color and style, make that a little thicker, and you can see just how well they're keying off this average. I mean, they absolutely love it. Who cares what it is? Don't worry about that for now. What you care about is the grouping that I'm showing you. And when we get together, we can talk about the averages in my trading. All right, so the next one is learns, LRNC, and it's .k if you want to look it up on Metastock. Once again, this has not fallen out of this channel. One bar spent out of the channel the entire time. That tells you Wall Street is watching, kids. They're paying attention. It dropped out of that geometry. They came right back in and grabbed it, pulled it up. You know what I mean? They're like, no, 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 you don't belong down there. Buy it, everyone. Took it right back up. Because it stayed within the geometry. It was an anomaly day. They took it right back up. Point being, though, that LRNZ is in my grouping of AI stocks that should kill this for you, or ETFs that should kill it for you over the next year. A much cheaper alternative, like everything I have shown you. They're all in the 30s, 40s, some of them at $12, all inexpensive, all highly affordable, especially with options, and all of them will benefit from AI because when I started checking to see if they would benefit from AI, I started checking here. And look what they've done. I know for a fact that my research is correct. These stocks, ETFs, are benefiting from the AI revolution. There are a few more that I want to make sure you have seen in this presentation. The AI play called Quantum Defiance. Another ETF, this one it's so beautiful. Look at the way it runs up steady. It doesn't have as many gaps, openings much higher and then much lower. So a lot more steady. Wall Street likes this one more so than others. It is $58, so you can see that they're starting to buy it more. Wall Street is watching. This is the AI revolution. It's acting much like the computer age did, the internet. This is the AI. You need to be part of this. So I thought this is more important to get out in this webinar than anything else, because if you've learned nothing else in the last 2 days, you're certainly going to learn a grouping of stocks that you can make some money on for this upcoming revolution. And again, I've done the research, so you don't have to worry whether or not I'm grasping at straws. I've been following these for a long time. I thought I would present them to you now that I've proven them out. Then there's another. The Think Robo Global AI ETF. Omni started liking it all the way back here in October. Once again, October sort of caught my attention on all of these. And it's got a fantastic algorithm. I mean, they don't even let it get through this algorithm. They just jump on it when it gets near it. See that? They don't even let it get through. Again, this isn't about that. I've done those webinars in the past. We can do those. This is about proper stocks or ETFs that you should be in to catch this next wave. Generational wealthy. So OmniCamp is coming soon. If you'd like to join me in my home office, and that is literally my home office where my wife and children live, for 5 days, you go to omnibootcamp.com and fill out an application and a time to speak to me. I will tell you, though, if you are going to transfer a system over to somebody, you don't invite them to your home. You know what I mean? You don't invite them to your home where your wife and kids live if it doesn't work. So this is about as real as it gets. If you're interested, you let me know. Think. THNQ.K, big, solid, strong, $43 stock. What I love about this the most is how Wall Street just keys off of these algos. They just seem to all be doing it at the same time. All the ETF managers seem to plow in around the same time and get out at the same time, which makes it really easy for us retail guys to figure out what they're doing. And of course, I do that every day of my life. So if you hang out with me at live.oscar.com in my room, we could discuss these crazy stocks and algorithms and averages and all the stuff that Wall Street uses. By the way, they use so many, the jargon from Wall Street is to trip you up and scare you and make you think that you can't do this. But this is simple enough to do with a good set of eyes and an Omni method. A trading approach doesn't have to be Omni, whatever your trading approach is. The Omni kicks butt, but whatever your trading approach is, You can do this with a good pair of eyes. You do not have to know the EBITDA. You do not have to know how much float there is out there. You don't have to know what insiders are doing. You don't have to know any of that. All you need to do is know how to properly read a chart, and you see what Wall Street sees without all the complication. When you bring a complicated system into a complicated market, you're making things more complicated, right? Complication plus complication equals complication. But when you get simple in a complicated market, the clarity is unbelievable. And I've learned from the best pros that you can ever dream of on Wall Street. And they all said the same thing when I was a kid. Oscar, you need to get simple. You're too complicated. You think you're too smart. Well, you know what? They were absolutely right. I learned that lesson in the early 80s. Simplicity is where you get the price movement from. It's where you notice everything. So I keep things as simple as possible. The Omni system that I teach is simple enough to teach the children and powerful enough to run a fund on. It's good stuff. Anyway, so the Think Robo Global ETF is another one of my gems that will fit perfectly in your AI portfolio, especially if you can't afford NVIDIA. And do I have another? No, that's NVIDIA. We've seen that. Let's go. There's probably another couple of them here. Oh, yeah. Check this one out. This is the WTAI. It's the Wisdom Tree AI Fund. Once again, when Wall Street latches onto an algorithm, boy, do they just make proper use of it. Look at how smart, how simple, and how well you could do if you're trading this algorithm right here. I mean, it gets to it, you're a seller, right? Well, again, we're not doing that. That's not what this is for. This is to show you that Wall Street loves this, and they're easy to follow. So Wall Street is absolutely in love with this, as well as all the others I just showed you, because they are involved in AI. They're making money from AI, and that is our immediate future. AI, it's going to take over the stock market. So I hope these alternatives to high-flying NVIDIA will help you on board to the AI revolution. And I believe I have one more to show you. If I remember right, I still have one more that I thought was pretty cool. Yes, Ubot. So here's another one. It's called Ubot. I just literally found it right before this webinar. So I didn't have a chance to put labels on it. This belongs in that grouping, Ubot. Let me label it for you now. This guy you can add to the grouping, and that is an AI stock, I believe. This one's a stock, not an ETF. Wall Street is in love with this one. I didn't even bother to figure out its algorithm yet. Doesn't really matter. I'll figure it out when I need to. We'll just cut these out of the way because they're useless. But since October, with the rest of the grouping, Wall Street has been in love with these AI stocks. And I thought, hey, why don't I show this to this crowd? Because if you didn't learn anything else today, you just learned where you can make some money and build a portfolio, which, if you ask me, is really important stuff. So let's look. As you can see, since October, when Omni started liking this, it has gone straight up. Nothing goes straight up. It has gone up with the AI revolution. Nothing goes straight up. We know that. But we're not looking for things to go straight up. We're looking to get involved when they pull back. In this instance, for this webinar, you basically want to put all of those into a portfolio and just let them go. And of course, you can always look through them and see which ones maybe stop performing. But the beauty of what I'm showing you is a lot of them are ETFs. They'll know it's not performing before you will. So that is what I wanted to present to you today. I didn't want to get too fancy and start showing you a whole bunch of things that Omni uses because I don't want to confuse you. I wanted to give you really simple information that you can run with the ball going forward. I hope that helps. If it did help, please come to livewithoscar.com. It's an absolutely free site. You'll log on. In fact, let me just show you really quick how simple this is. If you come to Live with Oscar, you'll end up here. If you have a username, you'll log in. If you don't, you hit register. You fill out a simple, no credit cards are required. You will get an email. It will go to spam. That's the way the world works today. Go to your spam, put the verification code in. You'll end up here at Live with Oscar. You click Oscar's chat room, and you end up here with me where we can converse further. So please make sure you come join, and we can continue this conversation. I am here always 24 hours a day, except for Sunday. I'm here Sunday, but I study more than I get on my phone. But you can find me here always, always. This is what I do. I live and breathe this stuff. So please make sure you join me. And with that, Jeff, I will give my time back to you. I thank you so much for having me.
Do you mind if we ask you a couple questions?
Absolutely.
First of all, Michael wants to know, what is the time for Live with Oscar? And you know, I like to call it Live with Oscar, right?
So yeah, it's like Live with Oscar. Well, the markets are open 24 hours a day, 6 days a week, and so am I. If markets are open, I am open. I'm always here. The room's always full of people. We trade every day from Sunday night till Friday night.
Also from GoToWebinar, Michael wants to know, are ETFs worthy of consideration like CHAT and IGBT?
Yes, absolutely. If you are looking to onboard onto AI, to the future of AI, because these are young, they're inexpensive, and now Wall Street has proven that AI is the next big thing, right? And if you can't afford a $700-800 stock, go grab some of those ETFs and throw them in your portfolio.
Raymond says, thank you, Oscar. Out of YouTube, Trader SLI says that we should start calling you the Wiz. And if you like it, I mean, I don't know if you want us to call you.
Guys, I've shown you nothing. I literally showed you my 101 kindergarten analysis. I could do that sleeping on a cot with warm milk and cookies. We could get much more intricate, but there's no need to confuse. You guys come out to my OmniCamp. I'll show you how to get in and out of these markets with absolute accuracy, how to build a trading plan and then plan the trade and trade the plan. It's what we do every day here. However, that's not going to help you in a half an hour. I want to show you something that'll help you.
He actually said nobody beats the Wiz too. So
way to go, man. Thank you, SLA. Appreciate that.
Let's see. Here's an interesting question from Reardon in YouTube. He wants to know if you have a take on the new Bitcoin ETFs.
On the new Bitcoin ETFs?
Yes.
So oddly enough, BTC is doing better than all of them. BlackRock is gaining the most influx of money, but BTC has done the best. It's outperforming Bitcoin because it's doing some mining and it does some trading of its own. So oddly enough, that was the first one, right? And usually that's like the Betamax. It never lasts. Why would the first one hold up? You know, usually we figure out a better box, a delivery box, and we get rid of the first inventions. That one has stuck around, has proven itself, and is getting really big. So I'll have to give that one kudos. You know, that's a very good ETF, if you will. Now, anything BlackRock is going to do in the ETF Bitcoin family is going to work out for you, I promise. Traders, if you haven't noticed, I'm going to show you Bitcoin again real quick for a reason. What you might not have noticed is while Gary Gensler was coming up with rules for Bitcoin, Wall Street didn't know what to do, whether the rules were going to be in their favor or not, so they stayed away. Once the rules were set and Bitcoin was allowed to have ETFs, if you'll notice what happened is Wall Street has spent the last couple of weeks building up steam, figuring out what to do, buying Bitcoin, creating trading plans, and starting to implement them, and look at what you're getting now. Wall Street has been, picture a rocket, building steam. Well, that's what's happening in Bitcoin, and now it's starting to go. It'll never come back. I promise you, it'll never come back to these levels again once it goes. It is going for places that you've never seen. Why? Because Bitcoin was able to hit 65,000 without Wall Street. Now you've got the power of Wall Street. It'll just never come back once it goes. Never, ever. Now that's something you can almost guarantee. It's like the price of gold getting back to $200. It's never going to happen again. Same thing with Bitcoin. You're not going to see that $3,000 mark ever again. You know what I mean? Those days are over.
Keith wants to know how you find your securities to play with.
You know, I spend every weekend, well, a typical Sunday for me is about 12 hours of study before I even hit the charts. Then about 4 hours of chart analysis to get ready for Monday or Sunday night to Monday, which I sort of do every single evening. I'm just always looking. I'm always looking. I have no particular scan. I use my eyes. I see what's moving and I put it off to the side, make a list and keep following it. That list I just showed you in Metastock, that list right here, was a list of 30, which got narrowed down to about 10. The 10 that I think work really well.
We have a couple people that are asking if your year-end projections are out yet.
My year-end projection is absolutely done. In fact, if I felt like grabbing it, I could go right here and show it to you. I'll do it real fast. Ooh, there it is. Yes, my year-end projection is out. What I haven't done with it is I haven't given it to the public. What I was hoping for was that a fund or a family office would come see me and say, Oscar, you know what? We could do some real good with that year-end call. Why don't we put it to work in this specific fund, and then I would help them gear the fund for my year-end call for the year. So I haven't put it out yet to the public for that reason. It's only February. If a fund or an office comes to me and says, Oscar, you've been right for 16 years or 14 out of 16, we'll take that call. I'm trying to keep it preserved for them for now. It will go public soon, though, if that doesn't happen.
All right. Should we use emotions or stops?
Well, let's see. Can we? I might be able to answer that in a chart. Let's see. That chart could be here. Let's go look. If I got this right, it should be somewhere down here. Is it on the bottom of NVIDIA? No. I'm going to find you a chart to answer that question. I know we have. Is it on the bottom of chart 4? Let's see. Oh, yeah. Here's what I say to that. Stops are in, emotions are out. Dudes, no emotions. Put your stops in and go like this.
I'm pretty sure I have that on a t-shirt somewhere.
I'll bet you do. I've sent enough of them out.
Let's see. Carlos wants to know, do you think you should get in Bitcoin now or wait for a pullback?
So, problem with waiting for the next pullback is they may never do one. Yes, you always want to buy pullbacks. I always wait for pullbacks to get long. So yes, that would be my advice. The problem is if we are in that mode where they finally have come up with enough plans and are ready to go, you know what I mean? You've seen where markets go and don't come back for a few years, right? I think we're almost ready to do that in Bitcoin. So be careful. Make sure you at least have some.
Okay.
Again, there are many ETFs now that you can choose, and you can spend more money on that ETF to get a lot more shares than the little piece of Bitcoin that you might spend 30 grand on now, right? So maybe you want to jump on those ETFs instead. Nothing will move as quickly as Bitcoin, although GBTC has been proving to be better than Bitcoin, but nothing will move as quickly as Bitcoin. You certainly want to own the cash Bitcoin if you can afford it. If not, go grab some of those ETFs. Over time, you'll be glad you did.
Tom asks, well, he says, great presentation. I don't disagree. He says, if I want to use options, how far out would be a good start?
On Bitcoin?
I don't know exactly.
So I had a 5-year plan, literally mapped out that Bitcoin would make it to 85,000. There's 2 years, 5 months left at the end of this month. That'll be changed to a 5. So within 2 years, I expect it to be at 85. However, Wall Street got approved a little sooner than I expected, so I'll bet we hit 85 before the end of this year. I'm assuming we'll get there this year instead of next year. At least that's the way it looks like it's going to go. So what would you do? Buy options for like 9, 12 months out, and I think you're going to get what you're looking for.
All right, and then last question. Robin says, do the new AI algos work just as well as on futures as they do on stocks?
In fact, yes. So you got to realize that all these new stocks, this new AI, and the new crypto stuff is relatively new to trading, right? We've had sectors forever. These are new sectors, and yes, they're not only working well with the algorithms, they're like clockwork. It's almost like the whole street goes in at once. So the answer is unequivocally yes. Going back to that options question, you know, you can always sell puts to enter into Bitcoin if you want to get in as well, right? You can always do something like that. Sell calls, sell puts, depending upon if you want to be long or short. So you can always do that too. And if you get lucky and you don't get filled, you'll make money on the premium decrease. And if you get what you wanted, you'll still get in anyway at your price. So you may want to use options to get in if you're looking to get in now.
All right. Metastock says stop emotions. Trader FLA says the train has left the station on BTC. And Jay
That's
Reardon
what I'm
says,
saying.
how about the BTC halving in 57 days? So
Say again?
Jay Reardon said, what about Bitcoin halving in 57 days?
Now, do you understand what halving means?
I do
They're
not
not going
know.
to have the price of Bitcoin. All right, so in order to have a Bitcoin transaction, you need to come up with a really, really, really big mathematical equation, long number. That's called mining. So every time you're going to do a transaction using anything, Bitcoin or any crypto, there's got to be mining involved. When you mine and mine and mine, come up with that big number, the transaction goes through, you get a piece of Bitcoin for doing that mathematical equation and coming up with that number. The amount of Bitcoin that you get for each transaction will be halved, not the Bitcoin itself. The rewards for mining will be halved. What they're doing is making less and less Bitcoin so that we can stop having Bitcoin when there's 28 million of them, or whatever the year is that we're going to have 28 million of them, and there'll be no Bitcoin left. So you got to start slowing down on the generation of Bitcoin so that all the math fits in the last year of Bitcoin mining and it's over. So you got to start having the amount of Bitcoin that's getting created for doing the mining.
Sounds like that's a decrease in supply to me.
Exactly. So if you, for traders who still don't own Bitcoin, you do understand fine art out there, right? A Renoir, something of that nature. Well, let's say you knew Mr. Bitcoin, we'll just call him Mr. Bitcoin, and he's got a window, a storefront, and he paints beautiful paintings. And every time you walk past, you can buy a painting from Mr. Bitcoin for $53,000. Well, what happens the day Mr. Bitcoin dies and can't make any more paintings? What happens to those paintings? What do you think happens to those paintings? Jeff, what's your answer to that?
I was answering a question in chat.
The answer is the price will go up because they've just become rare and there are no more. Well, that's Bitcoin. It's one of the only cryptocurrencies invented smart enough to know
Supply goes down.
you've got to have a finite amount of Bitcoin so it stops mining at a certain point and then explodes in price. Brilliant.
Awesome. Oscar, thank you very much for joining us. That's it. Everybody, great presentation. Really appreciate everything you do for us. You're great. We appreciate everything. Thanks for coming in.
Well, thank you so much. And remember, traders, stops are in, emotions are out. Put your stops in and keep your fingers off the keyboard when you're in a position. Thank you so much for joining, or at least allowing me to join your session. Thank you for watching. Have a great, great trading week. I hope those ETFs help you make money in the future.
Thank you so much, Oscar. Really appreciate it.
Thank you,
All right.
sir.
Very cool. Let's go ahead and kind of we did actually sit down and we recorded some training with Oscar. And I'm going to talk to you a little bit about that. And we always love having Oscar. He does such a great job. So let me go ahead and make me the presenter here. And I'll go ahead and show the screen. We sat down a few years ago and I said, hey, Oscar, I'd love to create a training class with you. And what can we talk about? And obviously, as you see, one of the things that Oscar does super well, probably better in English than I am. One of the things that he does super well is actually identifying where to put in trendline placements, looking at technical formations and all that kind of stuff. So we sat down and he did 3 hours of instruction on how he would recommend that you draw up a chart. So he talks about trend lines. He talks about drawing up support and resistance. He talks about technical formations. And in total, it's about 3 hours of instruction, as I've just read. So that class is available for you right away. It's available as an instant download. You can buy it. It'll be available for you on our website. It's not a download. It's actually streamed off of our website. But it'll be available for you. Here at the conference today, we're going to do a price of $349 as our conference special. I thought that was misspelled for a minute. You can get it. You can take advantage of getting that at 800-882-3040. You can also chat in with us at metastock.com/sales-chat, and you can also go to metastock.com/conf-promo. And if you enjoyed what you just saw, he does a really good job. I remember we sat down and we did this on like a Saturday morning, and I was sitting there taking notes. You'll want to take notes too, but it's only $349, 800-882-3040. metastock.com/sales-chat or metastock.com/promo. Couple comments. Good job as always, Oscar. Thank you. Huge, Dan, huge look behind the curtain. So anyway, we always love having Oscar in. Let me go ahead and kind of send these over to chat. The emotions are out. Stops are in. Oscar's out. Yeah, thanks again, Oscar. Let's go ahead and take a couple of sponsors. CMT Association has been sponsoring the event for a few years. They do a great job. If you're looking to add 3 letters to the back of your name, CMT, you can find out more about CMT at cmtassociation.org. Very, very huge, well-respected organization. Absolutely love them. Seems like it's been a minute since we talked about one of our other sponsors, Stocks and Commodities Magazine, and I do want to talk about them for a minute. Anyway, I'll make sure to do that after the next speaker. But we love Oscar's energy too, Michael. He does a great job. Stocks and Commodities, I do want to throw them a shout out. You can go to traders.com. You can subscribe for a magazine. You'll instantly get 17,000 articles. And 17,000 articles that are available. They've got 1.3 million subscribers. They've been supporting the Online Traders Summit and the conferences that we've done since I started them, which is, I think, 12 years ago this year. I know it's a long time ago. They've been really, really successful, but a big part of that success is the support that we get from our sponsors and our partners like Stocks and Commodities Magazine. Also, one of the things that I'm super proud of is all of the great sponsors. You got CMT Association, Stocks and Commodities Magazine, AAII.com. All of them have been so great. So anyway, somebody says, Oscar's the best at simplifying charts. Yes, he does a really, really good job. And if you want to get just a little bit of information about how to simplify drawing up charts, here's a good way to do it. Go to the sales chat, go to conference promo, sign up for that class. He does a really, really good job with it. So there you go. Before we get to the next speaker, because we don't have a huge amount of time, but we have a little bit of time, let's go ahead and give out a prize. So I know you guys love the prizes. You know the drill at this point. What I'm going to do is I'm going to have you give me a number. You can give me a number anywhere between 1, and I forgot what the number was, but I'm going to tell you right now.
Hey, Jeff.
88. Yes, sir.
I'd like to remind you that you have the option, and people on GoToWebinar can't see this, but there's the limited edition buy coffee or buy KCC1 mug. I don't know how many of these I can convince my wife to make. Oh, okay. Okay. Oh, I got me going a lot over here. A lot of buttons. A lot of things going on. So yeah.
Oh, there you go.
The mug.
See, there you go.
Yep, there it is.
Yeah.
I'm looking at 2 cameras. Yeah, so it says buy coffee, and on the other side it says buy the commodity, which is KC's. I think that's just the commodity symbol on Reuters, on Icon, right? Not on the general.
Can you tell us exactly how limited that is? How many did you have?
Well, it's so limited that if I drop this right now, it would be 0. It's that limited. But we made 1, but if you want to give away another, I'm not giving this one away. Geez, this is mine. And besides, since it has been mine, I'm sure it's worth a lot of money. I'd say the total price for this right now is $10. You can give it a $10 value, and then the amount of love put into it by me and my wife is priceless. Anyway, just put that out there for you, Jeff.
What a valuable prize. We're going to give away that. And then I'll do another prize too. So Tom comes up with a number for us. No, you're fine. Let's see. Do we have numbers coming in from YouTube? Let us explain it for those that are watching on YouTube. We have a huge amount. We have a good amount of people right now on YouTube that may or may not qualify to get the prize. So maybe you could explain how that process works and how they could qualify for the prize. It's the best jokes. The best jokes have to be thoroughly explained why they're funny. Robin has a good point. I'm going to go ahead and read this out loud. We were talking about stocks and commodities a minute ago. And she says, if you ask for a free sample issue, they'll usually send it to you for more than 1 month. So there you go. If you want to kind of take a look at it, I'd recommend you get stocks and commodities. I love getting the article, being able to read it every month. It's just a really good way to make sure that you're learning. So now, if you would, let's give away a coffee mug, limited edition. And then also we'll give away another prize. Now, if you're watching in YouTube or in GoToWebinar, what I would like is for you to go ahead and participate a little bit. Help me pick a winner. Give us a number between 1 and 9,041. So any number between that. Tom already came up with a number of 4523. I'm going to say that he's the coffee mug winner. And then let's figure out who that was. So if I look at the spreadsheet here for 4523, that would be actually the winner for the coffee cup. We're going to have to mail that to Vietnam. So it's a gentleman by the name of Mr. Dunn. That has a Gmail account. Everybody seems to have a Gmail account. It looks good. Yeah, I think so. Yeah, I don't know that it necessarily treats it like a coffee contract. I'd have to look. So that'll be in the thing. Okay. Robin actually gave us a good number because it's her. She says, I'm assuming, I don't know. She says 8 is a favorite Fibonacci number. So we're going to go ahead and go with 8. So the next prize that's not a coffee mug, actually, let me make a note of 4523 real quick. The next prize will go to number 8. And number 8 is actually in the US. David Thomas with the USA has an email. Oh, I'm not supposed to say the full name. D. Thomas in the USA. But, hey, wasn't Dave Thomas the founder of Wendy's? Yeah. I don't think that's the same one, but at least it's okay. You might want to know, Greg, what they won. It's not a coffee shop cup. All right. Well, let me tell you then. Yesterday, or actually this morning, we had Joe Duffy come in. He talked about the neuroscience and trading. He does a newsletter, and he is giving away a prize that's a 1-year complimentary subscription to his game-changing trading newsletter. It has daily video newsletter analysis, weekend updates, and trade recommendations. So there you go. If either one of you are watching live right now, let us know in the comments. We'd love to see you. We'd love to congratulate you live. But if you're watching right now, let us know. And either way, what we'll do is we'll have Joe reach out to you with the prize. We'll work out getting that to you. So congratulations to both of our winners this time. Greg, thank you for the assist. I appreciate that. And all right, thanks for the help. All right. I can turn it off for you. There you go. Cool. Oh, okay. All right. How's everything going? Are you enjoying the show so far? Let us know. Thanks for all the help. Thanks for the participation. If you have questions, let us know. Let's move on to our next presenter. Our next presenter is Silas Peters. Silas always, you might find out this because you're going to watch, but he does a really, really good job. I like the method that he kind of talks with his 3S code. He's going to talk quite a bit about that, kind of how it works. He's going to explain a method to us. He always does a really good job. We always enjoy having him. We always invite him back. And that's because we enjoy having him. So Silas, how are you doing today?
Hey there, Jeff. How you doing? Can you hear me okay?
I can hear you great. Yeah. Robin says that the event's going well, so I would agree. I think it's been great today. So let's see. Let me go ahead and make you the presenter. I can hear you.
Okay.
And then I'll let you know if I can see your screen and when I can see your screen and all that kind of stuff. We're gonna start you right on time. I was gonna say we're starting you a little bit earlier, but we're not. So,
Okay. Can you see my screen now?
I can. Price action is key.
Awesome.
Three-step strategy. So I'll get out of your way. Let me know if you need anything. I'll be here if you need me.
All right. Thank you so much, Jeff, and the Metastock crew. Always a pleasure to present to you guys. Always have a good crowd. I know you've got a long week of solid education and strategies and learning. So hope everybody's got their pen and paper out and taking some good notes. And again, my name is Silas Peters. I am the founder and head trader of Trades Trending. And let me see, let me get my chat box open. Can everybody hear me okay? Everybody can see the screen. I know we did get clearance there from Mr. Gibby, but I just want to make sure everybody can, those in attendance can also see and hear. Okay, great. All right, so let's go ahead and get started. I'm very excited about doing this workshop. Very excited about all the workshops I do because I actually use these strategies. They work, and most importantly, this is something that you can do. So before we begin, let's start off with the risk disclaimer. We know trading is risky. Past performance is not necessarily indicative of future results or is substantial risk of loss associated with trading, i.e. you can lose money in trading. Don't not trade with capital you cannot afford to lose. So with that being said, let me ask you, what does everybody trade? What is everybody's trade? If you don't mind, just type in the chat box. Do you trade stocks, ETFs, options, maybe futures, Forex? What is everybody trading? We've got a pretty diverse crowd here, diverse group. We've got stocks and options, futures, day trade futures, weekly options, all kinds of different asset classes. And the reason I ask this is because what I'm going to teach you is price action based, and therefore it works on all asset classes, markets, you name it, time frames. And this is what I call my 15-minute trade blueprint. And I've used this for almost 20 years now to trade the following. And the best thing about it, again, is its simplicity. It's a truly mechanical, stress-free, motion-free trading method and can be applied literally on any market or time frame. Now, again, what I'm going to share is highly accurate. It works in all markets, as I've already said. It works in all time frames. It's 99% mechanical. And most importantly, it's simple. I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts in every market situation, from the 2008 financial crisis to roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it, from scalping and intraday trading to swing trading for a few days, and even position trading for weeks and or months. And like I said, you can do this with small, large accounts, and it can take as little as 15 minutes a week if you wish. Now, before we dive in, I'm going to introduce myself and maybe why you should listen to me. I'm a simple guy, simple dude, a family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the market, strong passion for golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, and early New York session trade desk, trading across the CBOT, the MERC, NIBOT, NYMEX, trading for different London and Asian exchanges for our hedge fund, banks, and commodity trading advisors, trading and handling some enormous size. Talking 300-lot bond orders, 400-lot big S&P orders, 100-lot gold option orders, 250-lot Japanese government bonds, you name it. And it was such an eye-opening experience to see how the biggest traders, the market makers and funds, were trading and making decisions. And so I did this for a while, soaking up everything I could, anything market related, acquired multiple futures and securities licenses. I was a sponge. And then my college sweetheart, and now my wife of nearly 20 years, taught me into coming home to settle down and start a family. So we headed back down south. I immersed myself into the quieter side of finance, helping manage equity and fixed income portfolios. And then moving over to the family office side, managing about $2.5 billion for a private family office. And then during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units, and then finally starting my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today I want to help you do this too. But let's quickly get back to the journey. My journey was not always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step, obviously, learning. School cannot teach real life experience in the markets. In the beginning, I made money, a substantial amount of money, but was I lucky? No, but ignorance and greed cost me my profits. I blew up an account and several others in what I like to call revenge trading. And those were all extremely humbling experiences. I almost gave up, quit, nothing seemed to work, always seemed to be on the wrong side. But guess what got me back in the game? I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago, and it got me back on track. I started banking wins. I'd gone off the reservation, looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots. I worked my repeatable process and found overall consistency. Now, who here is a victim or has been a victim of paralysis analysis? I'm raising my hand. I've been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. A lot of you folks have been a victim, and this is really part of the process. I feel like most traders starting off, they fall into this paralysis analysis trap. So I actually have an agenda and promise to use that. We're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. And I think what I can do, I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So let's learn about this exciting strategy together right now. I'm going to show you how we identify with ease, with clicks of a mouse button, these setups here. Say 36% move in GE, followed by a 26% move in GE. This market Barnes Group B, a 21% move to the downside, a 63% move to the upside. Bank of America, 28%, 60%. Gold futures, 240-minute chart, a 4-hour chart. We've got an 1,800 contract winner here, followed by a $900 contract winner here. E-mini S&P on a 5-minute chart. We have 8 points. We have 2.5 points. We've got 6 points. We've got 4 points. These start to add up. This is all in a single day. So hopefully you're seeing the potential here. This is a daily chart of the Aussie yen, just again showing you different market classes, different time frames. It does not matter. And with all of these examples that I just showed you, can it be this easy? Can it be too simple? Well, we know trading is not easy. It's not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and I started focusing on price action by following one simple pattern, that is when it all started clicking. So if you're sitting here as a new trader or maybe a struggling trader, even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. Because I'm telling you right here, right now, it's a simple mechanical setup that anybody can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we'll be discussing today is the 1, 2, 3 pattern. Who here has heard of the 1, 2, 3 pattern, referred to as the 1, 2, 3 top or bottom? Seeing a lot of yeses, some no's, but this is one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. Let's talk about the setup. The setup is price action based. And guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on until they find the perfect location for a new store. And Burger King approaches it differently. They wait to see where McDonald's opens up, and they open one up across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the large traders, large investors, Wall Street, institutional traders, do all the research on which markets to buy or sell. All we have to do is look at price action, which takes into account all of our fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, the setup, again, is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break of the higher high in the case that we're going long, inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Now, the strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. And I'll stress, too, that it works extremely well when the pattern sets up at important areas of support and resistance, supply and demand, head and shoulders, tops, bottoms, and more. So let's take a look at the basic mechanics. Let's start with identifying 1, 2, 3 bottoms. We use and look for 1, 2, 3 bottoms when we're bullish or looking to go long. We are bullish, expecting that market to go up, so we are buying. We're looking to buy the stock, buy futures, buy call options, expecting it to go higher. So point 1 is when we have that lowest low at support, and then we start to get a retracement. As the market retraces higher and stops printing in these lower highs and pulls back, we get our number 2. And as the market stops its retracement and does not take out the number 1 and retraces back, we get a number 3. 1, 2, 3. So again, we're looking to get long on breaks or closes above the number 2. The 1, 2, 3 top, same pattern, same setup, same rules, but inverse. 1, 2, 3 tops is when we are bearish. We're looking to go short. We're either looking to sell that stock or sell that futures contract, buy put options, expecting it to go lower. And so here at point 1 is when we have that highest peak, and then we retrace back. So we get our number 1 point. So the market pulls back, retraces back, stops making these lows, and pulls up. We get our number 2. And as the market stops printing these lower highs and pulls down, we get our number 3. 1, 2, 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. And one of the great things about these setups is we don't necessarily need to worry about the first 2 legs. It's not like we've got to be glued to our screen unless maybe we're scalping. All we have to do to cash in on these 1, 2, 3 setups is spot when we're about to break through the number 2 points. That's simple. Now, let's look at some chart examples. As I said, seeing is believing. And we're going to take a look at this chart of the Aussie dollar daily chart. Now, if you don't trade futures, you could look at, say, FXA, the ETF that tracks the Aussie. Forex traders could look at Aussie USD in Forex. So you're going to see the same pattern, same market. Now, we're also looking at a daily chart. And in this example, we're looking for a 52-week high or 52-week low. That's no rule that's set in stone. We'll talk a bit later on about ways to dial that back to find more opportunities. But for these example purposes, we're going to look for a 52-week high or 52-week low. So we see a red one circle. Why? That's a 52-week high. And so you'll see the market pulls down and then retraces back up. That gives us our 1, our 2, and our 3. And we know as a 1, 2, 3 top trader, we're looking to get short on breaks or closes below the number 2. Now, you say, this is good, this is great, but what about the other important ingredients of the recipe? Where's my risk? Where's my target? All very important questions. So our initial risk is going to be placed above the high of the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So you'll see that right off the bat, we are working with basically a 1-to-1 reward versus risk. That's okay, but we can do better. We can do a lot better. But it's very important to let the market materialize in its anticipated direction. So as we start breaking down and taking out these pivot lows here, we can then move our stop from the number 1 high to above the number 3 point. So you can see we've quickly cut our risk here by 50, 60, 70%. And then the market moves and hits our anticipated profit objective. Let's look at a daily chart of Walmart. Again, 52-week high. That's why we have a red number 1 circle. Market retraces, pulls back up. That gives us our number 2. The market retraces up and then corrects back down. That gives us our number 3. 1, 2, 3. You know now what 98% of other traders out there are struggling with. Where am I going to get in? Where's my risk? Where are my targets? Well, we know we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the number 1. And we know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. That's about $5 in this example. You see the market trades lower. Let's look at some 1, 2, 3 bottom examples. Same setup, just in inverse. Same principle, same logic, same theory. Here is a 15-minute chart of the E-mini S&P. Now, on an intraday chart, whether it's a 1 minute, 2 minute, 5 minute, 10, 15, whatever, does it make sense to look for 52-week highs or 52-week lows? No. So on an intraday chart, we're looking for what we call session highs or session lows. If you're familiar with futures or Forex, or if you're not, they basically trade 23/6. So wherever you start your trading day, whether that's in the 3 a.m. European session, maybe it's the 9:30 Eastern New York Cash Open, maybe it's the last hour of the day, you're looking for new session highs or new session lows. So here we have a new session low. That's why we get our number 1 point. We pull up, we retrace back down, and so we have a 1, 2, 3 bottom pattern. Let's talk about a couple of different entry techniques. One is to work a buy stop, a tick or 2 above the number 2 high. That triggers you into the trade. Now, an entry method that I prefer or I like is to either A, wait for the market to break and then retest that number 2, or wait for what we call a second pass or hook. So we see we break above the number 2, the market comes back down and then hooks back up, giving you kind of a second confirmation. This is what I prefer, but to each his own. So you see we trade up and we reach our profit objective. Waiting for the second pass here can keep you out of potential false breakouts. Sometimes the market will come up, bust out of the number 2, and then come back down and stop you out. Sometimes you don't get that second pass option. Sometimes the market will get you in on the buy stop and take you right up. Don't worry, no need to get the feelings hurt. There's always another opportunity around the corner. This is a weekly chart of Apple. Weekly chart of Apple, a hell of a way to catch some longer term position type moves. Here we have a multi-week low. We also have a double bottom. we have a 1, 2, 3 pattern. You can see that the market breaks out above the number 2 on this large bullish candle. We go sideways for a few weeks. We come back, retest, and hook back up. That's our confirmation to get long Apple. How can we get long Apple? Well, we can buy the shares. We can buy Apple stock. We can buy call debit spreads or sell bull put credit spreads, whatever your flavor or style is. Now, this is an example of a failed trade, a bad trade. I hate to bust your bubble, but they don't all work. But we're all big boys and girls here. You know that. There's no holy grail in trading or in life. This is a trade I probably took here in my live account. We have a session high. We have a 1, 2, 3 top. Aggressive traders, again, either get short on breaks or closes below the number 2, or if you wait for the second pass, you get short on this second attempt. Now, if you sat on your hands and didn't do anything, didn't exercise any type of money management, you're stopped out as the market reverses and takes out number 1 high. If you did exercise any money management, you moved your stop from here to here, you would have been stopped out above the number 3. Now, guess what? We actually get a new entry. This high is higher than this high, so we get a new 1, 2, 3 count, and you can see that trade ends up breaking down and ends up being profitable. This is what I call a no trigger or avoided trade. It's neither good, bad, nor ugly, and I'll tell you why I love these setups. So here we're looking to get long, but the market decides to go lower, takes out that number 1 low. So we start the count over. Here we have a 1, 2, 3 looking to get long here. Market takes out the number 1 low. We start the count over. 1, 2, 3. Market finally does break above the number 2, and we're able to get long. What is likely happening in this scenario? What is likely happening in this scenario, and why do we like it? Well, when we have price making lower lows, new lows, new lows, new lows, new lows. But if we had an oscillator such as a MACD or stochastics RSI doing this, higher lows, higher lows, higher lows, that's what we call divergence. And that puts an already profitable or high odds trade even more higher odds. It increases your odds, okay? Just a trick of the trade. Here is the 1, 2, 3 pattern trade management once again. Confirmation of entry is on a break above the 2 or B point for a long, or a close below the 2 or B point for a short. Exit strategies. I would say if you're only trading 1 lot, 1 share, 1 option contract, whatever it may be, strive to go for the distance between the 1 and the 2 as your first target, because it's uncanny how more often than not, it will hit that target almost to a T and then often reverse. So here's a 1, 2, 3 bottom pattern. 1, 2, 3 bottom pattern. Let's say your target is here. It's very, very likely that it will come hit that often to a T and then reverse. So this is where I'd say work on taking your profit there. Then when you have the flexibility and you to trade multiple contracts and scale, this is where I'd say, hey, take a third, half, 2/3 of your position off here, jack your stops up to break even, and let the trade ride. And then from that point, you have to manage your trade with whatever works for you and your situation. You know, come a dime a dozen, you know, following a two bar SPAC, trend line, moving averages, PAR-SAR, figure out what works best for you, okay? Now, I've showed you that this setup works in any market, whether you trade pips in Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. I've also showed you that this works on any time frame, whether you trade on a tick, 5-minute, 15-minute, hourly, 4-hour, daily, weekly, or more, and on any time frame. Whether you're a position trader, a swing trader, a tick, day trader, what is everybody's trading style? Are you a position trader, a swing trader, tick, or scalp? I made somebody hungry there wanting a quarter pounder. Maybe kind of hungry now that I think about it. So we've got scalpers, day and swing, position, weekly options. And my point is that you have to ultimately figure out or determine what your bread and butter is. These are time frames I like. I also like the 1 and 2 minute when I'm day trading. The 5 and 10, I love the hourly and the 4 hour for intermediate term swing, and then obviously the daily and weekly as well to trade options around. But there is no magic time frame. It's all going to ultimately depend on what works best for you and your situation. Now, you've seen the proof. Let's look at some real trade examples. Not to say what we're looking at were fake examples. Those were real by all means. But let's look at some setups and examples that we utilize in some of our services. This is a chart of crude oil. This is a daily chart of crude oil. And you can look at USO or micro crude, whatever instrument you may be trading personally. And here we are on a daily chart. And I'm going to work myself kind of from left to right. And you guys and gals can read all this stuff over here. But here we have a number 1 point. Why? Because it is a new 52-week high. So we have our 1, 2, 3 pattern. And so we know, remember, we know days in advance where we're looking to get in, where we're looking to exit, being where our risk is, as well as our target. And then we put the trade in and let it rip. So here we get a breakdown below the number 2. We get a slight retest, and it quickly meets our $3 or $3,000 per contract price objective. Then we kind of go sideways, right? We consolidate, range-bound market. A lot of folks ask, does it work in consolidated range-bound markets? Well, sure. Here we have a 1, 2, 3 pattern, range-bound 1, 2, 3, and ends up going higher for profit. I'm personally looking for new swing high number 1s or new swing low number 1s. And that's what we get. This high is greater than that high, so we get a new 1, 2, 3 top. And you'll notice here that this was a very sexy setup because of 2 things. One, because of the high probability nature of this pattern, but also because we are now from the time of year, from a historical perspective, seasonal perspective, that crude and energy markets in general typically top out at this time of year. So that is what I call the perfect marriage in trading when we have both of those line up. And so we get our 1, 2, 3 setup. We break below the number 2. You get 3, 4, 5 days or so of retest, giving you opportunity to get in, and we short the market. We short the market. We reach our $4 or $4,000 per contract price objective. And the trade ultimately moves down another $20 or $20,000 a contract. And all we're doing is we're trailing our stop until we either get stopped out or we get a reversal. We start to get a 1, 2, 3 point here. We start to get a 1, 2, 3 pattern here. But the market then ultimately sells off another $10 or $10,000 a barrel before we finally get a reversal and we get a new 1, 2, 3 bottom. Here's your 1, 2, 3 bottom, your break above. It reaches your $5 or $5,000 per contract price objective. All right, let's look at crude oil, a current chart of crude oil. Does it work in today's markets? Absolutely. This is a $5,800 per contract move, followed by a $4,700 per contract move. Let's look at gold. This is actually GLD, the ETF that tracks gold. Futures, I like to look at gold futures personally. It's a lot cleaner, a lot more fluid, but you're going to see the same pattern, okay? So here we have a 1, 2, 3 top. Market breaks below the number 2, reaches our $4 per contract price objective right here. We then look to flip to the long side. We get a 1, 2, 3 bottom. Market breaks above the number 2, reaches our $2 per contract price objective. Now you might be saying, well, what about the stuff in the middle? Did you catch this 1, 2, 3? Did you catch this 1, 2, 3? Well, maybe so, maybe not. I don't really care. If you did, pat yourself on the back. I'm looking for new highs and I'm looking for new lows. Market finally starts grinding lower. These are all potential number 1 points because they're lower than this number 1 right here. So we get a potential 1, 2, 3 right here, but this little guy takes out that number, that low, so that gives us a new count. 1, 2, 3. 1, 2, 3. Market gaps higher 2 days in a row, comes back down and retest, hooks back up, gives a trend line retest. That's our confirmation to get long gold via gold futures, GLD, call options, selling bull put credit spreads. Again, whatever your flavor or style may be. What about, current market environments? Recent trade setups, a $10,000 per contract move. All right, let's look at Delta Airlines. I know this is becoming redundant to you by now, but I'm just trying to hammer home the fact that this happens over and over again. 1, 2, 3 bottom right here on Delta. 1, 2, 3 bottom. We gap above the number 2. We come back and retest. Here we have a new number 1 high. 1, 2, 3. Market gaps below that number 2 again. We've got students that will come in and aggressively, short the stock, buy put options. I don't personally chase these, but that was a $4 move. We get another chance, a new number 1 high, this high greater than that high. 1, 2, 3 top. We again sell off aggressively below that number 2. We get a small retracement, $8 to the downside, and then we get a new 1, 2, 3 bottom. We trade higher, we go higher, we pull back, get another opportunity to get long, and that's an $8 move to the upside. What about, current examples? 1, 2, 3 bottom, 1, 2, 3 bottom, 1, 2, 3 bottom, 1, 2, 3 top. You see how these occur over and over again. This is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc for you Forex traders. Here we have a 4-hour chart, multi-session low, 1, 2, 3. Again, those aggressive traders are getting long here, or you can wait for the retest or hook back above. You reach your 70 pip profit objective. And then what do? We don't do anything. We have a potential 1, 2 here, potential 1, 2 here, potential 1, 2 here, potential 1, 2 here. We finally get a 1, 2, 3 right here. 1, 2, 3. We break above. We come down. We come back up. We hook back down, and we reach our 40 pip profit objective. CAD Swissy, 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. Day traders out there, any day traders out there, yes, 5-minute chart of the NASDAQ. New 1, 2, 3 bottom. We break above it, number 2. We come down. We hook back up, reach our 13-point profit objective. New session high, 1, 2, 3. We break down below the number 2. We then go sideways. We have to pop some tums. And then we finally break down. We reach our 20-point profit objective. Guess what? New session low, 1, 2, 3. Break above the number 2. If you're lucky enough to get long on that retest, you reach your 30-point profit objective in about 2 or 3 bars. A 5-minute chart of the NASDAQ using the 1, 2, 3 method. So why are you here? Why are you here? You're here to learn a mechanical, done-for-you strategy for all markets in all time frames. This is where I'm going to ask you, have I shown enough proof? I'm not sure if it gets any more mechanical, simpler, easier. There's no guessing when to get in. There's no guessing where the market is likely headed. No guessing where to get out. If I had 100 traders in here looking at the same chart, we should at least have 99 seeing the same thing. There's always going to be somebody that tries to overcomplicate this. We do not need to make this rocket surgery. But wait, there's more. Do you remember the recent case studies we went over? Crude, gold, Delta, NASDAQ. Well, you're in for a treat. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. Here is the crude oil example from earlier. Here's the crude oil example from earlier, where we have the 1, 2, 3 pattern plotting onto our chart for us. Green arrow is 1, red arrow is 2, Blue arrow is 3. Is that complicated? If and only if we break below the number 2, we get a chevron print. If and only if we break above the number 2, we get a chevron print. When that happens, we get beautiful lines plotted onto our chart for us. With your entry, your risk, target 1, target 2. Entry, risk, target 1, and target 2. Now you see green arrows here as we work ourselves down. It's because we're getting new number 1 lows. New lows, new lows, new lows, new lows. We never break above the number 2. We never break above the number 2. Hence no chevron and hence no pretty lines. Here we are on gold. Here's our 1, 2, 3 bottom. We break above that number 2. We get plot entry, target 1, target 2, and risk. Target 1 is the distance between the low of the 1 measured to the high of the 2 measured up, and TP2 or take profit 2 is simply 2 times the distance of TP1. Here we are on delta. There's your long setup, your short setup, your short setup, your long setup. 5-minute NASDAQ. 5-minute chart of the NASDAQ. Here's your 1, 2, 3 top. Hit target 1, we hit target 2 to the tick, which also happens to be a session low. So we start a count. 1, 2, 1, 2, 3. We break above, we come down, we hook back up, we hit target 1. We don't quite hit target 2, but it's close enough for government work. Shouldn't have lost any money. And then what happens? We get a new low. This low is lower than this low. 1, 2, 3. Market just peaks its little head there above the number 2, comes down, we hook back up, retrace back down, and then we hit target 1. Notice while we're waiting for target 2, we actually get new session highs. This is cluing us in that we may need to get ready to exit or go short. Well, we do end up hitting target 2, but then we also get a 1, 2, 3 top. We break down, we come up, and then we come back down again for that second pass. Hit TP1, hit TP2, and then we're working a new 1, 2, 3 bottom over on the right-hand side. So is this trading for you? Is this trading for you? Only you and you only can answer this. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talk about, indicator overload, paralysis analysis, if you just want to simplify your process, maybe you're already a profitable trader, congratulations. Maybe you want to add another strategy to your toolbox. Or if you need a specific step-by-step plan and avoid learning this all on your own, then this is something that could be for you. This is something that could be for you even part-time. By tracking, trading, simple 1, 2, 3 patterns over and over again. You're on cardinal health, long, short, hitting target. These are beautiful charts, beautiful, clean, simple charts. Daily chart of Google. We have a short, we have a short. What can you do here? Oh, you can sell the stock, rather expensive. You could buy put options. You could sell bear call spreads. 4-hour chart of the Canadian dollar. 4-hour chart, there's your long, there's your short. 233 tick chart of the E-mini S&P. I love the 233 and the 610 tick. If you want, like the scalp, and you want multiple opportunities each day, you consider the tick charts. You're plotting price action. Now, why do all the work when we can let technology do the heavy lifting for us? You can see here, I pull up a scanner. I'm scanning for 1, 2, 3 tops across the Russell 1000. Only stocks that are optionable, $20 a share or greater. I hit the green scan button. What would take me maybe days, maybe weeks, is now done in seconds. And I've got one monitor dedicated to multiple watch lists, running 1, 2, 3 tops, 1, 2, 3 bottoms across stocks, futures, Forex, different time frames. Now we built this unique 1, 2, 3 indicator, this 1, 2, 3 pattern indicator for Metastock, of course. Very, very beautiful looking chart, very simple. Do you want to be long? Do you want to be short? Even a nice smiley face telling you and congratulating you for your trade. We've had it built for TradeStation, indicator and scanner. NinjaTrader 8, indicator and scanner. Wealth Charts, indicator and scanner. TradingView, indicator only because there's no scanning capabilities. And then MetaTrader 4, MT4. It's a 4-hour chart of the Euro Kiwi. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a process. I'm using this pattern, using this setup, using the strategy, scanning for these setups, then going to my platform for entry and then managing that trade through to exit. And you can start doing so today using these predictable patterns with what we call the 3S code. Now, here is the offer you simply cannot refuse. We've opened this up for 25 folks. You're going to get the 3S indicator and scanner, the 3S code optimizer, access to my weekly strategy and scan sessions and private Telegram room access, giving you also 3 additional bonuses: 25 top option strategy guide, my chart pattern principle trading guide, and all the quick start guides. You can get started today for a one-time payment of $397. And the offer link is metastock.com/code. Metastock.com/code. And I just put that into the chat box for you. Or you can also call 1-800-882-3040. Guys, this is lifetime access. Any new enhancements, any platforms, anything that we decide to change or do, you'll get those upgrades as well. You can get access to multiple platforms if you wish. So here are the platforms, again, that we do offer this on: Metastock, Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, and Wealth Charts. We don't have a limited license rule. If you want to load this on Metastock and load it on another platform, you have the ability to do that. Now, you're also going to get access to the weekly strategy and scan sessions. This is where we meet every single week. We meet every Thursday at 11 a.m. Eastern. We go through scans. We go through setups. We talk about day, swing trading using the 3S code, using options, trading minis, micros, other rules, nuances, and so much more. This is your chance and your opportunity every single week to ask me questions. Ask me to take a look at this, take a look at that in a real live market environment. Now, let's be very clear about what the indicator and scanner includes. Again, you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. That gives you your entry, exit, stop, targets, all color coded. You can customize the settings. You can customize for different look back periods to find more trades, less trades. If you want to change a color from red to hot magenta or lime green to dark green, you have the ability to do that. You can scan for setups only or trigger only or both. You can scan for tops, bottoms, or both. You can scan for intraday setups as well as intermediate to swing setups, all at the same time, as well as scan across any instruments, depending on what your style is and what you are looking for. You're also going to get the 3S optimizer, where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across different inputs and settings to find the best optimization parameters that fit your trading style. We've had the optimizer built for Thinkorswim, TradingView, TradeStation, NinjaTrader 8, giving you all of the stats and the data you need. If you want to add and edit other variables such as EMA crosses, trend EMA, whatever it is, you can manipulate that and you can get all of your data and results in the nice looking table there. Now, with the 3S code package, I'm throwing in additional bonuses. This trading manual, chart pattern principle trading manual and guide, this will help you jumpstart you by teaching how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Plus bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern, and much more. You're also going to get my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important to me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code. And then lastly, you're going to get access to the private Telegram channel. Every day I am posting an idea. Could be a stock, could be an ETF, could be a futures, could be a commodity, could be a Forex pair. Different setups using the methodology and the analysis that we employ at Trade Training and that you will learn to employ as well. These are some testimonials. These are notes and comments that have come into us. I don't ask for them, but they come in. And it's very pleasing, very humbling to me because it shows that people are executing. They're taking action. You're only going to see results if you take action. And these folks, small sample here, small example of folks that are doing that and having success. So are you ready? And go to metastock.com/code. And you can also call 1-800-882-3040 if you would like to speak with a representative or you need help placing your order over the phone. So here's what you're going to get, guys. You're going to get the 3S code indicator, the scanner, access to the weekly strategy and scan sessions. If you are busy, you're at work, you happen to miss one of the sessions, no worries. Those are all recorded and put into the members area for your viewing convenience. You're also going to get access to our private Telegram room and the 3 additional bonuses and much, much more, all for a one-time payment of $397. It's going to give you complete lifetime access. And let's take a few questions before I hand it back over to Mr. Gibby and the Metastock crew. Can you use it on Heikin-Ashi? Yes, you can use it on Heikin-Ashi and Rinko. I do not use Rinko, but you can. Okay, Robin says they trade divergence all day long. Yes, divergence is awesome. Divergence is great, and we use it in conjunction as one of our confluence pieces with the 3S code. Yeah, I mean, I used to do this all by hand, guys. I did this all by hand for years. Think about that. Used to do it by hand on multiple markets and multiple asset classes. Talk about the time commitment to do that. Now, using technology, using the power of the platforms like Metastock that can automate a lot of that for us, is such a time saver. And now we're scanning for these ideas in real time. We're not having to look at a chart and go, well, I think that's a 1, and yeah, I think that's a 2, that's a 3. All right, well, let me calculate that. That's $56.13, and then this is, you know, $62.25. Let me get my calculator out. All right, my target should be $4.50, and my risk should be down here. Nobody's got time for that, especially if you're trading on the lower time frames. And so that is what why the power of technology is so crucial, letting that do the heavy lifting for us. And it's an idea generator. It's an idea generator. When you have these scanners running in the background, you go, okay, I've got my scanner scanning across the S&P 500, scanning across my basket of 10 favorite futures markets, scanning across the daily chart, scanning across the 4-hour or the 10-minute, whatever it is that you like to look at and consider. Yeah, absolutely. If you want to back test, you can. There are the signals do not repaint. The signals do not repaint. So depending on your settings. If you just have the general settings, your charts are going to look like mine and look like Joey and Billy and Bobby's, because the signals are the same. Now, you do have the ability to go and manipulate that data or manipulate those variables depending on, do I want to see more setups? Do I want to see less setups? All of those settings and details are explained in our user guided manuals. Yes, if you have questions, or whether it's in regards to installation or anything about the indicator, you can always email our team, support@tradestraining.com. We've got installation manuals, guides, videos, you name it. We are here to help you. We are here to help you, and our guys can even do a remote session if needed to log into your computer and help you get set up. And then Metastock has a wonderful support team as well that can help you get moving in the right direction. Yes, yeah. So how to get access to Metastock? So once you get in, you'll get a membership welcome email that's going to have your credentials to access all of your indicators, your scanners, your resources, and guides, and all that good stuff. For Metastock, there's a box inside the members area where you're going to put your name and email address, and that will fire off an email to them granting the access. Absolutely.
I wanted to also say that it's also instantly available on our site too. So they'll be able to, as soon as they order, it'll be available for a download too.
Yes. Thank you for that.
Of course. A couple things that are coming out of YouTube real quick, and none of them are real questions, but I don't want them to be messed, because Noel says, this was amazing. I think he's referring to your presentation. And Long also says your presentation is great, and I appreciate it. So,
well, thank you so much. I'm glad it made sense. It was helpful. I think this really resonates with a lot of folks because it actually, the simplicity. I'm not implying that trading is easy, is simple. We still got to do our work, right? But we're using these tools. These are time tested, tried and true, simple price action. Price action governs the market, and all we're doing is trading price action here. And we've put in the time and the effort and the financial resources to take this strategy and this concept and let technology do the work for us. And so now we have ideas and setups, every single day, all day, if that's what we want. If we don't want that kind of action, then we just apply it on a higher time frame, a daily, weekly, or swing trading basis. I love using this strategy to trade options. I primarily like to sell options, and so we have some tremendous setups here, and so we're very, very proud of it. And we've added a couple of things here and there over the years, but we really don't have to. We're really nothing more to add because it's just a simple price action pattern. So I appreciate everybody's time, and
one more
special
question.
Thanks to Jeffrey and the Metastock team for having me. Always a pleasure to be here.
All right. One more question that's coming in real quick for you, Silas, is how long do they get access to the strategy and scan sessions?
There is no expiration.
Okay. Cool.
No expiration. So
that's always one thing that
can't
really
promise you forever, because I unfortunately won't be here forever, for eternity. But as long as I am, we'll continue to do the sessions.
It's such a great value. Like Tom wants to know, does your 1-2-3 system match with Elliott wave theory?
I've had that question before, and I honestly, I'll be fully transparent. I don't study Elliott wave. Don't study Elliott wave. There are some similarities. But there are also some differences. So if you do employ Elliott wave theory in your strategy set, you can compare the two and see what similarities and differences are. And there are some, but I do not personally incorporate that into this particular setup strategy.
Thanks for that question, Tom. Silas, I just think it's impressive. And I'll just say this as we kind of get out. All the stuff that you include, like the unlimited strategy sessions, the trainings, the videos, the software, the access to as many licenses, as many platforms you want it on. It's a great value for like $397.
Yeah. Yeah, I would agree.
Okay.
All right, Jeff, thank you so much. And welcome to all the new students. I want to thank you, and we look forward to having you as part of the team. Take care, everybody.
Thanks, Silas. Appreciate it.
Thanks so much. Bye.
Okay, let me go ahead and do this real quick. Okay, and then you should see my screen. I just pulled up a chart of Meta. I really like the way that this looks in MetaStock and kind of the way that everything is drawn. If I just pull up a random stock, you can see if it's starting to see a 1 and a 2, and then we'd be waiting for a 3 pattern. And it's actually labeling that. It's on the chart. It's ready for me. I can kind of see it. If we look at some historical patterns here on Meta stock, one in Meta, you've got the 1, 2, 3. You had a trigger right here, hit your first target and your second target right there. You know, so very, very clearly labeled, very, very well articulated. In terms of the scanning, if you want to be, you know, I love this scanning in MetaStock. It does such a really good job. And I like the way that they created this, because if I want to find stocks that have triggered, I can run a scan. There's a scan that's available that allow me to find all of those stocks that are actually triggered right now. If I want to find stocks that have hit this 3 point and are just waiting to trigger, I can kind of set up a watch list and kind of keep an eye on the stocks that are likely to trigger. And the implementation in this is really, really well. There's customizable variables. You can go in and kind of say, well, I want at least this many days between bars and 1 and 2. There's just all kinds of really interesting things that you can do with this. And it's a really, really cool add-on to MetaStock. And I love everything that Silas is including. Like I just told him, not only are you, actually, there's a lot of stuff in here. I'm just going to kind of skip a little bit. But for that $497 cost, $397 here at the conference, you'll get the private Telegram room, you get the cheat sheets, the VIP options guide, the support to help you get started. You can call our support team. They're great. They're right there. They do a good job. You can call them if you have questions that we can't answer. Just everything that's all included. You get access to any platform they've ever designed it for. Such a great value that Silas has got to the table, and unlimited ongoing support for it as well. Those sessions forever. So $397 is all you'll pay here at the conference. We do offer that with, I don't like the way that came in. Let me go ahead and get that on the screen. Let's see what happens when you do, you play with your slides right before you show up. $397 here at the conference. We're going to back that with a money back guarantee. If you haven't tried MetaStock yet and you want to see what the big fuss is about, why it's been rated 31 years in a row, we'll give you a trial with your purchase. So you can scan this QR code. You go to metastock.com/code. You can go to metastock.com/sales chat, or you can give us a call, 800-882-3040. Tom says, thanks for the answer. Great presentation. And yeah, such a great value. So really appreciate that, Silas. Good job. Thanks for coming in. Metastock.com/code. I'm going to go ahead and put that in the chat. I don't think somebody has yet. Well, actually, I think I did earlier, but here you go. All right. Let's talk about one of our sponsors, Stocks and Commodities Magazine. I know I talked about him a little bit just before Silas started. We do really appreciate Stocks and Commodities. Great magazine. They do a really, really good job. They've been sponsoring our events since we started it 12 years ago. And we really appreciate the sponsorship. So over the years, there's 17,000 articles, 1.3 million subscribers. They've been making the magazine since 1982. If you want to improve the trading that you're doing and learn about technical concepts and have those delivered to you in a magazine format once a month, go to www.traders.com and sign up. It's a really good magazine. So with that being said, oh, wait. Before we get to Kelly, I'm going to give away Around the Horn. So what I'm going to do actually is we got to have some physical copies of this out of print Around the Horn. Adrian said just a few minutes ago they're working on a new version. This is a version that you can get right now if you're lucky enough to win. So Kelly, I'm going to actually, I know you're in the room. I know you're ready to kind of take over and do the thing. I'm going to actually have you assist me with picking a number as we get you started. So Kelly, are you ready to pick a number?
I have a great assist record, so I think I can do that.
Now, the number that we need you to give is anywhere between 1 and 9,041.
9,041, you said?
Yeah.
Let's go with 4,629.
4,000. That's actually pretty similar to the last one.
Oh, really? Oh.
129. Well, I think we had like, I'm not sure. I'd have to look at it. I think we had like 4474 something. It was in the 4,000.
Oh, that's crazy.
Yeah. Oh, you'll never guess who won this one. I know you don't like me to dox people on the internet, and I'm going to. This person signed up. His name is Trader, Mr. Trader.
Oh, Mr. Trader.
Yeah, Trader won.
I've met Mr. Trader. He's a good guy.
Yeah. If you signed up and didn't want to give us a name and use Trader, you can win this book anyway. I will probably need to get a good name from you. You also have a Gmail address, so I don't know. I'll drop you an email though. I'll see if I can collect some good, like a good first name, a good last name, and an address. And if so, I'll send you a book. It's free. It's yours. So there you go. Kelly, I'm going to introduce you, and I'm going to do my best. So
I would be honored to have you introduce me, Jeff. If anybody, if anybody wanted somebody to introduce me, it'd be you.
All right, cool. Well, the handsome gentleman next to me is Kelly Clement. Kelly has actually been working at Metastock for quite some time. We've been working together. I consider a very good friend. He's very friendly. We love to have him in the office. His current title is president. His unofficial title, like we like to call him around the office, is the decider. But he does such a good job, and we absolutely. He is part of what makes Metastock such a great environment. It's such a place, such a good place to come to work at. So, with that being said, Kelly, it's your turn. Go.
Thank you very much, Jeff. And I'll say that back to you. You may come in here part of the great experience too. We here at Metastock just are thrilled to be having this conference. It is just such an exciting thing that Jeff puts together every couple of months to have 48 speakers come in, talk about the markets. I mean, what a great time to kind of sit down, refocus, learn about the markets, learn what's going on out there, what top strategies are kind of working right now. And that's a lot of what we're going to talk about today as well. So I'm excited to be here. I've loved hearing some of the presentations. You know, Silas's presentation that we just had, I love his subject title that he has, Price Action is King. And that is so true when we're looking at charts. Price action is absolutely just a key part of the equation of what we're looking at in charts. So one of the things I would like to do before I get into my presentation is I know there's actually a poll up on YouTube about favorite indicators, but I'll see one going on over in GoToWebinar. So if you could throw in there, even on YouTube, just type in your favorite indicator. What is your favorite indicator that you're using right now? So put that into chat. I'd love to see it. And then from there, I'll take some of that information and we'll maybe talk about it throughout the presentation and incorporate it a little bit. So throw your favorite indicator, what you're using right now, and what it is. Just MACD, Bollinger, RSI, whatever it may be. Just put that into chat on either GoToWebinar or YouTube. Now, before I do get started, I know you guys are absolutely loving to hear all the disclaimers. It's your favorite part of all the presentations is the disclaimer, but you know, it's one of those things we do have to do. We do have to read a disclaimer. So I'm going to go ahead and go with that really quickly. This demonstration is designed to instruct you on using Metastock, I hope you're using stops, and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines for interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. And then finally, Metastock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as an investment advice or a solicitation to buy any security. So we're not telling you what to buy or sell. We're not saying you should buy any particular security. We're not endorsing anything, and that's particularly true. So let's see kind of what's coming in here. I love hearing what people are using. If I can move this chat window out of the way so I can see this. Okay, Jeff's using the T-line. All right, we got some volume profile and RSI. The awesome oscillator. I haven't heard the awesome oscillator. Yeah, I haven't looked at that one for a while, Daniel. That's a good one. Divergence detector that you had built for you. Great, thank you, Robin. Stochastics. Okay, great. So we've got quite a few different indicators that people are using. So we're going to talk about a couple of things today and how we can actually figure out where our indicators work, where they don't, and how we should be applying them. And where I always like to start my presentations is here in the cockpit of a plane. And the reason I like to start in the cockpit of a plane is because when we're talking about trading, we talk about a lot of different things. You've heard from a lot of different presenters that, hey, you've got to have a trading plan. You've got to be following your rules. And that kind of starts and equates here in the cockpit. And the reason I like to show this is because when you get on a plane, I travel a lot, so that this is important for me, particularly. When you get on a plane, the pilots are sitting up front, they have that door shut, and you hope what they're doing up there is sitting down and going through their checklist of things, going through step by step, making sure everything on that plane is ready to go before it takes off. Now, one of the things I actually like to watch is a show called Airplane Disasters. I don't know if you've ever seen Airplane Disasters. I don't like it for, obviously it's sad when a plane crashes, but what happens in airplane disasters is they will go to a crash and they will go through what happened on a crash and go step by step backwards to try and figure out what went wrong. And what happens is if it's not a mechanical issue on that plane, odds are it goes back to the cockpit and something went wrong in the cockpit. They didn't follow their checklist. Something was missed. And that kind of rings true with our trading as well. Okay, if we're not following our checklist in our trading, that's when things go wrong. I know when I make bad trades, it's because I didn't follow my checklist, something went wrong with it, and I blew it. And I can go back and I can take a look at my trades and say, okay, well, hey, I didn't follow this rule, and that's where it hit me. Now, that's not to say I never lose. We all lose in trading. And if you're not losing in trading sometimes, well, hey, I'd love to hear from you, because it is a thing. It is part of trading. Everybody's going to lose in trading. And what we're trying to do in trading is saying, okay, if I'm trading, if I have bigger wins on some trades and lots of little losses, then I'm going to overall win. And that's what we're going to go through today. We're going to talk about those strategies and how they work. Okay. So today we're going to talk a lot about trade identification. One is how to find the best stocks to trade, which is a question we all have. If we don't have that question, or futures or Forex or crypto, whatever it is you're trading. Robin, you're absolutely correct. Airplane companies do tend to lose much of their value after following a crash. That is true. We're going to talk about when you should get in and out of a trade. We're going to talk about testing your system before you spend your first trading dollar. And then finally, how to add clarity to your trading decisions. And Silas talked a lot about this, is testing your system and understanding your system and what's going on with it. And that's a lot of what we want to talk about today, is that trade analysis and doing that. But what I want to focus on first is talking about the different types of indicators. And if we talk about indicators, we can really break them down into 4 different groups. One, we can talk about trending indicators. We can talk about momentum indicators, volatility indicators, and volume indicators. Okay, so if I go into this screen, this is just some examples of those 4 different groups. So if I'm talking about trend, we have moving averages, MACD, are trending indicators. Momentum indicators, we talk about things like stochastic and RSI. Volatility, Bollinger Bands, average true range. Bollinger Bands is one of the top ones of our poll today. MACD was among those. RSI was kind of down on the bottom side. We have volume, on-balance volume, and chicken money flow. Okay, just some examples. Now, if we look at a chart, so this is just a chart of Alphabet, and I look at this, and I want to trade Alphabet or Google, whatever you want to call it. How do you know which indicator is going to be the best to use at it? Should I be using moving averages? Should I be using MACD? Should I be using something that's more momentum based? Is volume better here? And that's what we're going to try and figure out. Show you how you can figure out which indicators work best on a particular stock. So we're going to do two different workflows today. One, we're going to use your preferred indicators to find opportunities and then see if they actually work on the stocks that are presenting opportunities. And then we're going to find the best indicators to work on a particular security. So a little bit later, I'm going to ask you for some securities that you might be trading, some futures, securities, whatever it may be, and we'll kind of plug them in and we'll have it run some scenarios and see what it does. So keep that in mind for a little bit later. But let's go ahead and that's pretty much it for my my PowerPoint. The rest of the time I want to spend actually analyzing the market, looking at the markets, trying to figure out where opportunities are. But again, I'm not giving any recommendations here. This is just informational purposes. So let's go ahead and talk about our chart right here first. Okay, so I have IBM. Maybe you've heard of it. It's a small little computer company out there. They do a few little things. So what we're going to do is we're going to just talk about IBM for a minute. Same question as we had with Google. What indicator should I use on this? What I'm going to do is I'm going to take one of the indicators that people were mentioning. Let's just grab the relative strength index, or the RSI, and talk about how to trade the RSI a little bit, and then we'll see if it kind of fits. So let's just grab the RSI indicator here, relative strength. We'll just put it onto our chart. Now, if you're not familiar with the RSI, it is a momentum-based indicator. Okay, a little bit of overbought, oversold is what we're trying to identify here. And what you'll see here with the RSI is you got the 70 and the 30 line. The 70 and the 30 line are basically indications of when it's overbought or oversold. So when we're crossing below the 70 line, that's a sell signal. When it's crossing above the 30, that's an entry signal. Now, a couple of the great things in Metastock, and you've been seeing this over the last few days, is what we call the expert advisor. So if you're not familiar with how to use an indicator like this, you can actually, let's go down to RSI. You can actually put this expert commentary and expert advisor right on your chart to help you understand what it is. So we're just going to look at this for just a moment. Okay, so what it does is it'll tell us how the RSI gives signals. It gives us our tops and bottoms, which we were just talking about, bottoms and tops here. So it's not currently giving a signal because it's just kind of floating down here. So these would have been our last signals to sell IBM. Okay, now this will walk us through this and kind of go through it. But again, the question is, does this indicator work? It seems to. If I look at it, well, RSI buy, RSI sell, okay. RSI sell, RSI sell. Okay, this one didn't work. This one kind of worked. This one kind of worked. Okay, it kind of gives us a picture a little bit of how it worked. But that's not a great way to kind of really, really know if that indicator has worked well on this over the time. I'm getting a question, can the speaker make the screen bigger? I don't actually have a way to make it any bigger. It might be that you can get rid of my picture and just kind of scroll it up. Lori, if that helps you any, you can just kind of move the picture of me up or squish me down so you don't see me so much. Okay, so what we're going to do is we're going to kind of step back here and we're going to find some current RSI opportunities. So I'm just going to go into the Explorer, which you've been seeing quite a bit of over the last few days. The Explorer is one of the best tools in Metastock, and you've heard that over and over and over the last few days, to identify opportunities. So I can just type in here, hey, I want to look for RSI. So we're going to come down here to the relative strength index, RSI. I'm going to select the S&P 500. So we're going to look through the whole S&P 500 for current RSI signals. So we've got the S&P 500, RSI, and we'll start our exploration. Now I'm just doing this on a daily chart. You could do this if you had, depending on the version of Metastock you had. You can do a 1 minute chart. You could do a 5 minute chart, a 30, an 88-minute chart, a weekly chart, whatever time frame you want to look at when you're scanning, you can absolutely look at it that way. But we're just doing it daily in this example. Larry, thank you. There is a full screen option if you X out of chat. That's a great suggestion. Thank you. Oh, and Daniel said that as well. Thank you both. Okay, so after scanning the S&P 500, we have 13 results. So it rejected out 490 and basically said 13 today have either a buy or a sell signal. And I can rank on these, so I can say, okay, hey, these have a buy right here. These have a sell right here. So more sells than buys, but that's okay. So it all depends on which side of the market that you're on. If you only go long, well, I only care about the buy column. If you only go short, you only care about the sell column. If you go both, well, you've got great opportunities here. What we're going to do is let's just open up health peak here. So I'm going to close it. I'm going to put the RSI on the chart, just like we did with the IBM. Because, okay, and you can see it's crossing above right here. It's crossing above that 30, so it's triggering its entry. We can put on our expert advisor to kind of see that example. So that matches right up there. There's our entry. The market's closed, so this would be our end of day value that we have that signal there for. But I still have the same problem, okay? I had 13 signals. I can pull up this chart and I can see that I have a signal, but I still don't know how well this system works with this stock. So what we want to do is we want to kind of do a personality test. Because when we talk about trending indicators, trending stocks, well, that's a good match. Well, if I have a momentum, a stock that's oscillating, well, is it going to work well with a trending indicator? Not really. Okay, think of it like a dating app. Okay, so we want to match people with like people. It's a eHarmony for charts is what we're going to do here. We're going to go into an app in Metastock called the System Tester. And the System Tester is basically our personality profile. It can just go in and say, okay, well, hey, if I have those 13 stocks, I want to put them against this system and see which ones work best and see if I've got a good personality match. So that's what we're going to do now. So I come into my app, the System Tester. We're going to look for RSI again. And then what we're going to do is we're going to go down here to all our lists. And if I scroll down to the very bottom, I always have this option down here. It's called Last Exploration Results. And the last exploration results are those 13 stocks that we just looked at just a moment ago, okay? So now we want to tell the System Tester a little bit about us. I'm gonna tell a little about me, just a little bit, and how I trade. Now, if I were to ask each of you in here, and this is a question that I don't want answers to, is if I were to ask you, okay, well, how much money do you have in your trading account? How much are you willing to risk in that? How much do you pay in commissions? How much do you trade on margin? These are all questions that are different for every trader. And it's important in system testing and our personality test to be able to say, hey, this is how I do it. So it's going to be different for me than it may be for somebody else. And that's an important part of this. Okay, so I can tell the System Tester whether I trade long, short, or both. Since we did longs and sells there, I'm going to do both. But you'd want to say, hey, I'm a long trader only. Well, you'd come in and select long only. Okay, then you can tell it how long you want to look back for. Okay, so if I wanted to look at this for 5 years, that's what this is, 1,250 records. to about 250 trading days a year. It's about 1250. So I could do over the last 5 years to kind of see how it's performed in different markets and done in different times. So we'll leave that for now. If you're doing, again, a 1 minute, 5 minute, 30 minute, depending on what version of Metastock you have, we'll talk about that a little bit later, but we'll just stick with the daily for now. And then here we have our trade options. Okay, so this screen we don't need to do anything with. Now this one we do. This is our account settings, and this is different for everybody, okay? Because if I say I have $100,000 in my account, and then I can tell it, well, I only trade a certain number of units. Well, I trade 1,000 shares at a time, 10 million shares at a time, 2 shares at a time. Whatever it is that matches your trading style, you can say that, okay? You can also say, I'm willing to spend 5,000 per trade, or 10,000 per trade, or 10 million per trade, whatever it is, whatever you have, or you're willing to risk in the market on a given trade. You could also do percentage of available equity. Now, percentage of available equity is saying, well, up here, this 100,000, what am I willing to risk out of that 100,000? So right here on my example, I have 20%. Now, are you ever going to risk 20% of your money in a given trade? Most experts will tell you not to risk that much in any given trade. Now, why am I putting 20% in here? Well, the reason I am is because it's an easy math example, and that's the only reason why I do that. Okay, so if I say I have $100,000 and I'm willing to risk 20% of that, what am I risking? $20,000, okay? If my money goes up to 200,000 and I'm risking 20%, well, I'm risking 40,000 now. And if my money drops down to 50,000, 10,000, okay? Math example, you put in what you're willing to risk in order to be able to most effectively trade, okay? If you're trading futures or Forex, you just do this little points only test option up here is what you would put in. Broker, so you can say in here if you trade on margin, if you want to account for money market in your account when you're in or out of trades, I recommend that leaving that as 0. If you trade on margin, you can put that in here. Now, here you can also put in commissions. Commissions are an important part of trading cost. Now, here in the US, if you're joining us from the US, most of us don't pay commission anymore, okay? It's a pay for trade. We don't pay commission, and that's a great thing for us. Now, if you're in other markets, I know there's still a lot of commission paid. It can be very expensive in some markets to trade. So you have to put that in here as part of that. And you can put in points per transaction, points per unit, percent of transaction, whatever it is or however it's calculated. The system tester is very, very flexible with that. Let's see. Patrick is asking, is all this pre-recorded? No, this is not pre-recorded. This is live, Patrick. So you can ask any questions during this presentation and we're happy to answer them. However, you will be able to watch recordings later if you want to. Okay, and then finally, trade execution. Now what this is an option here saying realistic market prices. Well, what in the world would you think realistic market prices are? Right? We look at prices on the market, aren't those real? Well, the answer to that is realistic market prices means basically, hey, I got a buy opportunity here. When am I really getting into that trade if I take that trade? Well, it's not at the close of market today, it's at the open of the market tomorrow. And that's what realistic market prices is. Okay, so it's just saying we'll get in on the next bar. So you can leave that alone. You can change that if you want to, and then you can account for slippage. And slippage is, well, hey, do you always get in right at the market open, or maybe it moves 1% or 2% before you get in? You can account for that as well. Most people just leave these settings as defaults and don't mess with them, and that's fine. But I recommend taking a look at them. Now, I am going through this kind of fast, but the great thing about Metastock here, and you've heard this throughout, is we have great help that you can go through. We have amazing support where you can call and say, hey, could you walk me through this? And they'll handhold you and walk you through anything you want to learn, and it's all free support. It is lifetime free support. That is not something that you can go to a lot of companies and get, is lifetime free support. So huge benefit to Metastock in having that free lifetime support. We love our support staff. They are amazing. They do an incredible job. And I think any customer who is here would agree with that. So hey, if you have a question, a kudos to our support, throw it out in chat. I would love to hear it. You know, as Jeff mentioned, I'm the president of the company here. I'd love to hear about our support staff and what they do. So if you have a compliment about support, throw it out. I would love to hear it. And then Patrick is asking, how do we get to play with Metastock? Well, Patrick, I'll show you some ways that you can get to play with Metastock here in just a little bit, and how you can get an awesome trial of Metastock. Okay. Now what we're going to do is go ahead and run our personality test. We've put in all our settings. Let's see which of these 13 stocks is going to be the best to trade. So I'm going to go ahead and start my system test here. And you can see how fast it did that. It took every trade over the last 5 years on each of those 13 stocks. And it's going to tell me, hey, these are the ones that perform best. So this is a graphical representation of how well our money did over time. I can see that already some of these, I don't use dating apps, but swipe right, I guess, and clear them out, or swipe left, I don't know. It's one of those things. Swipe a direction, get rid of them. We just want to look at these top ones that have performed well. Okay, so what I'm going to do is just rank over here based off of percent gain. So let's look at what information this is giving us. Okay, so this is our stock right here. Over that 5-year period, we had a 31% gain. There were 14 trades, 12 were winners, 2 were losers. Now, if I'm looking for a good risk to reward ratio, is 12 winners to 2 losers a pretty good risk to reward ratio? I would absolutely say so. I'd love a 12 to 2. The next one down had a 22% gain, 12 winners, 3 losers. Down here, we had 15% gain, 11 winners, 6 losers. Okay, so we can kind of look through here and see, hey, does that match what I want for a risk to reward ratio? Yeah, I like 12 to 2. I'd love to win 12 times and only lose twice. So let's go in and let's look in this a little bit more. Let's get a little bit more detail about what's going on. So I'm just going to click into it here. Now, what we have here is kind of an overall view of what's going on. So we have our 14 trades. Remember, 12 were winners, 2 were losers, so total of 14 trades. 12 were winners, so 6 of them were long that were winners, 6 of them were short. We had an average profit of $3,300 per trade. Our highest profit was $6,300, and our lowest profit was $63. Our average loss was $4,000, and our highest loss was $6,300. Now, one of the things that this system tester does, and the way that I just tested it is, well, it is basically said when the RSI said buy, buy it. When the RSI said sell, sell it. Now, is that the way we all trade? Probably not. We probably use, and we should be using stops. Okay. Now this is basically, so again, it's just a raw when it says buy, buy, when it says sell, sell. You can go in and program your stops in. We didn't get into that. That's a little bit too technical for this presentation, but our support staff can help you set that up and actually show you how you can put stops in with any system that you're using when you're back testing it. But here, we're just saying when it says buy, buy, and when it says sell, sell. Now, one reason I like that is because it just gives me an overview of the raw system and how it performs standing on its own 2 legs, okay? So that's what we're looking at here. Now, if I come up here and look at a little bit more detail, I can see all the orders that were placed. I can see all the positions that happened over time. I can go in and I can see the system and how, here you can see how it was coded, crossing of the RSI. There's a lot of information there. For me, I look at 2 things. I quickly look at the summary page, and then I go over and I look at this equity line. Those are the 2 important things to me. This is where I spend most of my time. Okay, so if I look at this equity line, and what an equity line is it's basically how my money has performed over time. So if I'm looking at this, this is my initial investment back here, that 100,000, and how my money moved over those 1,250 records. So that's my 5 years of data there, okay? So what do we see here? Initially, 5 years ago, it didn't trade very well. I don't even remember what stock we're looking at. It didn't trade very well here. But then what's it done after that? It kind of consistently, when it has trades, continues to move up. It's this slow, steady growth in our equity line. And this, I would say, is a great looking equity line. This is almost exactly what we like to see in an equity line, is consistent growth with it. What we hate to see are these big wins, huge losses, big wins, huge losses, big wins, huge losses. What we want are consistent winners. As traders, hey, I like to consistently win. I hope you could like to consistently win too. It's a big part of trading, is that big wins. So this, I would say, looks like it'd be a great trade for me. Now, so we'll go back and we'll look at that here in just a second. That VTRS, we'll look at that in just a moment. But let's look at the ICE exchange here. Let's see how that performed. Okay, same thing. I'm just going to jump right to the equity line. Okay, now this equity line looks a little different. Okay, 100,000. We had a pretty good drawdown there. It traded okay for a while, but over the last 2 years, what's kind of been happening? Well, we've got that smooth equity line again. Even though back here, it's a little questionable, how's it trading now? I like it. It looks pretty good. Okay, so that's something to consider. Dominoes, equity line. Okay, so now this is an equity line that I look at this and I go, yeah, lots of drawdowns, lots of whipsaws, lots of ups, lots of downs. Would you prefer to have your money doing this, or would you prefer to have your money doing this? That's where our personality test comes in. That's what helps us understand which one of these we should be looking at. So if I look at VTRS here, I say that, yeah, this is the one I prefer the most. Let's just go back and let's look at the bottom performing one. Let's look at our equity line there. Now, is this what you want your money doing? And this is where system testing is such a powerful tool to give us a good personality test of whether we should be using the specific indicator on a specific stock. Now, we went through all that, and it took a while. I want to show you how quickly you can do this workflow. Okay, so I'm just going to come up here and we're going to start with something completely different. Okay, so let's say I sit down and I'm ready to find some trade opportunities. Well, let's just come up here. Let's use MACD. MACD was one of the other top indicators. So if I say MACD, and let's use our MACD expert system here, or maybe we just want to do longs. Okay, so let's use longs here. Now let's go to the S&P 500. Nope. I don't want all of those. I just want the S&P 500. Okay, so I'm going to put the MACD against the S&P 500. Let's go ahead and start our exploration. Now, as this is running through, so remember, this is just looking through 500 stocks for me really quickly. Silas was showing this in his last one, scan the market. It's so easy to quickly identify opportunities. You've seen this consistently throughout the day, how to identify these opportunities. And here we're rejecting out about 95%. So I've got 21 stocks that had a nice long buy signal today. Okay, well, let's test it and let's see which one of these is going to be best for us. So this time, we're just going to choose this. We're going to come down, we'll select our last exploration results. We'll go ahead and, since I have all my settings done, and we'll go ahead and view our results. Okay, and NRG was our top performing one. Let's look at our equity line. Now that, yeah, I mean, that has some whipsaws in it, so it's not super awesome equity line, but it's okay because it's upward direction, it's consistently smooth. Okay, but I don't know if I love that one. Let's look at equity line. Okay, this sucks. We don't like this, but this, I like this. I like this growth, this strong, consistent growth right there. So that's something to consider. All right, so that's how easy it is to quickly just scan the market, test, and find an opportunity. It's so easy to do. It's just a quick boom, 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 and you've got it. Over in YouTube, sorry, whoop, just clicked off of it. Let me get that back here. My YouTube chat doesn't want to come back. Okay, so Smoke Divine over in YouTube chat saying 21 EMA, 34 EMA, and the T line if you set your chart up right. So yeah, I mean, it's a great thing. So if you have specific ways that you like to trade, you're not tied to what's built into the system tester or into the Explorer. You can set up your own scans, you can set up your own back tests, and you can actually scan the market for your ideas, and you can back test your ideas. That's how awesome Metastock is that you can do all those things right out of the box. Okay, I want to take a different, actually, so let's go to energy here. So we're just going to come up and we'll pull up energy. So now that we figured out, hey, maybe that's our top play, we can come in, we could put on our expert. This one was the MACD. Okay, and then we can put on our indicator, moving average, our MACD, and then we can just be prepared to follow the signal and look for and there it is crossing right there. We're just getting that signal line cross for a buy and would trigger fully tomorrow. Okay, so if that's the way you want to trade, you can do that. Okay, now I talked about two different workflows. That's one workflow. So we have our opportunity to scan the market and then test those systems to see which one works. Now, I do know a lot of traders out there actually have a favorite security they like to trade. They're, you know, we kind of get, hey, I like to get in and out of this one. I kind of know the personality of it really well. Well, what we can do is we can actually take a different workflow and say, hey, I want to take a ton of strategies and put them against a singular stock or future or currency or whatever it may be and see what performs the best. So earlier, I actually asked you to think about a security that you're trading or something. So put some securities in chat. Let's look at some different things. So Patrick's already put one in. So we'll do that one first, and then we'll look at a couple others. Okay, so I'm going to close everything I've got open here. All right, so the first selection was Disney. So what we're going to do is we're going to go down to the system tester, and we're going to type in DIS up here. Now, what I want to do, in Metastock 18, we actually added in a selection of systems called the performance systems. The performance systems are actually a collection of systems that were originally sold as an add-on. We sold them for $300, and we included them in version 18. So if you have 18, you've got the performance systems included. If you don't have 18, it's less to upgrade to 18 than it is to buy performance systems. So get 18 if you don't have it. Okay, we've got some great selections coming in here for different things. So let's start with Disney, and then we'll go from there. So first, I'm going to test these performance systems. So these all start with PS. And you can see these 80 different systems here. I'm going to just select them all right here. And we're going to go both long and short on Disney. And let's see what happens here. Oh, Patrick, I'm sorry to hear that. I won't read that one out loud, but let's go ahead and pull this up. Okay, so you can see that we have a number of systems that actually work quite well here on Disney, but a number that don't. And that's kind of our personality test. Some are oscillating, some, you know, without even looking at a Disney chart, we can start to get a feel for what works best here. So if I look at this, we've got the detrended EMA system, so which is an exponential moving average system. We had a 23% gain over our 5 years, 4 trades, 4 winners, 0 losers. Now, realistically, you know, I would say if we're trading once every year and a quarter, is that a system that you're probably going to trade? Probably not. That's a long time to wait between trades, but you know, keep that in mind when you're looking at these kinds of things, because that's part of it. So let's just look at what our equity line look like there. Okay, it's kind of a standard equity line. It looks like our winning trades were kind of back here, so nothing too exciting there. I'm not really excited about that. Our next one down, the CMO reversal, 292 winning trades, 321 losing trades. Okay, so we had a lot more losers than we did winners. But what does that tell me if it's my second most profitable system? Well, it tells me my winners were big and my losers were probably small. Okay, following the rules. That's a big part of this again, remember, equity line. Okay, back here, you know, if we were testing this and we saw this back here, we would have said no way, right? No, not trading that system, fallen off a cliff. But what's it been doing since then? Consistently winning. Okay, it's a consistent winner using this system. So if I go back to my summary and I look at CMO reversal, okay, so I like that equity line. So now what I could do is I could just go to my chart and I can pull up Disney. And let's put on our expert advisor. Okay, CMO reversal. Okay, and then there's my expert with it. Now you can see it's a fast trading system. Does that match your personality? Does that match your personality style? And that's something to consider too. Do you like to trade that quickly? That's up to you. Okay, but you can read through the commentary here. It'll walk you through it, how to do it, everything right there. Let's look at a different one. Natural gas. Daniel, do you want to look at the ETF or do you want to look at the future? SANM, let's look at that one while we're waiting for Daniel here. And I'm going to do some different scenarios here just to kind of show you some different things that you can do that I really like with this. So let's go to our system tester. I think this is .o. I better check here. Yeah. Okay. So this time I'm going to do something a little bit different. I'm going to come in here and I'm just going to choose some of the most popular systems. We'll do things like MACD, Bollinger, RSI. Just kind of pick the top ones here. Okay, we'll do this 80 period Bollinger Band, RSI. So you can see, I mean, you can get really flexible in the way that you're doing this, and we'll just throw in maybe the Turtle Trader Oscillator. So we'll throw in some other systems, and then we'll go long. Okay, so Daniel wants the future on that, so we'll look at that in just a minute here. Okay, so now we're doing 88 systems because I've got some of those classic systems in here. So we'll do view results. Okay, and let's look at our percent gain here. Okay, so here again, we've got kind of a quick trading system, PS long sell, short sell, 5-day system. Best performer by far overall. We had a 57% gain, 158 trades, 114 winners, 44 losers. Again, I mean, if you're looking for a good win-loss ratio, 114 to 44, that's pretty good for that many trades. When we were talking 12 and 2, that was really, really good. But here for this many trades, that's a pretty good ratio as well. So let's look at the equity line, and you can see I don't spend a lot of I don't spend a lot of time in these details here. I just go right for that equity line. I just want to know kind of what it looks like and how it feels. And what do we think of that equity line? Who asked for this, Barb? I like that equity line a lot. That's a good looking equity line, kind of consistent. I mean, I'd like it better if it went up a little bit faster, but for consistency's sake, man, I'd say that's a great one. Let's pull up the chart And I forgot to look at this. Oh, those the long 5-day. Yeah, let's go back and let's look at that. SANM.O. Wow, a lot of people have given us lots of stocks with different gaps in them. That's expert attach. Okay, and then there's our expert advisor on this, and again gives you a great overview of it and how you should be actually trading it. Now, one of the challenges with this workflow, actually, let me do natural gas. I want to look at that one, and then I'll talk a little bit about the downfall of this workflow versus the first workflow, because I think it's an important distinction. We'll do the continuous contract on natural gas, and we'll just plug in the same thing, but this time we're just going to go long. I know futures is a little bit easier to, and actually we're going to do both, but we're going to go into our trade options and do a points only test because we're doing a future. So we're going to switch that. So this is our difference here that we'll do, doing a points only test. Okay. Okay. Hey, look at our ratio here of winning systems versus losing systems. It's pretty good there. Let's look at our trade profit loss, and then let's go in. Look at our equity line. Okay, and then there's our top equity line there overall. So you can kind of do these same things on any instrument type and kind of get a good feel for how they're performing. Okay. Pretty good equity line, but flat after that. I will tell you, I mean, I love system testing. There's so many different scenarios that you can do with it. You know, the challenge is when you get something like Metastock is, well, actually, let me step back. I'm sorry, because I told you I was going to talk about the downfalls of this method of back testing. Well, let's talk about two aspects. This method of back testing is, this is awesome because I'm able to take a symbol. Let's do one more here. I'm just going to show you as an example. I'm going to put in AMD because that's one of the other top requested ones. And we'll take off our points only test. Okay, so if I run a test on AMD here and I find out that, let's see which one is our top one here. This one, cycle progression, is our top performing one. And my equity line is pretty dang good. Okay. So if I now go pull up AMD, if I go back to my chart and say, okay, well, let's pull up AMD. And we put the cycle progression on here. Okay, my challenge is here on the right side, I may not have a current signal. I know it's the best trading system on AMD, performance system cycle progression, and it trades fairly often on this one. So, okay, well, maybe that's not a bad thing. I can wait for a signal. But if you want to trade something today, this isn't going to be the best workflow for you. Okay, if you want to find something to trade today, well, that was our first workflow. Scan the market, find opportunities, back test them, see which one performs the best. Now, I do want to talk about system testing for just a moment, because there's one important thing that we didn't talk about with system testing. When I'm looking at this report, let's pull one up. Okay, let's just go right click, view report, so I can see any of the old reports that tests that I've run. Okay, if I look at this one and I say, okay, hey, this is a great, this has performed so well over time. I'm so excited to take this trade. It's been performing so well. It's awesome, it's awesome, it's awesome. And then you make that trade. Is there a guarantee that that next trade is going to be a winner? Absolutely not. There is no guarantee that that's going to be a winner. What we're looking at here is we're looking at hindsight. And hindsight, as we all know, it's 2020. I can look backwards and I can say, oh, this performed well, but there's no guarantee that it's going to move forward. So why system test? Why do it? Why see if it's something that works? Well, the reason that we like to system test, and the reason why you should system test, is because if something has worked well in the past, it increases our odds of having a good trade moving forward. Again, it's no guarantee, but it's certainly something that can help you moving forward, understanding that it has performed well. Because if I've got one that trades like this right now versus one that trades like this, well, which one am I going to take? I'm going to take the one that's been performing well, right? And that's kind of the big part of this, is understanding that it is historical data, and hindsight is 50-50. But when we're trading, if we can increase the odds of our success, the more successful we'll be. And that's the point of system testing and understanding the system tester. Now, tomorrow, you'll want to come for a presentation by Scott Brown. He's going to be talking about a tool called the Forecaster. And the Forecaster is an amazing tool, because what it'll do is it'll look at all these signals and then give us a probability cloud of where the price is going to go moving forward. So that's another tool that you can use in Metastock. But these are my favorite apps: scanning, back testing, and pulling it out. And I really love the way that the workflow all comes together to help us understand it. Patrick, you're absolutely right. I love that. Patrick says, unless you're shorting it, exclamation mark. If you're going short, that feels a little bit better, right? Or a contrarian system. If you want to do just the opposite of what it says, maybe you'll win then. That's a great one. I love that, Patrick. Thank you. So let's just step back for just a second. I just want to show you again that initial workflow that I went through, again, finding opportunities. Let's maybe take that cycle progression signal, and let's just do the S&P 100, just to show you again how quick this is. And then I'll be wrapping up here. Maybe we can do. Okay, so I've got 17 results here. Got about 5 long, the rest short on my cycle progression system. Okay, I don't even need to open the chart. I can now just go over to my system tester, unselect all these ones we're doing, just do cycle progression, choose the 17 here. Okay, and we'll do both, because that's what we've been doing the whole time. And then I can say, oh, there's my top one. US Bank Corp is the top one trading with this one. So I have a current signal, and I know it's my best trading system. I mean, it just all comes together so well. Now, I did want to talk about, someone asked, hey, how can I play with Metastock? What can I do? Well, I want to talk about the versions of Metastock for just a minute. One, there's 2 different versions of Metastock that we offer. We offer Metastock End of Day, and Metastock End of Day is for daily charts. Okay, you're going to be able to look at daily, weekly, monthly, yearly, quarterly. It updates at the end of the day, right after the market. So if you work during the day, like many of us do, you can get Metastock End of Day. And what you can do is you can come home after the end of the market. You can scan the market for opportunities, back test, do whatever you want to, and then set up your trades for the next day. And we have tons of customers who use Metastock End of Day just for that powerful scanning. Hey, I can just go in, I can scan exactly what I want to and pick up the opportunities. Huge, huge thing. Okay, and you can scan on any of those time frames. If you're trading during the day and you're actually following the market during the day, or you like to look at intraday charts, then we have another version called Metastock RT. And Metastock RT is what I've been using today. Okay, it lets you look at tick by tick, 1 minute, 5 minute, 30 minute, 33 minute custom time frames, whatever you want to as far as a time frame. And you can do all the same analysis on intraday time frames as well. So that's kind of the distinction between the two. Now, Metastock RT Metastock end of day is powered by a data feed called Metastock Data Link. Okay, and that data comes from London Stock Exchange Group, that's who our data provider is, also known as Refinitiv. And then our real-time platform also comes with another platform called Zenith. And Zenith also gives you real-time news and analysis and information. The news is provided by Reuters. It's a very, very powerful tool for complementing Metastock and helping you stay on top of the market throughout the day. Very, very, very cool stuff. And I believe we have Bobby talking about that on Friday. So if you're interested in learning a little bit more about our real-time news and analysis platform apart from Metastock, you'll want to see that on Friday. So let's go back here. We talked about our 2 workflows, using your preferred indicators, finding the best indicators, and how you can try Metastock or how you can play with Metastock. That question we had a little bit earlier is you can actually just go to metastock.com/conf-promo, or you can go to call us at 800-882-3040. or visit us at metastock.com/sales-chat. Any of those ways, they can help you out. Our products start at $59 a month, go up from there, depending on what you're interested in. That's Metastock DC, $69 for US markets, up to $265 for real times plus exchange fees. And again, I mean, scanning the markets is so cool. As Jeff said there in chat, I love scanning. It's absolutely, I think if I were to say top features in Metastock that people love, scanning #1, expert advisor #2, system tester #3, kind of the way that rolls in my mind. You get to test your trading ideas across all markets, statistically forecast probable price movements, which is what Scott's talking about tomorrow, and then those real-time alerts, commentary, and signals as well. I mean, Metastock's just an incredible tool. If you're a Metastock customer already, thank you. We love you. Thanks for being a Metastock customer. We love being here for you to help you in your trading and help you make better trading decisions. If you're not a Metastock customer, we would absolutely love for you to join us. Give us a call, 800-882-3040, or visit us at metastock.com/conf-promo, and there you can even chat with a rep by just clicking on the chat button. Jeff, you there?
Yeah, but I do need to turn on my my thing. I actually included a little bit of a thing that a QR code you can scan. Look at me getting fancy.
Oh, look at you. Look at you.
All right. Can you see my screen?
I can see your screen, yes.
Oh, all right, cool. Kelly, thank you. Very good job. I appreciate your spending a little bit of time with us. And I'll see you in a minute.
Okay. Thanks, Jeff. Thanks for everything.
Thank you.
Thanks, everyone.
All right, yeah. As Kelly said, if you want to get the extended trial, you can buy a month, you get the 2nd and 3rd month for free. Some of the best data, the best news, the best coverage of markets, the best ability to scan. There's a reason it's actually been rated #1 31 years in a row this year. You can get an extended trial. So if you do the end of day version at $69, you'll pay $69 today. That'll get you going for 3 months, which is like May 27th. About $23 a month. And then you can find out during that time, you can go through our white glove installation service where they'll actually sit down with you. They'll answer questions. They'll show you around the software. You can call with any support questions you've got. We've got unlimited access to those guys over there. They do such a good job. And we're confident. We don't just want to have you subscribe for 3 months. We want you to keep subscribing. But we're confident if you actually do go in there and subscribe, that you're going to be a customer for life. So many of our customers have been with us for decades and decades. And, that's great because for me, what that says is the software is providing a very, very valuable service. Now, if you have been a Metastock customer for more than, let's say, actually, if you're a Metastock customer, let us know in the chat. I'll say hi to you no matter what. If it's a lot of years, put the number of years in the chat. I'd like to see that. So in any case, there you go. I'm going to go metastock.com/conf-promo will get you that trial. You can scan right here. You can go to metastock.com/sell-chat if you want us to send you more information. We have all kinds of information we can send over to you. If you want to give us a call, 800, ask us some questions, 882-3040. All of those are great ways to kind of get some more information on Metastock. So for me, one of the things I love about Metastock is scanning every single day. So, I think I'm a little bit bored though of the way that I'm giving away prizes right now. So we've been doing it from the spreadsheet, and if you haven't registered, you should, because we're going to go back to that method here sometime. But what I want to do is, I know that a lot of you have been here for a long time, and I'm going to give a prize out. And what I want you to do is just say, hey, I'm here. And if you do, I'm going to look at the screens over here. I'm going to randomly pick somebody that's actually answers the question, and I'm going to send you a book. So what book am I going to send you? Okay, well, I'm glad you asked. Here is a book called Candlestick Prophets, Eliminating Emotions. Now, this was written by a good friend of mine, Steve Bigelow, and it's a fantastic book. I was over there telling one of our IT/programmer guys that he should grab a copy of this. It's really well written, and it is really something that is a great, easy read. Steve was such a great technician, but he was also a great teacher. You could go in and read this and understand exactly what he was talking about. Very, very, very clear in terms of what is there. So if you'll just say, hey, I'm here, or hey, I want it, or hey, send me a book, you can win right now. So I'm going to give you a couple minutes to answer. I'm going to thank a few sponsors, and then I'm just going to randomly pick one of you that says, I'm here. So do it. All right. I do want to give a little bit of time because there is a bit of a delay, as you guys probably know, between when we talk and what comes out on YouTube. So there you go. Michael says, I've got it. Well, I'm not going to pick you then, Michael, but it is, I think you'll attest, it's a really good book. So while you're saying I'm here, I've not really seen a lot of people saying I'm here yet. Pick me. Okay, there they are. While you're kind of being there, and I'm going to do as random as possible. I'm just going to kind of look over here and point to the screen, and whatever happens will happen. I do want to thank our presenters today. We've had a lot of really good presenters, a lot of really good participation. We got 2 more really good presenters coming right up. I also want to thank our sponsors, AAII.com, CMTassociation.org, Traders.com, Stocks and Commodities Magazine. Really, all 3 of those companies have been great to work with. They're fun, they're exciting, they do a really good job. And there you go. I really appreciate all the support that goes into kind of creating this event and making it work. So thank you, everybody. Thank you for coming too. All right, let me see here. I wonder if there's a big delay on YouTube. I'm not really getting a lot of I'm here's on YouTube except from Metastock. Actually, let me do a quick change here. I'm gonna go live chat. Still just Metastock. Okay. All right. Well, then here we go. Let's see. A couple comments. Pick me. I'm here. Hey, I'm here. Neil says I'd really like to add it to my Bigelow software memory. Yeah, Bigelow was such a great guy. All right, here we go. Oh. All right. Oh, let's try that again. All right. Jax, you got it. Okay. Congrats. All right. I'm going to go ahead and write you down, and then I'll just need to get an address from you, and we'll go from there. So thank you for everybody for participating there. I actually thought we'd get a little bit more response off of YouTube, but that's fine. Let's go ahead and get over to our next presenter. Our next presenter is actually a representative for Serge Berger, and he's going to talk about a brand new system that actually we just literally got done creating. In fact, I sat down Sunday and recorded a video on how to actually use it in Metastock. It actually looks really cool. I'm interested to see how it presents and all that kind of good stuff. So without further ado, let's go ahead and bring you on here. Josh, I'm going to go ahead and make you the presenter right now. So let me make you the presenter. It should actually come in and give you a note to share your screen. And I will let you know as soon as I can see the screen. Okay, I can see your screen. You're about to discover.
Perfect.
And I can hear you. So we're off to a good start. Welcome to the room. Thanks for coming in. I'm going to go ahead and get out of the way. It's your turn. Go.
Sounds great. Thank you so much, Jeffrey. I really appreciate it.
Of course.
Hey, everyone. Before we get started, if you could please be so kind to type in a yes into the question section box. just confirming that you can hear my voice and that the screen in front of you has changed to where you can see you are about to discover. That confirmation just lets me know that everything's working properly on my end, as well as everything's working properly on your end. What we're going to be discussing today is, my name is Josh Martinez, and I'm going to be speaking on behalf of the Steady Trader with Serge, and we're going to be discussing and talking about what's known as the 2% Club strategy. We're going to go into the live market, and we're going to share with you how the strategy likes to find entries, where it places stops, where it places limits. We're going to probably go through about 14 examples. We're going to do this inside the futures market. The strategy is specifically designed for the SPY, S&P 500, as well as the Russell, the S&P 500 and the NASDAQ 100. However, it has been proven to work on other symbols as well, which we'll be discussing today. Thank you, Chris. Thank you, Neil, Daniel, Ed, Bernadette, Linda, and everyone else. Really appreciate the confirmation. I also want to give a big thank you to Metastock for allowing us to communicate today and speak today. It's always a huge honor to be here. I think Metastock is fantastic charting, and they're really, really great guys, and they're a really fantastic team over there. They, in my opinion, they do a great job with putting the customer first, which I'm a big, big fan of. Before we go into the live market, we share with you the slides and we go through the back test of the results. In front of you is the risk disclaimer. This means that there is risk involved and that you should never invest money that you cannot afford to lose. Always keep risk management in mind and understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that means, what we're going to share with you is research, and ultimately what you decide to do with this information is completely up to you. Now, we are not IBs, which stands for Introducing Brokers, so we'll never refer a broker to you. Picking a broker is a personal choice that you have to make your own. Look at us like a newspaper. We're going to share with you our findings. We're going to share with you our back testing. We're going to share with you our approach to the markets. However, just like a newspaper, once you receive this information, what you decide to do with it is completely up to you. Okay, perfect. So a couple of things that we're monitoring. The strategy that we're looking at is in our opinion, is a relatively fantastic entry strategy, and it's really designed to trade in the direction of the trend. And so one of the things that Serge does at the Steady Trader is on a weekly basis, he'll monitor the markets. And one of the things he's monitoring right now is the S&P 500. In front of you is just a picture of a monthly time frame of the latest Fibonacci. The latest Fibonacci does show that there is a 1.618 extension around price point 6436.25. Now, this is not an overnight move. This is going to take every bit of 12 plus months market movement, and we are anticipating wave movements along the way. However, this is something that we are monitoring, as well as the NASDAQ 100, a little bit closer to this Fibonacci. But if you monitor futures, this is about an 8,000 tick upward movement, depending on the contract size you trade. So, for example, if you trade a E-mini contract, every tick's valued at $5. And assuming the research holds true, that 8,132 ticks of upward movement is valued at a little bit over $40,000 of opportunity. Now, it doesn't necessarily mean that we're going to capture the whole market movement. It doesn't even necessarily mean that we're going to be accurate here. It just means that according to our research and according to what we're monitoring, this is the opportunity that we're looking to ideally go after. And we're going to share with you today how we like to utilize the 2% indicator to assist us with trading in the direction of the trend. Okay, so what is the 2% club? Well, the 2% club is a trading strategy designed to be consistent. It's designed for the SPY and QQQ. It's out of the box ready, works on TradingView, and it works on Metastock. Serge hosts weekly and monthly sessions. And so what he does on a weekly basis is he sends out trade ideas and symbols that he's monitoring, like a watch list and overall direction. And on a monthly basis, he hosts a live coaching call where he reviews the previous month, and then he also reviews the month of ahead based upon his experience and what he believes the market could be doing next. And of course, there are ongoing alert notifications via email. So here's some of the back tests of the results. And these results are from January 1st, 2022 until February 21st, 2024. This is the S&P 500, focusing in on one E-mini futures at a time. So this is a futures backtest. And this shows, according to the research, $36,837.50. Now, please keep in mind, this is before commissions, and this is before slippage, and these are hypothetical performances, meaning that's not real money. It's important we notate that, because when it comes to trading, one of the things that you really want to do as a trader is, when you identify a strategy, we're a big believer in using scans and back testing and seeing what the pattern could have done over a consistent period of time. Now, as we know, past performance is not indicative of future results. However, we do lean on that information to help us make better decisions moving forward. And the overall theory is, as long as the patterns maintain themselves and favorable results are there, we want to keep doing it. And then when or if the favorable results discontinue, then that's when we look to make a change. Here is the results on the NASDAQ. Same exact time frame, but the NASDAQ's a little bit of a bigger mover. So this is 57,955 US dollars. Now again, keep in mind that's before commissions, and that's also before taking consideration of slippage. So when you combine those two, since January 1st, 2022, it's $94,792.50 when viewing it as one E-mini contract at a time. Now, if we were to take an average, we were to break that up into just one symbol, that's about $3,385 a month when you break it up to a month-by-month scenario, just trading one symbol and one futures contract. But don't get the wrong idea. This is going to take some work to learn. It's going to take some work to understand. But we can promise you that through the 2% Club Trading Breakthrough, we can show you the step-by-step process. It is a process. We want to do our very best to monitor the overall direction of the symbol that we're trading, and we want to utilize our entry strategy and the direction of the trend. Well, my name is Joshua Martinez. I'm an active chartist. I'm a creator of strategies, and I'm a public speaker. I have trading experience inside the futures market as well as the Forex market. I am speaking on behalf of the Steady Trader, which is ran and managed by Serge Berger. Serge Berger has been an active trader since 1998. He's a former investment banker at JP Morgan. He's a proprietary trader in equities, options, and futures, specializes in finding new market opportunities, and he's the Steady Trader founder. So enough about us. Let's go ahead and jump into the live market. Let's go ahead and introduce it to you. Now, I'm going to utilize a combination of Metastock and TradingView when we do this demonstration. It does work on both. And as Jeffrey stated, this has been newly programmed on Metastock, and Serge is very happy and very ecstatic that has been accomplished. So now what you're looking at here, this is the S&P 500 on a 1 hour time frame. And we just kind of look at the overall concept of whether you use this strategy or use another strategy, or you make up your own strategy, or have you ever thought about, hey, what do I need to do to develop a strategy? The most important thing, in my opinion, to a strategy is direction. You really need something that's going to help you determine if the market's going up or if the market's going down. Now, some people, they can accomplish this through indicators. Some do it through hand-drawn trend lines, technicals, Fibonacci's. Some people use robots. Some people look at economic events, fundamental events. They do research on companies, just depending on what asset you're trading. And then some people just are purely spectacle, and they just kind of guess or based upon a feeling. One of the things that you want to take into consideration, one of the benefits of using an indicator-driven style equation, is that it's a non-emotional approach, and the results are the results. And so when it comes to trading, there's a lot of emotion involved, there's a lot of feelings involved, there's a lot of effort involved. It's very subjective based upon what somebody puts into it. If someone's active all day trading versus someone who just kind of looks at it once in a while, those results are very different. even if they use the same strategy. But when you look at an indicator, what we're trying to do is we're trying to get on the same page so that anyone who views it, they all are given the same answer. And that answer needs to be up or needs to be down. And so down here at the bottom, you're going to see it's highlighted in green and highlighted in red. It just says bullish and bearish. These are kind of very visually friendly ways of understanding if the overall direction is up or if the overall direction is down, or if the swing is up or the swing is down. Then you have these arrows, this green arrow that says buy signal that points up towards the north, and then you have a red signal that points down. This is a sell signal. These can be viewed as directional signals, and naturally we want to use stops and limits. But let's just look at the overall directional move to start out with. And when it comes to trading, just kind of quickly, when you kind of glance, you'll notice that it's not perfect. Sometimes there's going to be a chop or consolidation. And one of the things that Serge does a great job at is helping identify when the market's in a chop or a left to right movement or a consolidating movement. But down here at the bottom, you're going to notice that the market does a pretty good job at maintaining a very, very long green bullish directional move or a very, very long red bearish directional move. Now, I'm not saying that you're going to want to come in here and buy during this green bullish move and then sell during this red bearish move and then buy during this green bullish move. That's not really necessarily what this is designed for. What this is specifically designed for is for you to determine of the larger time frame and to say, hey, I'm expecting the S&P 500 to continue to go up for X amount of time, and then go to a smaller time frame and focus in on only taking the buy trades. Now, these moves can be pretty substantial, and if we begin to measure some of the moves out, this one is a pretty large move from where it turned green for the arrow up, and to where you get where it turned red for the arrow down, which would be a close of this candlestick. This was a total of 205 points. So a point is basically $1 worth of movement. So 205 times this by 4 quarters. And so we'll go 205 times this by 4 quarters. And we click equal. That's about an 820 tick movement. Now, depending on if you're trading an E-mini contract or if you're trading a micro contract, will really determine your tick value. So if you were trading a full E-mini contract, every tick is valued at $12.50, which means this whole opportunity or this one move would have been valued at $10,250 US, assuming you bought it when it turned green, and assuming you held on to it for the multiple days, and then assuming you closed out when it turned red. If you did a micro is 1/10 the average investment, 1/10 the risk, 1/10 the reward. So if you traded a micro, just divide this by 10, and it would be about $1,025 of opportunity. So you can begin to see that when you focus on trading in the direction of the trend, and the S&P 500 has been doing a pretty good job just kind of pushing up. This one was a 33-point move. So this 33 times this by 4 quarters, because every 25 cents of market movement is a tick. This is 132 ticks, and with the E-mini contract, that is $1,650 US of opportunity. I'm just going to ignore the sell sides for now. Here's some chop where you took some losses along the way, but here's another bullish movement. Let's go and just delete that. Here's another bullish movement from this candlestick to where we get the first exit over here. That's 38-point move. Here's some chop where you got some losses. Here's another big run. And this run for when it turned is about 117 ticks or 117 points. So that 117 times this by 4, it's about 468 ticks or $5,850 US worth of market movement. Now you got some chop here, but one of the things I want to notate is when you look at these losses, so when it turned green and then turned red, that is a 16-point move So 16 times it by 4, it's about 64 ticks, which would be about an $800 loss. So if you think about it, this is about an $800 loss, and this is going to be another loss right here. And then this will be a small little win, nothing too crazy, but these losses of 10 points, of 16 points are much, much smaller than this gain of 117 points. And that's one of the things you want to point out. And one of the things you want to notate when you utilize a strategy that helps with direction is nothing's ever perfect, but when you're right, you just want to have that larger upside to where the risk versus reward makes it logically make sense, or the risk versus reward makes things a little bit easier to stomach the losses. So like, for example, here's the latest green arrow, and then there's the red. That's a 69-point upward movement. And then from this red arrow, or from this green arrow to that loss, that is a 11-point move. So if you look at it to say, okay, you had an 11-point loss divided by a 69-point gain, that's, we go 69 divided by 11, it's about 6 times. So this gain was 6 times this most recent loss. And so the reason why I point that out is because when your winners, when you allow your winners to run and you allow your winners to really push, and you're trading with a superior direction inside of a trending market, and you just took a loss, and then your next win is 6 times your previous loss, it really helps with the psychological aspect of being able to grow a trading account. Now, the challenge, the natural challenge that we've seen is being able to hold on to a trade that's going your way. And so one of the things that Serge did to kind of help with the stepping stone before you get into this swing approach is to basically, whatever your risk is, times it by 2, and that's the reward. Do me a favor, type into yes, why yes in the question section box if you would like for me to share with you more of an intraday approach where you can look for shorter term trades where for every $1 you're risking, you're looking for $2 in return. The beauty of that, when you have a little bit more structure like that, and you go after the double your risk approach, you don't have to win as many trades to net a profit. And so, okay, so let's go ahead and to do this, I'm just going to pull up TradingView. And on TradingView, I'm just going to pull up the Russell 2000, and I'm going to share with you what the Russell 2000 has been doing since February the 21st, which was last Wednesday. So that'll be 1, 2, 3, 4, 5, 6, 7, basically 7 full days. Now, granted, this is hindsight. Take that in consideration. Hindsight just basically means it's easy to find direction. But ultimately, I just kind of want to share with you what's possible. And then the big thing to extract from this is how the risk versus reward really plays or participates. Now, you can, what I'm going to do here on TradingView, you can absolutely do inside of Metastock. And so keep that in mind as well. Like Jeffrey stated, he was able to build it. So here, the way this is designed is pretty straightforward. When it's time to enter into the market buying, or the strategy says it's time to buy, you have this green arrow that just says market buy. And then what we want is we want to stop and we want to limit. And so you have this red line that will automatically stamp on the chart. And that red line is where you want to place a fixed stop. Now that stop, we don't want that stop to move. We just want it to be fixed. And then we have this green line up top, and we want that to be our limit or automatic exit for profit. Now, the reason why I say that is because when we view this, I'm a big believer in setting and forgetting. What I mean by that is I'm a big believer of once you place your trade and you have a stop and limit, try your very best if you can to allow the trade to either stop you out or limit you out. So try your best to let the trade hit its limit, or try your best to let the trade hit its stop. And that way it protects the formula. So if you kind of see what happens here, here's the entry, which is the green arrow to buy. Here's the stop, and here's the limit. And what we're trying to do is trade in the direction of the trend. And let's just say, hypothetically speaking, you made the determination that you're anticipating the Russell to continue to rally. So in this scenario, the market fulfilled its limit. The time and the overall trade was about 2 hours and 35 minutes, so 19 candlesticks, which represents 5 minutes a candlestick, so 2 hours and 35 minutes. And this was 102 tick reward. So it's 102 ticks. And assuming you were trading an E-mini contract, 102 times this by $5 a tick is $510. So here, in this example, this would have been $510, 2 hours and 35 minutes into the trade idea, and then the trade is done. And so now what we're going to do is just kind of follow this process, and we're going to wait patiently for the next signal. And you can receive text messages, you can receive pop-up alerts, email notifications if you do this. So you're not babysitting your charts unless you want to. Some people love to do that. I'm not a big believer in that. I kind of like the chart to do its thing. When you have the green arrow that points up, that's the market buy. This green line up here that automatically stamps, that's your limit. I'm just putting a line on there. And then this red line down below the entry, that's the stop. And so this works really well when you trade in the direction of the trend. Let's see what happens. Every candlestick represents 5 minutes of market movement. Now you're going to notice how this red line comes up. Serge built that to where if a person wanted to do like a dynamic stop or move their stop or do like a trailing stop, they can. I don't like doing that. I like having a fixed stop and a fixed limit because this is a risk of 1 to 2. So whatever your risk is, your reward is 2 times. Now the actual percentage risk is once you get the entry, we're risking 0.25% of the underlying asset. And the reward is 0.5% of the underlying asset. So that's where the calculation comes up. So this one, during the time of this price, this was 100 tick market movement. So that would have been $500 US trading an E-mini contract. Now, if you traded a micro contract, every tick's worth 50 cents. So this would be a $50 market move. Now, how long did it take from the entry to the exit? That was 3 hours and 45 minutes. So these are not super fast trades, but they're also not super long trades either. And so let's just kind of see what happens. And we're just waiting for the next signal. Here's a nice little retracement, and we're just waiting for the 2% club indicator to share the next trade. And so here's the next trade. So that's our market buy, the green arrow that points up. Here's the red line. We're going to place our stop. And then that green line up there, that's where we're going to place our limits. And so it visually stamps it for us, which is nice. And so let's see what happens. So either one of 2 things is going to happen. Either A, it's going to stop us out, or B, it's to limit stop and hit the stop and take loss. So let's just call it a 50 ticks. Which is equal to a $250 US loss. So let's go ahead and put that against the 2 previous winners. So you had a 102 tick winner, then you had a 100 tick winner, and you just had your first loss, which was 50 ticks or $250 US. And in my opinion, this is one of the better ways to lose. Losing is a part of trading. You can't run from it. You can't hide from it. It's going to happen. It's part of the process, part of the program. When people, in my opinion, when people are not able to take a loss or they can't learn how to take a loss, that's really where things mess up the most for them. They tend to hold on to losing trades too long, and then those losing trades usually hurt them in the long run. When you're able to have your losses to be half of your physical gains, you don't have to win as much. And so this is a great scenario to where you can see when we're winning 100 ticks. When we're losing 50 ticks. And in the long run, you're going to have to lose twice as much as you win just to break even. And so with this strategy, as long as we're continuing to trade in the direction of the trend, you can see that we're beginning to stack some odds in our favor, and you're viewing this more as a statistic way of trading versus guessing. Sometimes you have strategies where your losses are physically larger than your winners. And if that's the case, you really have to win a lot of trades for the math to work out. And so in this scenario, you can begin to see that we have the green arrow that points up. That's the market buy. Automatically know where to place the stops, automatically know where to place the limits, and then we kind of see what happens here, and then we lose another 50 ticks. So here we just lost another 50 ticks, and if you traded E-mini contract, that was another $250 loss. And so let's keep going. Kind of want to show you all the winners and all the losers and kind of see the strategy, because one of the things that we like to do is we like to do our very, very best to kind of just show you how this works, all the ins and all the outs. And that's very important because that builds a proper expectation up front to where if you decide to do something like this, then you kind of understand what you're walking into. So here's the overall entry to buy. Here's the stop. There's the limit. And you can see that, there we go, bingo, the market did fulfill its limit. And so those two losing trades that we just had, if we look at from the entry to the exit, this was 102 ticks. So that's 510 US dollars. Which was just generated. So that one win just made up the last two losses. And so in this scenario, that's very important to notate, because when we notate that, it means that, okay, now we're kind of break even. Yes, it does kind of stink that the last three trades were break even. However, if we have a win in our next trade, then we're starting to get ahead. And so as much as we desire to have fast gains and as much as we desire to win all the time, I just haven't been able to find a strategy that just does that without taking on large amounts of drawdown. There's strategies where you can work your way out of a losing trade by using a size-in technique. However, that's not what this is. This is specifically designed for the person who says, okay, I want to be able to place a trade, and then I want to place my stop, and then I want to place my limits, and then I just want to walk away, and I want the thing to do its thing. And this is really designed for the person who wants that confidence of a formula to where they don't have to win as much to be able to generate a profit. And so you're going to notice that in this scenario, you have a green buy followed by another green buy followed by another green buy. We're not going to add to the position. That's not what this is. This strategy is not designed to be a size in or add to. You have, again, we just want to place one trade, have one stop, and have one limit, and then just one trade at a time. And here you can kind of see the market move left to right. Here we have another loss, and that's okay. Sometimes that's going to happen. And then we'll move on to and wait for the next signal. Now, what we're doing is you notice that we're only taking buy trades here. Now, we did develop this for, or I should say, Serge and the Steady Trader developed this for a bearish market as well. However, right now the markets are very, very bullish. The markets are pushing higher and higher. And so we just want to focus in on the long side at this point in time. And so you can begin to see this was a nice little push, nice little trade, nice little recovery. And we're kind of gone back and forth, meaning that from our entry to our exit, that was 100 ticks. So we kind of gone back and forth, meaning that, okay, we just lost two trades and now we just won. So it's another break even three. But when it comes to trading, that's going to happen at times. You're going to have periods where you are breaking even. And in my opinion, that is much, much better than going through a large drawdown. And so do me a favor, type in a ME in the question section box if you would say, oh, I would rather just break even on a handful of trades and then start winning again versus going through a big drawdown and then having to fight my way back. That's kind of the approach here, and that's kind of the benefit of having a strategy where the winners are physically 2 times the losers. So here we have a nice little entry, green arrow. We just lost 50 ticks, followed by another green buy, and then this green buy was able to generate 100 ticks, and so that was able to make back the loss and push us into the profit, which is relatively fantastic. So let's keep going. What we want to do is show you all the trades leading up to the live market. This will give you a good understanding of the overall experience. Now, what are the challenges that this strategy has that Serge and the Steady Trader tries their very best to fill the void? Well, in trading with a strategy like this, you want to trade in the direction of the larger time frame. Right now, it's pretty straightforward because your indexes are pushing up, so we're just focusing on buying the market, not necessarily focusing on selling the market. So what Serge does in this program is Serge will monitor the indexes, and he will analyze them throughout the week. And on a weekly basis, he will send out an email with his watch list and provide a ticker symbol, provide the overall direction, and provide a end goal of where he believes the market's going to go. And then from there, the decision is either A, if the user can use that information to make their own decisions. B, if the user so chooses, they can use the 2% club indicator, which we're using right now, to help find intraday opportunities along the way. Or Serge will also provide stock plays, ETF plays, and also option ideas throughout the week as well. And so here's another loss. That's another 50 tick loss. And so we're just waiting for the next green arrow. There's a green arrow, so that's our market buy. We're going to place our stop at the red line, and we're going to place our limit at the green line. So one of the things that Serge also provides is foundation lessons for futures, stocks, and options. So if you want to learn the foundations of those symbols or those markets, you absolutely can learn them from Serge. That's one of the things that he does a great job at, in my opinion. But you can begin to see that even if you go back and forth, you are losing 50 ticks, and then you make 100 ticks, then you lose 50 ticks, and you make 100 ticks. Even if it's 50% win-loss rate, because you're physically winning 2 times the amount that you're physically risking, because of that, even if you're right half the time and wrong half the time, you're still, the math shows you're still netting a profit. And so here we have another limit fulfilled, so another 100 ticks, and we just wait patiently for the next entry. And we'll do this all the way to the live market. And then here's the live, here is another entry. So there's the stop, there's the limit. We'll put our stop here, put our limit there. And this just requires a person to make the decision if they want to do it or not. And then here's the live market. So when you put this side by side and you kind of add up all the winners and all the losers, we'll put the winners on the left, so that's 100 ticks, 102 ticks. Losers on the right, so that's 50, that's 50, there's 102, there's 50, there's 100, there's 50, there's 50. So that's 1, 2, 3, 4, 5 losing trades so far, and then 1, 2, 3, 4, 5 winning trades so far, 6 losing trades, 7 losing trades, 6 winning trades, 7 winning trades. It's 50-50 at this time. And so in the last 14 trades, it won 7, but it lost 7. But however, the physical winners are 2 times the physical losers. And so if you look at it, you're at 500 plus 500 plus 510 plus 510 plus 500 plus 500 plus 500 minus 250 times 7, which would be 250 minus 250 minus 250 minus 250 minus 250 minus 250 minus 250. Another way we can view that is just to say 7 times this by 100, divide this by 2. You're basically at 7 times this by 500, 3,500 divided this by 2, 1750. So in the last 14 trades in this last run, taking this intraday approach, you would have had 14 trading opportunities, and then 7 would have lost, 7 would have won, and that's a net of $1,750 minus commissions. And in the futures market, it's about $5 round turn. So $2.50 to open a trade minus $2.50 to close a trade. So if you say 1750 is your net, and you go 14 times this by $5, 70 minus 1750, 1680, and then take in consideration maybe a tick for slippage, you're right around that $1,600 mark in this last week. Now, let me just ask this question. Do me a favor, type in a ME in the question section box if you'd be pretty happy with a 50% win-loss track record in this last week since the 21st. And then you netted a little bit over $1,600 just trading one contract at a time. Your max risk per trade was $250 per trade. And so it's a pretty good strategy that Serge created and put together. But there's more to it. If you want to do a little bit more of a larger time frame, a little bit more of a larger time frame approach, Serge was able to develop this to where you can have your win losses a little bit bigger, to where your risk is 1% of the underlying asset, and then your reward is 2% of the underlying asset. And when we view this off of the NASDAQ since January 1st of 2022 till February 27th, which is today of 2024, there was 21 total closed trades, 71.43% win ratio. Profit factor is 3.216. Now this is using one E-mini futures at a time, E-mini contract. The max drawdown on NASDAQ was $15,180, but the net profit was $57,955. The average trade was 3 candlesticks, so 3 trading days, and the average trade was $2,759.76. If you look at the S&P similar but smaller drawdown, but also smaller profit. So $36,837.50, 15 total trades, 73.33%. Profit factor a little bit bigger, 4.521. Max drawdown $5,312.50. Average trade is $2,455.83, and the average days in the trade is 4 bars or 4 calendar days. So there's many different ways that you can do this. You could utilize the text message, emails, pop alerts, and the visual guidance off the daily time frame. You could utilize the intraday approach, which we demonstrated today in the direction of the trend. You can also utilize the directional shorter-term swing trade, where you're buying on the push on the way up and selling on the push on the way down. And this is a phenomenal strategy, especially when volatility is higher and you're getting those pushes. But this is also designed to trade in the direction of the trend. So Serge, I know we're running out of time, so I just kind of want to introduce the overall service to you. And if you decide to move forward with it, we'll give you the overall option and the promotion now. But this is the Steady Traders trading strategy. It's a program. It's called the 2% Club. It is a trading strategy designed to be consistent. It's designed for the SPY and the QQQ. It's out of the box ready, works on TradingView, it works on Metastock. You do receive weekly and monthly sessions and ongoing alert notifications via email directly from the Steady Trader, which is from Serge. So you get weekly video updates. So on a weekly basis, what's going to happen is Serge is going to record a video sharing his charts, going over a watch list, and providing market updates. He's going to give you ticker symbols. He's going to highlight potential entries, where to place stops, where to place limits. He's going to share with you the stock opportunities, the option opportunities, and then he's going to share with you the futures opportunities. So if you like to trade futures or stocks or options, this could be a good program for you. No more than 4 open positions at a time, or 4 ideas at a time. So it's very manageable. It's not like you're going to receive a watch list of 40 or 50. It's going to be no more than 4 at a time. So monthly live online meetup. So once a month, Serge is going to host a live coaching call via a presentation where you can gain insights from seasoned financial experts, in-depth analysis of the market, understanding nuances, historical context, potential scenarios that could impact the market, average of 1 outside guest speaker per month to provide outside perspective. Trading strategy, the 2% Club trading indicator, which we demonstrated today, works on TradingView as well as Metastock. Does provide short-term trading strategies, medium-term, and long-term trading strategies. You do receive 3 checklists with how-to videos and the member portal. Risk management mentorship is very important. Understanding how to manage risk effectively while engaging in trades. Learn techniques to protect capital. The goal is to minimize potential losses. We know that losses are going to take place, but how do we prepare for them for both low and high volatility times? This is included in the weekly video updates. Excuse me. An average of 1 trade idea a week, and you receive email notifications. So you do get notified from Serge on when the research says it's time to enter into a trade, when it's time to exit, stop orders, limit orders, and pending orders, as well as the updates. You do receive access to Serge's customer support team, highly trained, eager to serve, available by phone and available by email. Kickoff class is March the 7th. It's going to be next Thursday, I believe. I believe that's March the 7th. Let me just go ahead and double check. So March 7th is, yes, it's next Thursday, and it's going to be at 11 a.m. Eastern time. It will be recorded just in case you cannot attend. You do receive futures one-on-one training, market one-on-one training, 2% club indicator training, checklist review, demonstration of the 3 strategies, review of how to read the trade idea alerts, and questions and answers. You do receive the training directly from Serge. And then, of course, this is what's called the 2% club. This is Serge's new service. It's available for everyone. Next live class is next Thursday at 11 a.m. Eastern time. Similar services with the text messages, emails, pop alert notifications, with the back testing, with the weekly watch list, the trade ideas on a weekly basis, 1 trade idea on average a week, so 52 ideas a year. Similar services around $24.95. The Steady Trader is going to offer a new member promotion with the Metastock promotion of 12 months access for $9.97. And so for those of you who are looking to enroll into the program, you just want to go to www.steadytradersecrets.com/year. Again, that's going to be www.steadytradersecrets.com/year. The information and the clickable link is located inside of your question section box. So if you look at that link, you have the ability to enroll online. For those of you that have questions, by all means, you can type your questions in the question section box. I'll do my very, very best to answer them. For those of you that would like to speak to a customer support agent or a new client team member, or someone who can assist you with answering questions and help you enroll online, you can call a team at 401-203-7389. That phone number is on your screen. Now, don't forget, you do have your live class. It's going to be next Thursday. That's going to be March the 7th at 11 a.m. Eastern time, where Serge is going to go over futures one-on-one training, market one-on-one training, and 2% club indicator training. He's going to go over checklist reviews, demonstrations of the 3 strategies, review of how to read trade ideas and the alerts, and questions and answers. You do receive the 2% club indicator off for the daily time frames, and you do receive the 2% club indicator for the 5-minute time frame, the 1-hour time frame. It's pretty customizable. It's pretty straightforward, and you do receive the weekly picks directly from Serge and the monthly coaching calls, as well as the weekly updates via email. Okay, so once again, for those of you who'd like to sign up, when you go to www.steadytradersecrets.com/year, you have the ability to fill out your information and put in your first name, last name, email address. You can get started with Visa, MasterCard, American Express, or Discover, credit card number, CVC code, expiration date, complete your summary, and check you have read the terms and conditions, and you're done. You can also sign up with PayPal by clicking that big blue button that says offer #1 PayPal. Okay, perfect. So if there's any questions, I'd be happy to answer them. If not, then I'll begin to, Jeff, if you want to come back on, I'll be happy to pass it over. If not, what I can do is I can go back into the live market, and then I can demonstrate, because I know I have 55 minutes, and it gives us about 5 minutes left to kind of show kind of high-level opportunities within the market. So however you want us to handle it, Jeff.
All right, whatever. We've got a few minutes. We can absolutely kind of talk a little bit about kind of the integration that we did with Metastock. If you do have questions, let us know in the chat. One of the things that I absolutely love about Serge and the kind of the products that he has is everything that's kind of included with that. So at $9.97 for 12 months, that's about $99 a month, less than that, right? So go ahead and get that. You can go to steadytradersecrets.com/year. And Josh, that's really all I've got, unless I don't see a lot of questions coming in. Here's some common questions that we get. Does it work with like futures and Forex?
Yeah, so this great question. So this was specifically designed for the SPY and the QQQ. And so Serge has been doing this for years and years and years. And so he built it for those indexes. However, those indexes are pretty universal. So he views it as if it's a volatility time, you can absolutely use options for it. Serge also does a really great job with vertical spreads. And then I really enjoy futures myself. And this works, what we demonstrated today is on the futures market. So this last week, there was 14 opportunities, and half won and half lost. But because the winners are 2 times the physical losers, or the rewards are 2 times the risk, mathematically it worked out pretty well. But the key here is we want to trade in the direction of the trend. There's a lot of grace with this. Some strategies are designed where you got to win 70% of the trades for it to really be fruitful. This one, I like it because mathematically you just need to win half your trades, and as long as you win half your trades and you're disciplined with a stop and limit, you're in pretty good shape.
Cool. The other thing that I would kind of like to point out is, like, I'm really happy that we brought it on Metastock. I like the way that it's kind of brought in Metastock. So now for the first time ever, you can do scanning for the full market. If you want to test it, you can test it. It does have the ability to go in and test either the built-in systems. There's the short-term method. There's also a day trading method. And in addition to that, it's got an optimized tester in there. So if you want to go in there and test different lengths, different calculation methods, different profit targets, you can really kind of get under the hood and adjust it. And so I really like the way it was initially coded, and it kind of gave me some inspiration for the design. But also another advantage of being able to use it now is you can use it in any market that you want. Since it has a tester, you can test it in any market that you want. If you want to use it over in London, if you're joining us from over the pond, or India, all that kind of stuff, it's available. It's all part of the data feed with Metastock. So I think that's all I wanted to add to it.
Perfect. Yeah, and just want to give a big thank you, Jeff, thank you for having us on. Thank you for the opportunity to speak to your group. I think Metastock is a phenomenal company, phenomenal organization, and I really, truly love how you guys put the customers first, the customer needs first. And thank you so much for having us on with your event. It's been a huge honor.
Cool. If you want to check that out, guys, I'd recommend it. It looks great. SteadyTraderSecrets.com/year. You can click on the button you can click on the link in the chat, and you can do that in YouTube as well. We've got them in both places. Let us know if you have questions. Thank you again, Josh, for joining us. I appreciate it.
Absolutely. Thank you, Jeff.
All right. Cool. Let me go ahead and do this. Go ahead and just kind of make some changes. Get back over here. There we go. Okay. And I'll go ahead and make myself the presenter here. Okay. And there's a few buttons that I have to push to make everything work. So I'm in the process of pushing buttons and everything like that. You should be able to see the screen. Again, very, very much appreciate Josh for coming in, talking about that, showing it to us. Brand new for Metastock anyway. They've been doing it for a while. Great system. It was very, very fun to build. So I do want to say, as you can see, thank you to AAII, one of the sponsors of our event. The one that I'm going to highlight this time, AAII has been a great sponsor of us. If you've heard about the AAII, they're a nonprofit. If you haven't, either way, I guess they are a nonprofit. They've been doing nonprofit work with the American Association of Individual Investors, I think, since the 70s. So it's a very well-established, well-respected, well-reputed organization. You can find more about them about AAII.com. They do all kinds of stuff like market analysis, market research. They do, if you've ever heard of the AAII Investor Sentiment Survey, they do. They also have a fairly active investor division that they do. And Ray came in yesterday, showed the methods that he's been working on around volume and volume work. Very, very interesting. So if you want to check out AAII, I'd encourage you to do that. Go to AAII.com. And of course, we are Metastock. Metastock, we're going to basically remind you right now that it's the best software in its category for 31 years in a row. It allows you to do scanning, testing, forecasting. Kelly did a really good job of showing kind of the system tester a little bit earlier. I've told you I like scanning all the time because I love just running my scan and looking at the stocks that have an opportunity. It allows me to ignore so much stuff in the market that just is noise, right? And just focus on those opportunities that exist. So what we're doing here today is we're going to offer you what we call an extended trial to Metastock. You can get Metastock. You can get, if you buy 1 month, we'll give you the second and the third month. Now I'm going to do the same thing I did just a minute ago for the prizes. If you'll say, hey, I'm here in the chat, either in YouTube or in GoToWebinar, I'm going to go ahead and give you the prize. Now, you might want to know what the price is. So I'm going to tell you that. I'm going to give you a few minutes to start typing. I know there's a little bit of a delay in YouTube, but what the prize is going to be this time is it's going to be Metastock. So we're going to give you 3 months of our award-winning Metastock program. It'll allow you to scan the markets. It'll allow you to test trading ideas. It'll allow you to forecast probable price movements. Did I mention that it's won 31 years in a row, including this year, the best software in its price category? We're going to give you that. We're also going to give you our news platform that comes with Metastock Real-Time, or you subscribe to it when you subscribe to Metastock Real-Time, was developed at the cost of over $1 billion. It covers just about any market on Earth, has thousands of reporters and hundreds of news bureaus worldwide. It is powered by Reuters News, and we also are going to offer 3 months of that. In addition, we're going to go ahead and give you what we call our white glove installation support. And with that, what we're going to do is we're going to have somebody give you a call. We do this for every new customer. We'll set up an appointment. We'll show you the program. We'll kind of give you an idea. We'll answer all the questions you have. We're going to give you a program called Unleash the Power of Metastock, because Metastock is a toolbox. It's going to allow you to, test and scan. And there are tons of tools. This isn't a program that we developed a couple years ago. This is a program that has stuff everywhere. And so we want you to use it. We want you to be an ongoing customer for Metastock. We're going to give you a training video that's going to walk you through how to do like testing and scanning and some of our favorite systems that are in the program. We're going to give that to you as well. And then I'm also going to give you our most popular add-on, 3 months of it. Our most popular subscription add-on It's called Rahul Mohinder Oscillator, the ATM product. We'll give that to you as well. So we do have a couple of I'm here's in the chats. So I'm going to go ahead and pick one of you. You guys are going to win a prize. And here we go. Metastock, you can't win. Actually, there we go. All right, JJ. J-Joe, congratulations. You are the winner. Okay. So I should have some information from you. I'm going to go ahead and kind of get you set up, get everything sent over to you, and we'll go ahead and get that in the thing. So there you go. Profit Club, it's good to see you. Just a little. All right. Our final speaker of today is Mark Sebastian. Mark is a friend of mine. And I got an email. One of the things that I was like, I kind of was looking at my list. I'm like, I haven't had Mark come in and talk to us for a while. And it's been a minute. And, I was like, I sent out a message. I said, hey, Mark, we do this conference. I'd love to have you because I really like the ideas that you like to share about options. Will you come? And he agreed. So there we go. And we're going to go ahead and have you do it. Georgios, Metastock does not work on an Android tablet. The CAT scanning, the testing, the forecasting is just not something that we can do. It's not an HTML product. It's just not something that just, it's like comparing Paint to Photoshop, I guess. It's just not something that works on an Android tablet, but I appreciate the question. I would recommend that you run it on a Windows laptop. So, Mark, it's great to have you in here. Thank you for agreeing to come in. Let's go ahead and get you started. How are you doing?
Good. It's good to see you. I'm trying to get my webcam to turn on, and it's.
Okay. I can send you a webcam request. That should have done it.
Oh, it's saying I'm using it right now, so I'm trying to figure out what program is using it.
Were you recording videos earlier?
I probably was.
That might be it.
All right, give me 1 second here. We'll get this figured out. If not, then we can still figure this out. How are you doing, Jeff? It's good to see you, man.
It's good to see you. I'm doing very well.
I'm happy to be here. I haven't seen you face to face in a while either. We got to change that.
Yeah. You know what? I'm just getting more silver fox is the way I like to term it, in the best possible light.
All right. Well, it doesn't look like it wants to. It doesn't look like it wants to play ball right now.
Okay, no problem.
Jeff,
but that's all right.
I'm sorry, Jeff.
We'll just do.
You, Greg. What's up?
In addition to his camera not working, I can't tell if you can hear it, but there's quite I don't know if it's coming from you, but there's quite a lot of reverb. What am I trying to say? Echo from Mark's voice. So
here, let me turn down my gain a little bit. Is that better?
That sounds perfect. Maybe it was coming back from Jeff's. I don't know if Jeff's got his monitor speakers on, but anyway, it sounds fine now. Thank you.
Okay.
Yeah, sounds good to me.
Then let's.
I don't see your screen yet, though. They should have asked you if you wanted to share your screen.
Oh, I'm going to share my screen here. Don't worry.
Okay.
Oh, you know what? It's not. I do need no one can see. You can click on. Yeah, it's not letting me share.
Oh, Jeff, you sent that to me.
Yeah,
I got the show my screen invitation.
We've been here for a minute. Kathleen says she can hear you fine.
For Jeff and I to catch up and chat. Good to see everybody. Webcam not working, but you know what? Nobody wants to see my ugly face anyway. Jeff, thanks for having me. I love coming to Metastock. I love the audience. I love working with Jeff. The tools that he can create. It's just an endless bounty. And one of these days, Jeff, we're gonna find a way to build something that's gonna be really, really freaking sweet. And I can't wait to do that with you.
I'm all ears.
I know. Absolutely. So today I want to dig into some education. I want to talk about really the state of the market and where we are and what's been happening. Why this market is really not like anything we've seen in the past. and kind of what's next. So today we're going to talk about NVIDIA. That is, the stock. We're going to talk about, how we've set up some winning trades in the past, where NVIDIA is going to go from here. This could be very NVIDIA centric, but don't worry, we're going to show you how this influences the whole market, because we're going to get into where the market goes from here. We're talking about AI and algos and their influence on the overall market. And I'm going to talk to you about how pro traders trade earnings. And then I'm going to hopefully share with you a few other fun little tricks. Let me tell you about myself. I am Mark Sebastian. I am coming to you live from Austin, Texas. I'm sure you can tell by my thick Southern accent that I'm born and bred in Texas. No, that's not true. I was in Chicago for 40 of my 45 years I've been around. I was a market maker first in New York on the American Stock Exchange, and then I moved back home to Chicago and worked on the SIBO. I managed some money on the side, and I get pretty well interviewed. I'm kind of famously Kramer's VIX expert. So when he has a question about VIX, he'll shoot me an email and say, "What's up with this?" And if you want to know what his email looks like, one, he's one of those people that puts the entire email in the subject line. You know what I'm talking about here, folks? When you get an email from like your dad and the entire email is in the subject. And when he doesn't do that, it's like Comic Sans 25, 30, it's like giant font and like maybe 8 words. But anyway, I'm here to talk to you. I've been trading options for going on 24 years now, and I've been in markets for a plenty long, a little bit before that as well. But my bread and butter is the derivative market. So before I begin in detail, I do have to tell you that what you're about to see is for education and informational purposes only. It's not investment, tax, or legal advice. If you see something and you take action, you do so at your own risk. NVIDIA, it is the stock. It is the stock of stocks. It has basically pulled the entire market up by itself. One of the most impressive runs that we've seen in the last year. It is up approximately 270%. Think about that. A year ago, this company was worth about $350–400 billion, and now it's worth 1.8. It is just an absolute juggernaut over the last 12 months, most of which has occurred in the last 6 months. So I don't know how many of you really know the history of NVIDIA. So it is, they like to say they're the world's engine for AI. Currently they are. They were founded in 1993 and were the leader in GPUs, graphic processing units. But back then, GPUs were only for video games. So if you were playing PlayStation or Super Nintendo or the Sega Saturn or something along those lines, that was where those chips were being used. They were not being used for all these wide decisions. Then in 2006, they made a pivotal decision, a really important decision to allow software developers to play with the GPUs. And this is where the company really took off. It opened the door for diversification. Now, the first time NVIDIA truly blew up was with crypto mining. Crypto miners figured out that GPUs are really good for managing and mining crypto. And so the stock soared. It passed Intel in 2020. Then we had this ChatGPT hit, and people realized AI needs GPUs. Frankly, trading is really good if you have a GPU. My trading computer is a gaming computer, if you want to know. Every company is trying for right now for that slice of the AI pie. And right now, you need NVIDIA. Last June, it joined the $1 trillion club. And at the rate it's going, it may join the $2 trillion club. Here's the last earnings. You can see what's amazing is that the stock rallied $100. Their earnings were so good that their price earnings ratio, which had been about 65, didn't change. So the stock soared. That's how much the earnings blew up. And on a forward multiple based on their projections, the multiples is somewhat reasonable if you can see where their projections are going. So this is the big question everybody wants to know. All right. Will the success last? Well, Elon Musk said it right now. GPUs are considerably harder to get than drugs. Within a few years, this is the big piece though. Within a few years, they're going to have considerable competition in the GPU game. Apple, Intel, AMD, Qualcomm probably getting into it. Everybody is stepping into the GPU business. And when they figure out, all right, there's an old saying, and this was something that I first heard from a commodity trader that I officed with named Jack Scoville. And the solution to high prices is high prices. The solution to high margins is high margins. So here is my question. Anybody here a farmer? Anybody here a farmer? All right. So in 2000 and I want to say around 2000 and let's see, Mark was born by then. So I want to say it was about 2010. Corn prices and soy prices blew up. All right, notably corn. Corn got way over $7 a bushel. So what did farmers do when they saw the price of corn was over $4 a bushel? What happens? What did farmers go ahead and do the next planting season? You're darn right. They planted corn. And oil, similar scenario, right? Oil prices in 2008 got to 145. Two things happened. There was a ton of exploration in oil. So lots of oil wells opened up, merged with the economy kind of collapsing. And within a year, oil was down about $40 a barrel. I think it bottomed out at about 26. So it's going to take a little while longer because the fabrication and the foundry business is not nearly as nimble as farmers planting corn. But there will be competition coming from Apple, coming from Intel, coming from AMD in the GPU business. When that happens, prices will fall, margins will fall, and we could even theoretically see a scenario where the market gets flooded with GPUs. Why? Well, right now, we're in an interesting spot in AI. A spot where very few people, everybody is into it, and very few people are making money off of it. Very few people are making money off of it. And that, I think, is, in my opinion, what is so interesting. With all this AI, there will be winners. But what if a bunch of people can't figure out how to be profitable with artificial intelligence. What happens when if all these GPUs come online and the future demand for artificial intelligence is 70% of what we thought it would be 3 years from now, 4 years from now, 5 years from now? Even at 100% of what we think it will be years from now, with the amount of people coming online, there's going to be some margin reduction. I mean, the most recent example is Tesla, right? Tesla was the lone ranger in EV for a very long time. Now look around. You've got 4 Chinese EVs. You got GM. You've got Ford. You've got European automakers stepping in there. There's pricing pressure on these vehicles, and margins are tightening. And you add that up with the EV market not being what they thought it would be in 2024. So near term, I don't see a lot of risk for NVIDIA, but within the 12 to 18 month period, when Intel is producing chips and AMD is producing chips and Apple's in there, if there's going to be competition, and if the mass adoption isn't what we think it is, if the mass adoption isn't what we think it is, then you're going to see some problems in this industry. So the point is, right now they have all the power, and their margins are still ridiculous. 75%. 75% margins do not happen. And that will tighten up. But right now, nobody sees that. Nobody sees that in the future. And it is fruitless to sit here to try and short Tesla. You know, there's some, you can do it tactically for short periods of time, but putting on a giant short position, betting against Tesla, like a big short, that is an unmitigated disaster waiting to happen for any hedge fund manager that tries to do it. You need to actually see it. All right, you need to actually see it in order to the selling begin, the margins start to shrink. When they have a quarter where margins are starting to fall, that is your signal to get out of Dodge. But the thing to remember is that the market can stay illogical longer than you can stay solvent. So you may see that 12 to 24 month picture, but all right, but that doesn't mean the market is going to allow you that scenario to play out until it starts to play out. So what does this mean for market? NVIDIA is pulling the triple Qs higher. The triple Q is pulling the market higher. All right, upside volatility is so strong right now that the market can't come down. And the way I can see this is, and this doesn't happen, and is that call prices and put prices are completely out of whack. Normally, puts on the Qs, puts on the S&P 500, puts on a stock like NVIDIA cost a lot of money relative to the cost of out-of-the-money calls. Right now, that relationship is inverted. Calls are more expensive than puts. All right, but the reason why that happens, that upside volatility, the reason why that call gets bid is for two reasons. One, stock replacement. I'm worried that Tesla is topping out. What do? I sell Tesla, I buy out of the money calls. Two, call chasing. I've got FOMO. I don't want to buy the stock, so what do? I buy calls. So while we're seeing this, as a trader, we have to lean bullish until the market turns around. It is impossible to short this market for more than a day or two. Every time you think the market is going to crack, it gets bought right now because the buy the dip is on. And to put things in perspective, take a look. Here's NVIDIA. Here is SPY. Same time period. You'll notice how tightly the two of them are correlating. Now, let's talk about earnings. We just got out of earnings season, and people are now kind of come out of it looking back and saying, well, what could I have done better? What could I have done worse? All right. And here's the lesson from earnings is that they're nonsensical. So my wife runs a website called bigblondehair.com, and it is a fashion website. She has the ability to basically see what people are buying. A couple years back, she tells me, boy, I'm selling a ton of Revolve clothing, more than I've sold. So I look at Revolve and I say, wow, that's an interesting one. And so I decided to buy a few shares into their earnings because I'm like, well, you know, if Lauren's seeing these kind of sales, the stock is going to go to the moon. Well, here's the thing. It was priced in. The stock dropped. Similar story. Somebody I work with closely is a big media buyer. And about a year ago, everybody's putting everything they can into Facebook ads, Instagram ads. He went and bought a bunch of stock because he's like, if I'm spending this much on Facebook, the earnings are going to be spectacular. Well, guess what? The stock dropped. It's priced in. So what I'm going to tell you is stop doing earnings plays. Stop doing earnings plays. They are worse than a coin flip. You're saying, Mark, how are they worse than a coin flip? Well, earnings themselves are 50-50. But to play the earnings, if you're going to buy a call or going to buy a put, you're literally paying for that coin flip. I buy a call in IBM, or I buy a call in Apple because I think Apple's going to go up. If Apple and I pay $5, Apple goes up, I might win. What if Apple only goes up $3? I lose. Apple goes down, I lose. So unless Apple really goes parabolic on a move, I'm not going to win on earnings. Stop trading them. So what we say is trade into and out of earnings, not during earnings. There's a ton of opportunity pre-earnings to play stocks and play options. Close the position, let the reaction happen, and you will see a ton of opportunity coming out of earnings. So basically, going to earnings and trading a call or a put, or really a lot of different spreads, is like paying me 60 cents to flip a coin, and if it lands on heads, you win $1. Anybody here want to do that bet with me? Anybody? You pay me 60 cents, and if it lands on, we'll flip a coin. If it lands on heads, you get $1. Who wants to do that with me? Right? The answer is no. That is a terrible proposition. That is a loser. All right, so how do you play these mega cap, ultra cap? I actually am creating a new term. Jeff, you can use this if you want. I've created a new term. I call it the ultra cap. So there's large caps. Yeah, you're welcome. Large caps are stocks that are worth, more than $50, $60 billion. Mega caps are going to be names worth up over $500 billion. There's very few of them. About 10. Now we've got the ultra cap. And ultra cap is not a stock that's worth $1 trillion. That could be a definition. I think an ultra cap is a mega cap that has a story. And right now, there is a story to NVIDIA. I don't think anybody would argue that. And when there's a story, you want to trade it. The issue is that a lot of these stocks are too expensive to trade. I want to play in Microsoft. Microsoft is $400. I want to play in Meta. Meta is $450. I want to play in NVIDIA, $800. And, these stocks are, the nice thing, though, is that we've worked on kind of developing a way to start trading these. And what we're noticing is that with all the volume, right, stock market volumes at an all-time high, option volumes are breaking records, especially in ultra, mega, and large cap stocks. It really is allowed for AI and really what we would call an algorithm, which is what traders, just the old, less sexy version of artificial intelligence. Artificial intelligence in the trading community has been around forever. It's called an algorithm. All right. But these algos actually have started putting stocks into trading zones. Now, in that trading zone, there's a slow meander higher or a fast meander higher. But within that move, that upward motion that we've had the last year, stocks have been pretty good at staying within their zone. So while they're riding that meander higher, they'll get overbought. The algos will see that, start selling it, and then they get oversold. The algos see it, they start buying it. I'll actually walk you through the process of how this stuff. Market structure is something that you have to know as a market maker and as a money manager. And this is really kind of what this is built on. All right. So what you want to do with these names is don't get short, don't get long and make it a massive piece of your portfolio, but you can tactically trade these zones and make some money. So what stocks have trade zones? And I'm going to show you what a trade zone looks like here in a second. The ultras, the mega caps have predictable trade zones because they have so much volume. Large caps, they have predictable trade zones as well. Some of the small caps typically don't. Micro caps don't either. The mid caps don't. Indexes and ETFs, the active ones do. So like the S&P 500, the NASDAQ, the Russell 2000, they do have trading zones. They basically act like a mega cap stock. Now, what is a trade zone? All right. AI algos are buying and selling, causing powerful volume that forces mega and large cap stocks to move in a predictable pattern within a defined range. That range is our trade zone. And that trade zone is kind of initially created by the 200-day moving average, the 50-day, the 21-day moving average, and then trend lines. And why do they do this? Again, they get pushed around by algos. So I'll walk you through the full process, but as a stock is being overbought, the algos start buying it. And then as it enters back into its zone, they buy it up. As it gets over the middle of the zone, they'll let that thing get stretched. And then just as a lot of the retail public starts to get frothy and buy, that's when the algorithms will step in and start selling and drive it right back down. It's extremely predictable. And this is our advantage, all right, this predictable pattern. But the problem with these predictable patterns is they can take a few days to play out. And this is why we spent a lot of time working on how to take advantage of these zones. So here's what you don't want to do. You don't want to buy an ultra cap stock, right? I buy 100 shares of NVIDIA. How much cash am I tying up? NVIDIA is 785 bucks. I buy 100 shares, there goes 78,000 bucks. Unless I've got $1 million investment portfolio, I'm officially overinvested. And do I really want 10 shares of NVIDIA in my portfolio? I buy 10 shares. I get $7,800 worth of NVIDIA, but what am I controlling? All right. We don't want to buy calls in these names because they're so darn expensive. Leading into earnings, a call in NVIDIA was like 50 bucks. Even now, if I wanted to pull up a call price in NVIDIA, I'm going to pull up the option trader function on Metastock. And, you know, let's just go to something reasonable. Let's go to the April, you know, just a slightly out of the money call in April. The April 8, the April. Let's see, where are we here? You know, the April 785 call is 50 bucks, $55. So one call to control 100 shares is $5,500. Put about the same price. These are too expensive for us to trade reasonably unless we're trading a multi-million-dollar portfolio. All right? And you don't want to trade around binary events. Because again, the market can be illogical for longer than we can be liquid. And this is why I developed a zone trade. And zone trades are our way of taking advantage of these trading zones, getting into these ultra and mega cap stocks that cost $100, $200, $300, $400, $500, or up to $1,000 or more at 99 to 98, 99% off the price, while we're able to control several hundred shares of the stock. So when I developed this system, right, we only want to trade mega and large caps. We want to define our trade zone. We want to find the top, the middle, and the bottom. I want to wait till they're at the edge of their trade zone. I want to place a trade, and then as the stock reverts back, I'm going to take my dollars. So consider this, all right? Trading earnings versus using trade zones. All right, you're literally getting 4 days out of the year to trade those earnings. It's a total crapshoot. You're forced to play directional calls and puts that lose value over time. And I think the risk reward stinks. If I risk $4,500 to make $3,000, I'm basically risking $1 to make 67 cents. I don't like those types of odds. Trade zones, you can trade just about any time except earnings. They're traded around a predictable pattern based on algos, buying and selling. All right, we can set up a precise zone trade that gains value over time with a defined risk, and the risk reward is always positive. Would you rather risk $4,500 to make $3,000 or risk $500 to make $1,500? Which trade do you prefer? You tell me. Right. I'd rather get 3-1 than 2-3 any day of the week. So let's look at a few of these trades and their success. All right. And actually, before I do that, I actually want to show you how a stock can trade in these zones. And I'm going to pull up our chart on Apple. And this is a 3-month chart. And I'm going to walk you through what the algos are doing. All right, so we start out, this orange line is my 21-day moving average. The yellow is my 50, and the blue is my 200-day moving average. All right, so we start out, we're overbought. All right, algos are watching this thing get overbought. As it starts to drop, the algos get involved. So they are getting short. All right. They probably get short. They probably don't trade through earnings, but when the stock drops, they're getting back in short, riding it down. Can everyone see that, or should I switch to like yellow? All right, so they start selling, probably cover on earnings. Earnings come in, stock gets sold off. Trades to the 50, trades below the 50, they're starting to short again. It gets down to the 200. They're buying. They buy up, probably selling some on the way up as it rallies. Stock takes a dip, they go long again. Stock goes straight up. As we're getting up here, they're selling and getting short. They then ride it back down. All right. They're getting along here. Ride it up. Hits right here. Ride it back down. And right now, as we speak, algos are accumulating positions in Apple. All right. When it truly busts over the 200, they're going to go super. You watch how quickly, when this thing gaps over the 200, how quickly Apple is going to rally. But it's literally like clockwork, and you can see it on your screen. Where's my presentation? All right. There we go. So let's look at some trades that we've done. All right. Here's one we did in IWM. Opened on November 22nd. IWM had moved out of its trading zone. It's trading 178.13. We sit on it, sit on it, sit on it. It slowly moves into its trade zone. I sell it on December 6th. I make 130% profit. All right. Now, the key is when it gets sold below its zone, that's when I start accumulating long. As it enters, I'm starting to accumulate short. Could I have held longer? Could I have held longer? Sure. My take, 130%. I'm happy. Couple of weeks, don't mind if I do. Amazon, similar trade, right? It got below its trading zone. And you'll notice that these are slow burning. I don't worry about them. I don't look at them very much. I put the trade on August 31st. Amazon's 137. I set up the zone between 140 and 175. And I sat back and waited. Amazon just kind of floundered around, slowly rallied. And you're saying, Mark, why did you close it when you're only up 36%? We were running into earnings. So I took my 36% and left. All right, now here's another one. This was Apple. Apple actually had gotten out of its trade zone at this time, because remember I said trade zones move with the market. At this time, its zone was between 174 and 154. I opened the trade as Apple was starting to re-enter from overboughtness into its zone. I bought on September 14th. I kicked back, sat back, waited, sold out on the 29th, 46%. And here's one, XHB. I told you ETFs that are active will trade in zones. I set the trade up. XHB was overbought at the time, trading 76.10. Its zone was between 76 and 65. Over the course of a few weeks, about a month, it slowly drops. I unwind when it kind of hits the middle of its zone. I take 91%. If I'd have waited, could I have taken more? Yes. I'm not in a big hurry. 91%, I'll take it. Here's my current trade zone watch list, stocks that are in the zone. I actually have a zone trade on in Apple, set up bullish. Tesla looks like it is currently at the very edge of its zone and is about to re-enter it. J&J, Microsoft, NVIDIA. I actually have a bear zone trade on in NVIDIA right now. You're saying, Mike, I thought you said not to short it. I'm not. I would never short NVIDIA as a stock. But if I can put on a zone trade that just takes advantage of a little bit of mean reversion in NVIDIA, a move toward its original zone prior to earnings, then, and I can get risk reward of about 8-1. I'll do that. Not 6.5 to 1. So yeah, there are ways to put on shorts on these names that look like that are in crazy town. Sit back, wait, not worry about it, and let the trade potentially make you some money. Google, JP Morgan. Who here noticed that JP Morgan was at an all-time high on Friday? How many people noticed that? AMD, Amgen, and ExxonMobil. Those are kind of the 10 names that I are really watching closely for a zone trade. I'm probably going to pull the trigger on, like I said, I've got one on an Apple. I've got a bear one on NVIDIA. And I'm probably about to pull the trigger on Tesla and Amgen. So let me kind of walk you through what we've just kind of walked through. One, we're in the mix of a mega and ultra cap trend, and it's a huge dollar opportunity. It's not really practical for most people to invest, trade in ultra, mega, and even most large cap stocks because of the economics. So I needed a solution that was going to be cost effective to trade these. All right, I wanted a trade that anyone can do from anywhere and at any time. A trade that doesn't require someone to be handcuffed to their computer or to their trading screens. I wanted to create something that has consistent profits, and I have to make sure anyone is comfortable executing the system. So I want something that anyone can do that has really good risk reward and is cost effective, and anybody can manage. Something that you can put on and leave for the day. And just kind of look at the price. What I love about this trading style is literally I can look at the stock market with this part of my portfolio like once a day. It takes me 5 minutes to go over everything and I'm done. And this is why we developed my trade zone system. And I'm going to tell you what we've been doing and what it's looked like since we launched. But on a weekly basis, you're going to get a minimum of one zone trade. It'll be in a large, mega, or ultra cap stock. It'll have predictable patterns. all right, and predictable returns. The risk reward ratio will be a minimum of 2 to 1, typically 3, 4, or 5 to 1. So you're laying down 200 to make 10 to make 8. You're laying down 100 to make 5. With NVIDIA, I'm laying down $800 to make 50, to make 40, 42. So and what I like about them is the way they're structured is that the longer these trades take to work, the more they can actually benefit you. They actually gain value over time as a stock sits. I'm going to send you instant alerts. And I'm not kidding you when I say this. And when we started working on this, and I started trading this about 6 months ago, I haven't lost a trade yet. And as we were going to launch this thing, I almost wanted to lose because it just sounded unbelievable. But I haven't lost a trade yet. You're going to get my Zone Master Series. This is a 5.5-part system where I'm going to teach you how to master the trading zone with me. My goal, because there's more than 1 or 2 zone trades to develop a week, and these are slow burning, easy to execute. If I can teach you how to spot these and execute them, you're going to be able to put on 1 or 2 a day if you want. And with the risk reward structure of these trades, they may be the only trade that you ever want to do. And if you're saying, Mark, I use X and Y system, the structure of the trade that I'm going to teach you in developing this zone trade is going to be something you're going to want to apply to every piece of your trading. But I'm going to help you. I'm going to show you how to select expirations, how to select your strikes, when to enter, when to avoid, and I'm going to give you the step-by-step piece of how to do it. Now, here's kind of the kicker. I want everybody comfortable with trading this. All right. The most important thing for you to do when you join us is to make your first trade. So what I'm willing to do is everybody that goes through the masterclass, if you still can't kind of figure out, can't put on a trade, or you don't feel comfortable putting on the trade, your first trade, I will meet with you one-on-one. And you're saying, Mark, that seems nice. It is nice. Do you know how much I bill on consulting fees? A pretty large asset management firm, I did a consulting job for them a few months back, and I billed them at over $500 an hour. And they happily paid it. I was reviewing a hedging program for them. So what I'm going to do is work with you to get your first trade done right. And so what we've got here is we don't normally offer a monthly, but I'm willing to offer this today. We're going to offer a 1-month access to Trade Zone for just $199, or you can do the quarterly for $599. And again, you're getting a minimum of 1, more like 1.5, 2 trades a week. You're getting this special masterclass where we're going to teach you not just how to make money with me, but how to make money on your own. And we're going to teach you to, and if you're still uncomfortable, I will sit down with you and walk you through the process. And folks, on the 8 trades we were beta testing with this system, the average win rate was 56%. If you did all 8 trades, you would have made $5,223. I currently expect the one I'm in now to make us some money as well. All right. So I'm really looking forward to having you guys join us. And I'm happy to take any questions you have about NVIDIA, about the market structure, about how algos work, or about TradeZone itself. I'm happy to answer anything you any questions you might have. So ask away.
We have a question in YouTube, Mark.
Okay.
Scotty B wants to know, which direction are you planning to trade Tesla?
Which direction am I planning to trade Tesla? It's setting up bullish. I'm happy to. I will tell you that. But one of the keys here is I'm not going to go out and sling a call. I'm not going to buy the stock. If my thesis, one of the reasons why I built these zone trades is that over time they actually gain value. They still benefit from the direction. It allows me to sit back and wait for Tesla to move. But I do think Tesla is getting ready to break out here. Looks like it wants to go to toward, the zone that it's set up in has a median somewhere in between 210 and 215.
Cool. If you have any other questions for Mark, let us know. We have just a few minutes to kind of answer it. Mark, based on kind of like what you're showing, I think we could make some really cool scanners for that. Kathleen says, we had our first masterclass with Mark today. It was very informative, and we put in our first trade last week. So
yes, we did.
That's Kathleen.
Thanks, Kathleen. Is this a call spread or a credit spread type trade? No. Believe it or not, this trade is a debit that has positive decay.
Cool. Daniel on YouTube wants to say, what are the three parts of the trade zone? I think those were just the moving averages you mentioned.
Yeah, you got the bot, you got where it's oversold, you've got its kind of center price, and you've got where it's overbought. And Jeff, you know about how algos work. They literally prey on those areas. But they stretch the market as hard as they can, and then they rip it right back down. Take a look at what happened with SMCI, right? That got so overstretched. What entails a zone? Well, it's really kind of built around how the stock is moving and what the major moving averages are doing, and then support and resistance around it. But if you look at Apple, look at how this sucker obeyed the 200-day moving average. And really the 21-day. So for Apple, upside, the near-term upside I'm looking at is these two levels. If it gets above the 21-day, I am. If it gets above the 50, I'm out. And if you join it and you don't like it, I'm happy to give you your money back. By the way, I don't want you here if you don't want to be here.
I want you here either way, Mark. That was great.
What? Thank you. 2 weeks. Yeah, 2 weeks, no questions asked. You try it, you don't like it, we'll give you your money back.
Cool. That's awesome. I think that's, can we put up the offer site again? Optionpit.com/tradezone for anybody that wants to take advantage of that. And yes. I just say I really like the class. You did a good job today, Mark.
Well, thank you. I appreciate it. I want to educate people and really give people an understanding of market structure and what they're actually looking at. Because, there are less and less people pressing buttons, and more, the market is almost like being an airplane pilot. The airplane pilot is really now just monitoring a bunch of controls and making sure that things don't and monitoring things, pressing some buttons, making things, making adjustments here and there. But the airplane's doing a lot of the work, and that's really the way algos work.
Now, what markets would you? Another question we get a lot is what markets does this work well for? So obviously you're looking at options. If somebody's watching us we get a lot of international customers, for example, or people that might be interested in Forex or futures or coins or whatever, because there's just so much data that's in Metastock. What does this work well with?
Yeah, I mean, when they launched the Bitcoin ETFs, this is going to be very applicable to that. Oil is interesting because there's so many individual events, and it's so macro that you can trade this way on it, but it's a little choppier. It really has application to like the DAX or the FTSE, the major stocks that are overseas. It's going to work perfectly for that. Chinese equities like Alibaba, that like the giant names in China, it'll work in those. And any international market that is equity based, 100% of the time. Names, some of the commodity markets, because of their basic structure, it can be a little difficult. But crypto, oh yeah, 100%, 100%. The only issue is right now with options. You really only have two ways to trade crypto options. Well, three. One, you can trade BITO, but that's not really very liquid, and that's the futures. Two, you can trade crypto directly on LedgerX in the United States, and then really your other option is Deribit, and you have to park money in the Netherlands, which I don't think a lot of people want to do. But there is a ton of application.
All right. Also from YouTube, Scotty says, thanks for answering my question. I enjoyed the lessons on NVIDIA, and I enjoyed learning about how you think about the market.
Well, thank you. I appreciate that.
So, in any case,
waste people's time.
Yeah, no, it was, it was great. I thought it was great too, but so did Scotty.
Thank you.
I think that's where we'll leave it today. Mark, thanks for finishing up for us today.
Thank you for being flexible with me. I really appreciate it. And thank you everyone for having me.
Definitely. Optionpit.com/tradezone. Give it a go. Mark, I'm going to send you my calendar. Let's touch base next week based on what you showed today. I think we can make some pretty cool scanners. So well, let's talk about
that.
Yes. All right. Thanks, Mark.
All right. Thanks, Jeff.
All right. I'm going to go ahead and do this. There's a picture of Mark. Let me go ahead and do this also. And we'll just finish up today. I want to say, here. Let's do this the correct way. I want to say thank you to all of our sponsors, Stocks and Commodities Magazine. You should be able to see my screen. Let me know if there's any issues, Greg. If not, don't need to worry about it. AAII.com and CFT Association, and all the support. Like everybody that came here, gave us lessons. I feel like today and yesterday have been so good. So thank you to all the sponsors. I hope you learned something as well. I hope it was a good day for you. I hope you took some notes. I hope you learned a few things. We do have another great day coming up tomorrow. I have that somewhere. Where's that schedule for tomorrow? We're going to start with Rahul Mohinder. I showed his ATM system, one of the hidden gems of Metastock. I barely showed it, but he's going to come in and talk about some of the methodologies that he's used into trading. He's kicking us off tomorrow. After that, I can get through a few more minutes of talking. Jeff Tompkins, a hedge fund manager, trainer of thousands. He's going to come and talk about his slingshot method and how to use that. Then we'll have our very own Scott Brown come in. He's going to talk about our forecaster and our patented technology that can help you look at the market. Another good friend of mine, Dan Passerelli, is going to come and he's going to talk about his momentum system. He calls it the red-green knockout strategy. And then we're going to have Jody Samuels, Anne-Marie Bain, Ed Downs, Jerome Cossar. So another great schedule. A bunch of really, really good technicians coming in again tomorrow. I hope you enjoyed today. I hope you were able to make it to yesterday as well. If you missed anything, you can check out youtube.com/Metastock and miss any and watch them again if you want. If you haven't yet, I would encourage you to try out Metastock. It's hard to get a reputation like Metastock. It's been rated #1 31 years in a row. If you buy a month, we'll give you the second and third month for free. Our support team will help you with the questions you have. Such a great product to help you identify, scan for, find those trades. So visit us, metastock.com/promo. Scan the little QR code. Go to metastock.com/sales chat or give us a call, 800-882-3040. Big thanks to all of you for being here. Hope to see you again tomorrow. We'll give away more prizes. We'll learn more market theory and have another good day. So see you tomorrow. Thanks for coming, guys.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.